What's up, guys? Good morning. Good morning. Good morning. Hope everybody is doing well. Let me fix this real quick.
BPTA shares continuing to hit new highs, $6.39 now.
What's up? How's everybody doing today?
Almost 100%.
Are we waking up with regret or what?
What Bravo Papa Tango Hotel.
Well, today's a new day. Don't wake up and regret. Whatever you did yesterday, you can fix it today. Today's a new day. We don't worry about yesterday. I will say this. So, when we give out the morning analysis, guys, I need you guys to kind of listen to me and stuff. If you guys want to do this, I watched yesterday's live stream, just the first 15 minutes of it. Talked about the downside. Right? Talked about the downside. Talked about a possible hedge with Tesla. Possibly. Let's see here. Let me not crank this up so it blows our speakers out. And I did not mean to have that whatchamacallit play. If it works for you guys, that's cool. But I just want to let you guys, I just want to, and keep honestly, trading simple. I feel like a lot, that's a good indicator. Is what type of volume you have, but up at highs, leaders lead. Amazon, PNC, not bad. And this is a bad night to see if we can get a pop on it.
So we were just talking about how we thought
I haven't
that
really been watching it this week, and I don't want to deviate from. It doesn't matter really what these earnings come out. They're going to have to come out spectacular for the market to take it well. But the point is, if you go back and watch, AMD, right? I gave us, so anybody that followed me yesterday on that call, understanding that and I said that I was going to probably lose money. The trade idea was that if we did not sell off, what would then happen? So, today's a new day. Anyway, today's a new day. I'm not always going to be right, but yesterday, my biggest idea was AMD and pretty much semiconductors to the downside. So,
why would I use kayak to compare?
Anyway, let's get right into it. So I'm going to come up with my watch list. We'll go through. If you guys have any questions, please post them below. This is why I don't really come on here, because I feel like there is nobody. I know it's early, but this is why I think I may end up changing this, and for a few other reasons. There's a few other reasons behind why I might be making a change, unfortunately, but sometimes you got to do what you got to do. But anyway, I appreciate everybody. If you could take the time, hit the like button, subscribe. If you're not subscribed, you will not be in the giveaway. So we're gonna do 1,000. Once we get to 1,000 subscribers, I'm gonna be doing a giveaway, and I think you guys will really like it. I think you guys will be really surprised. They may do 5 people. So as long as you're subscribed and you've liked the streams, that's really all we ask. So let's go through some of these earnings real quick. Does this guy think that they reported? I guess market doesn't look TSM results so far. What do you mean? They don't come out for another.
What happened with the NCAA this year? The fact that you've got so many female basketball players who have.
Thank me later. No, don't thank me now. Just thank me later.
There's going to be endorsement heat around this, and then maybe that starts to bring others. And you can continue.
Was TSM supposed to be? Their earnings weren't until this afternoon, I thought. I guess he's just. Okay, so they posted the wrong information again. Are you kidding me, bro? Fucking Wall Street Bets. Leave it to Wall Street Bets. Unbelievable. Yeah. So TSM, I guess, reported earnings this morning. I thought TSM's earnings weren't until yesterday. Or not yesterday, but I didn't think they were until this afternoon. So let's dive in here. chip giant offers reassurance and a warning. The chip industry is recovering more slowly than expected from the inventory glut of 2023. That was the bad news from Taiwan Semiconductor Manufacturer, the world's largest chip. Company cut its forecast and overall market growth this year, excluding memory chips, 10% down for more than 10% 3 months ago. The U.S. listed shares fell roughly 2% in pre-market trading. Excuse me, I'm sorry. The standout reason for the downgrade was automotive trips. TSMC previously expected demand from the sector to increase this year, but it now expects a contraction instead. The company didn't give an explanation, but most likely one slowing growth in chip incentive electric vehicles. The good news, TSM investors, is that the company, despite often being seen as a chip industry bellwether, isn't the same as the market. Importantly, the company maintained its forecast that its own revenue will grow by more than 20% this year in dollar terms. Okay, so, wow. So they just came out, if you guys don't know this, TSM just came out a few days ago, last week, and said, you know, they were going to raise their, I think it was here, right around here somewhere, or it might have been over here. It was in one. It was probably that candle right there. It was probably this candle right there. Bang! When they came out and said, you know what they said. I need to delete all this stuff here. So I guess it's not perceived that well. It's not. Doesn't seem to be that bad. I guess I can leave this one. 7. The pricing in a 7. What did we move from the close? 137.
Letter J, Jacobs,
138.
environmental
34.
J.
So 37 would be 32. So this thing might have a few more dollars to go, guys. And that's funny. That's where that puts you right there at that 32. So I'm going to see if we can take Taiwan Semiconductors down. See if we can't get this thing down here. That's what it's pricing in right now. So that's that. Yes. Let me make sure everything is running good. All right, we're good. Sweet. Awesome. Even though YouTube won't help promote it, which is okay. You know. I did not know that they were reporting. I thought it was like this afternoon, not recently. All right, so what I'm going to do is I'm going to go through my plan real quick. I'm going to come up with a plan until we get people joining. If you guys have any questions,
please. A new report from tech giant Microsoft.
Throw your questions in the chat, your tickers. If you guys have any questions, throw them in the chat. Now. I'm going to get ready for
one Chief of Public Policy Officer,
the morning session
Director
here.
of Homeland Security is a cybersecurity and infrastructure security agency and ran U.S. cyber policy for Microsoft.
Yeah, that's
we should say now works for a competitor of sorts to Microsoft. Is that fair to say, Chris?
Yeah, absolutely. In the security segment. Yep.
In the security segment. So when you look at this report and you look at what needs to be done, how much of this is a private sector issue, which is companies like Microsoft need to change the way they are working, versus what you think the government is supposed to be doing?
Yeah, I think stepping back, there's been a couple reports recently on Russian, but also Chinese and Iranian influence. And it talks, these reports talk about both traditional media, social media, but also the increasing availability and impact of AI through information operations. You know, you got to give private sector credit, Microsoft, Google, and a handful of others that set up the tech.
Again, just give me 1 minute. I'm actually just going to go ahead and get... I did. Thank you. It really has. You know, I was a little upset with yesterday, but what are you going to do? You know, I mentioned this yesterday on Twitter. And And for anybody that's new here, welcome. Again, if you could hit that like button, subscribe. But other than that, you know, if you have any tickers, questions, please throw them in the chat. I've been doing this for over 10 years now. I mean, we've been spot on. We've been spot on with the analysis. Yesterday, you know, one of the top trade ideas was look for a pop right off the bell, short semiconductors from AMD to SMCI. I've been watching AMD for the past 4 days, like going into the week, was leaning, you know, wanted to see if we could break that wall, and it was just too much. And then it just, you know, the longer a stock sits there, there are a few things that will indicate, okay, you know, the time is now. It's not making any progress to the upside or downside. Today's probably going to be the day. You had NVIDIA, SMCI start to break out, and we said right off the bell, look for a pop. On that pop, get short. You know, if you were with us yesterday, that was the analysis. You know, and everything, again, is fully recorded. Tesla, we said, I think we said, what, 162? Look for a little pullback. Goldman Sachs, we identified the Dow would have been our leader there. And we were looking at Goldman Sachs for some upside around lunchtime, and that played out as well. I did take a... And that's what I was going to say, is that we've had such a good month that I ended up starting to do stupid shit like yesterday, where I felt like I didn't need to take off if the SPY held that call on AMD, right? We took profits on the downside, and I'm like, let me just go ahead and grab just a couple contracts. You know, pretty much it was less than my stop loss on a daily trade, right? So it can go to zero, and I mentioned that, and I said I will be losing money. I'm only doing this recognizing what the trade is. What is the trade? The trade was in case the S&Ps, or in case news comes out that Israel is not going to attack, I want to have, you know, some access to the upside. I'm going to, you know, it could go to zero, very small position, and we didn't get it. But guess what? You know, we made money on the downside. We've been turning this thing. We've been turning our accounts, at least for me personally. But that was the point, right? We have been having such a great week, or no, not week, but pretty much month, pretty much year. Just February for me was slow. It was a little over break even for the month of February, but I start putting on risks that I don't need to be putting on. But again, understanding what the trade is, putting it on small. So, anytime that headline does come across the wire, we're already in a position and we could capitalize from the volatility. And guys, remember, the 2-week volatility for the S&P is up. You're going to notice that premium is going to start going higher. All right. Premium already is, higher, but you're going to notice that I still think we have a little more to go. And this volatility started last week. This market's actually been moving really nicely. So Taiwan Semiconductors, again, it's a mixed bag here. Here is the earnings. I thought they were reporting tonight. So let me pull this up for us. What am I doing? So here we are. Okay, so EPS 138. That is a beat of $1.32 estimate. Sales 18.8 billion versus 18.3. That's a big beat. Now, why is it down? It's because of the guidance. And now 2 weeks ago they just came out and we were short TSM all last week. We said right off the bell we were doing the same thing, right? Pop right into that zone, we're getting short. Pop into the zone, we're getting short. Because it was not breaking out of this range here, right? All of these candles, we were short pretty much every day there. Just looking for $1, $1.50, $2, right? Understanding what the trade is. Look, every day, bang. I didn't call that out Monday or Tuesday, but look, boom. Pop into the area, take it down. Right off the bell, take it down. So that was on the what? That's again. This is all fully recorded. That was last week's ideas. So I guess so. 2 weeks ago, why do I keep doing that? 2 weeks ago, Taiwan Semiconductor came out and said that they were going to have. Oh my fucking god. that they're, they could expect, 20% revenue growth by the end of the year, which they said they're still holding on to that, right? As far as the 20%, they're referring to a dollar amount. So we'll see if that's the case. I suppose that this is not in line. What would that be? That would be, let's see, where were we? Estimate, let's see, sales 18.8, so 20% of 18.3. Maybe that is on track, and that's why it hasn't sold off further. But this was pricing in $7 yesterday, and you've almost done that. So you closed yesterday. What is that? You closed yesterday at, I think, just to see if there's a few dollars left. Now, if we're going to the downside, I want to take this to 132. You guys are hearing me say it now. 132 is the level I'd be looking for on Taiwan Semiconductor, if we can get that. Might not be until tomorrow. Yeah, so 138, or is that 139? It's pretty much, you might get like 132. I expect it to be down here. I would expect it to be right down there into this zone here today. 132, 133. My gosh. So, it wasn't bad, all right? It wasn't bad. They pretty much were talking about the reason it's down is because they were saying that, since, there's been this ramp up in semiconductors, that the demand is going to slow. Demand's going to slow. Pricing, that means pricing may pull back, as far as the competitiveness between all the companies. And we should have saw this out of ASML, because I told you guys ASML was Taiwan Semiconductor's biggest, even other ones. I don't know exactly, but I do know Taiwan Semiconductor uses ASML to make their processors, their CPUs, GPUs, whatever it is, their semiconductors. ASML is a big component on how they can, on the products that they are making today. That was the semiconductor video that I was wanting to watch with you guys at lunchtime last week, and I didn't really get a feedback on that if you guys wanted to watch it. But it was so informative. Like, I had no idea about a lot of the things on how they're made, what they're made of, and how, because of ASML, the Dutch company, how we have such fast processors, and now we actually have to come up with a new actual product for if you want to start going to the next level for AI and stuff. They're saying that we need to make like a new type of material. So let's go over the markets. It's time. It is time. All right, it is time. If you guys have questions, please post it below. If you have any tickers, please post them below. All right, the daily chart, we did break below this level yesterday, so we have to watch 502. All right, it's like 502.20 or so. It looks like we're just above it right now. Guys, I think we need a bounce back. I may try to. I don't want to get in front of this because there was just headline piece that came out just a minute ago that Iran just came out and said that they have places they're going to hit and that they're ready. So if Israel does do something, they have something ready to go. They're ready. They're pretty much throwing out a warning that if anything happens, they're going to be targeting places this, that, the third. Well, you said that last time and it didn't go so well. I don't want to edge on violence or anything, but that's the case. All right, that is the case. So right now we'll watch this level. The next level that I think we need to get to is 507. Okay, 507. But if we stay here in this area, we have to understand that we may not get there, and this thing just may fall out of bed on us. All right, there may be, again, I said this a while ago that you guys got to pay attention. The market's telling us all something right now. All right, market's telling us all something right now. The market really is worried about the Middle East conflict. I think more so than Russia invasion of Ukraine. I'm being honest. A lot of the volatility that was of that year was because the data points were not coming in line. So this is our range. All right, we have two different ranges here. I was looking to try and get up into this, I guess you could call it a gap. Right here, I'm gonna make it a dotted line. This would be my upside target today. It's like 507.50. I'm gonna make this a dotted line. All right, that's gonna be my target. That'll be my target today. And as of yesterday's close, right? As of yesterday's close, that would be. It's just crazy. We're not down that much, but we've done a lot in just a few days, and that's the thing. You got to get in and get out. The market will just price it in, and it'll do it so fast your head will spin. So that's about 1.5% roughly. I would like to go back to test the 50-day. I will say that. All right, that is my main goal, is to go back and make this area up here 510 resistance, because we have not done so yet. You have not made the 50-day resistance. So that's what I'm going to look for. We have initial jobless claims coming out. What that does for us, I don't know. Maybe that helps. Maybe it hurts. I said it, I think yesterday or a couple days ago, that we need, I think we need a little more time, and we need for some companies to come out and say, hey, we're going to, for these layoffs to start kicking in, because they're going to they'll do the drug test, then they'll do the voluntary leaves. It'll all come in stages. And as far as, unemployment, as far as unemployment's concerned, or the labor market, it's really tight right now. So you have to give it time, because people are still have money to spend if they have a job. Okay. So 510, 507, 5750, 510 is what I'm looking for. All right. Okay. I don't even have my...
Does this do it at this point for the
Just give me 1 second.
This point for the NBA?
I believe it does. And one thing that comes into play here is the importance of analytics and technology. The last couple of months, I've been at a couple different conferences. The MIT Sports Analytics in Boston, just came back from the Sports Business Journal's World Congress of Sports out in Los Angeles. And you can't go to any of these conferences these days and not hear about conversations about analytics and technology and their role in helping leagues like the NBA sniff out these kinds of irregularities. It was a company in Vegas, US Integrity, that has a partnership with the league that provides some information that identified some of the irregularities that led to the outing of Mr. Porter.
But should we just have to rely on essentially market surveillance? I mean, in the financial markets, you have people trying to monitor for unusual activity, and then they try to fill in the blanks and see what might be behind it. But you also have, compliance programs for the employees. You can and can't trade certain things, and they monitor that pretty closely. So is the NBA doing anything like that, where they're at the player level monitoring activity?
I'm sure all of these leagues are educating players and providing information. It's difficult to track everybody's actions all the time, but
All right. Sorry about that. I had to grab my phone. I didn't have my phone. Just to make sure the stream works. So you guys can see up in this area here, this is where I'm headed to. 510.50. I would like to get a test of the 50-day. I do not think we do it today. I'm going to be honest. I do not think we do it today. All right, I don't think we do it today. We need to make this area 510. It's like 509.75, 509.95 to 510, the 50-day. I think we need to make that resistance between today and tomorrow. If you get that attack today, this weekend, you may not get to it. All right, this market may just say, you know what, 494, here we come. All right, 494, 495. Here we come. All right. So just be cautious. You know, don't just put something on. Like you can tell right now that it's weak. Like, look how you're not making any progress at all. Make a little bit, done. And it's like, it's hesitating. We're sitting at this level now. We'll have to see. You know, this could be a brick wall up here at 506. Maybe initial jobless claims is there to help us. I don't know. I'm just saying, guys, I really think the market, this Middle East conflict is more serious than you guys and myself may think. There's no reason why the SPY in 1, 2, 3, 4, if we don't hit the 50-day and get up to this area in 1, 2, 3, 4 days, that's a problem. That is a problem. And you'll learn some of these things the longer you guys do this. For anybody that's new with trading, you're going to understand like how to read the market. And I'm reading this right now. Is this a problem? We should have had no problem going back to just from 5.7, 5.05 to 5.10 in like 2 days. 3 days, I'm sorry. 1 day you stay down here, 2 days to get there. You should have had no problem, but it's not. So they're in a hurry to sell. That's the story. They're in a hurry. They want out. Get me out. I don't care what price. That speaks volumes. They're taking profits. You had a lot of CEOs taking profits as well. So let's go to the Qs. Let's go. Let me pull up a 15-minute chart so we can identify what sector we want to be long, what do we want to be short, just in case we have a move to the upside. Yesterday it was the Dow. I gave out Goldman Sachs yesterday at lunchtime. Lunchtime, bang. All right, nice little trade there for you. Let's go to the Dow. So the Dow is up. Damn, it's so weird. I hate this chart. It's just been getting crushed lately. So it has been struggling with this 100-day moving average up here. And if that squawk box is too loud, just let me know. I'll turn it down. All right. So the 100-day, you have made this area support. That is your next level at 374. Let's go see where we're at. Okay, so we are bouncing. So you guys can see where it's been at resistance, 100-day. So the Dow, you're going to be looking for 380. All right, 380 level. Yeah, 380, that 100-day. I just wonder if we're going to fall out of bed again, guys. And this weakness is just on its way. I think we pull back now. Let's see if we pull back. Here's my thought. I think if we pull back right now, we start to pull back. Let's see if we can hold 378 to 377.25. This level down here at 377. All right. See if we can hold yesterday's close or right around yesterday's low. Okay. Oh my God, nobody cares about COVID. NVAX might be a short. I'm going to go right to the market. NVAX. Yeah, this could be a nice short if you get a pop on this thing. You could probably get, I don't know if you can, it might be heavily shorted. It might be hard to borrow. All right, QQQ. Think about that. NVAX, right? Look where it was. Look where it was. 300 bucks. It's now $3. Right? It's crazy. All right, let's get back to business. Sorry about that. All right, so 15-minute chart. So the Qs, let's see if it feels like the markets are kind of tied up here. I'm just trying to identify where. Okay, so the Dow, to me, is a little bit stronger. The Dow names are a little bit stronger. Let's look at the IWM. Yeah. All right. So once again, I will say this. If I'm going to be long today, I'm going to look at names that are in the Dow. All right. I'm going to look at names that are in the Dow. Shit. Where am I at here? Here we go. Let's go look through. So we had Taiwan Semiconductor today report, or last night, whenever. I thought it was this afternoon. The Dow has. I would like to be able to try and get up to like 382. All right, 382 would be the level I'd like to get to. If we can get up there. I'm not sure if we can. I don't know if we have enough strength. You just have to watch, because the minute you get you get a little bit of strength, you know, you could just get pushed right back down to the downside with a whatchamacallit, a headline. You know, you have headline risk right now. So the Dow 380, and we'll see if we can take this market just a little bit higher.
SPNS Sapiens launches integrated AI.
Let's see.
Second release in its Decision AI
I
portfolio.
gotta be honest. Gotta be honest here. I think, guys, that we're once again trying to fight this market to the upside is probably a lost cause. Like, as much as I'm sitting here saying I think we need a bounce, I think the longer we sit here under the 100-day, like referring to the Dow, the longer you sit down here, the greater risk you have for further downside. If we don't make any type of progress today, or with the initial jobless claims, I think you have to think about, you know, going back down to the next area. And in my opinion, that might be like 375. All right, might be like 375. 375 to 370. You won't do that in one day, but, you know. All right, let's go to the Qs. So I'm watching the 100-day on the Dow, okay? And if I do take a long, unless something changes, all right, unless something changes, that's the sector I'm going to be taking longs at. If I'm going to be short, it could be the IWM and or the Qs, okay? Does anybody have any questions or anything, any insight, anything at all? I'm just going to go about my business. Let's see here. And we should have room. And that is a little bit lower. It's just nasty. Just a nasty chart. Nasty.
I don't want you to move. I'm gonna miss you so much. You realize we'll have internet waiting for us at the new place, right? Oh, we know. We just like making a scene.
That's wild. How we're back underneath of that level there on the Qs. You can see how weak it is. That is pretty crazy. So the Qs, I would look for a bounce back up into like 430, and maybe you test yesterday's high. Just clear weakness with the QQQ. I mean, if you look, you can see how the Dow is putting in a little base here, and you did not make yesterday's low resistance. All right, or not yesterday, but Tuesday's low. I'm done spending time on this. I'm sorry, guys. I need to get this watch list better. Is that the IWM? Look at that.
So maybe I'll start with the quarter, Andrew, because it was a good start for us and for our
Yesterday's
clients.
low.
That's the most important thing. We delivered for shareholders as well. What I'd say is we're seeing some positive trends that are good for our business. First, transaction activity has really picked up. You see that in credit markets, availability of debt capital. The equity markets have been strong.
All right, so let's go to the watch list. I'm going to go remove all this stuff here. Let's go look at TLT real quick. TLT had some nice little upside. I'm really waiting to see when the if TLT ever gets back to doing the opposite of the banks. See if we can get yesterday's pivot high, Monday's high, not Monday's high, this pivot high, this 89 area for support on TLT.
Market sentiment. And then another area that's been really robust for us has been private credit. Credit, both for corporate and real estate, for us is now over $400 billion. We've crossed over $200 billion of capital we manage for insurance companies. So we're seeing a lot of momentum there. So we can talk about the economy. I'm happy to do that. But we feel very good about the way the business is trending today.
In terms of those different products, private credit, as you said, a lot of big inflows. What kind of expectations should investors in those funds expect in terms of returns?
Well, it's really a range. You know, we do some things that are non-investment grade oriented, and in those products, you're seeking to produce, let's say, low double-digit returns. But a lot of what we're doing, particularly for insurance companies, some pension funds now, investment grade private credit, and there you're trying to produce a premium over what they can get in liquid fixed income. And so far, if you look over the last year or so, we've produced about 200 basis points over what you could get in liquid fixed income for A-rated credit. So It's a relative return, but we've been able to deliver a premium because of the direct-to-customer model we have in private credit.
What are you seeing in terms of inflation and the strength of the consumer, both on the enterprise side and the consumer on the retail side? We obviously are debating where we are really in this economy and frankly, what the Federal Reserve may or may not need to do as a result.
Well, it's interesting. I was listening to your discussion. I want to give the Fed a little more credit here. I think their policy has been effective. We're seeing in our portfolio, which is really large, 230 companies, 12,000 real estate assets. We're seeing inflation continue its downward path, although the pace of that disinflation has slowed, which Fed officials have noted. When we look at input costs at our manufacturing companies, pretty flat. Similarly, apartment rents, pretty flat. Hotel room revenues, flat, in some cases negative. And when we look at wages, if you went back a year ago, they were running about 5% up, now about 4%. So I think the Fed's going to achieve more of its goal. It may take a little bit longer, but I think that's a real positive for investors.
We were talking to Don Peebles before about commercial real estate. I want to talk about BREIT in just a moment, but broadly on commercial real estate, as we talk about 4-hour work weeks, as we talk about hybrid work, what was the company that we just talked about this morning who's now going back to 5 days a week? Where do you see things? Have we bottomed out?
Well, in real estate, there have been a couple of big headwinds. One of them you're noting. In office buildings, remote work has really been a headwind. It created a lot of excess capacity and put pressure on rents and values. We've also had this rise in interest rates that's hit valuations across the board, regardless of asset class in real estate. But I think that's what's happened. Most of that has been incorporated in the market. You're going to continue to get tough headlines from transactions that were financed in a different world where there are maturities or buildings that vacate. But we like to look forward, and what's happening on the ground today is encouraging. We've seen the cost of capital for real estate come down a bunch. The commercial mortgage-backed securities market had a 5-fold increase in issuance, so debt capital is much more available. And really importantly, long-term, new supply has come down. So building of new warehouses starts are down 80%, new multifamily apartments down 50% from their peak. And to give you a sense of how we're thinking about things, we announced 2 big deals in the quarter, one for $7 billion, one for $10 billion, Tricon Residential, Air Communities. And we believe it's a compelling time to invest in commercial real estate. You need to do that before the all clear sign. People tend to wait till all the bad news works its way through the system, and often that may be too late.
Can we talk about the BREIT product? Because there's so many questions about it, so many headlines about it over the past several months. And we talked to Don Peebles again this morning, and we were talking about just the valuations of that product. You have brought valuations down slightly, but on a relative basis to just about every competitor of yours in the same space, the delta between your valuations and their valuations is sometimes 5, 6, 7%. How do you justify that?
So we're incredibly proud of BREIT. We started raising discount rates and cap rates, basically of lowering the valuation multiples pretty significantly well before others. And that's definitely been reflected in our values. Last year, we had slightly negative performance. I think the key differential has been the growth in cash flows in our portfolio where we chose to invest. We have very little to almost no office exposure, no regional malls. We own within BREIT the fastest growing data center business, we believe, in the world in QTS. We own a very large,
what the heck is
fast-growing
going on,
student
man?
housing
Oh my
business,
God.
big exposure
This
to
thing is just-
logistics, a much stronger
Sorry,
sector.
guys. I didn't mean
and
to
I
yell,
think
but
when
I'm
you
like-
when you think about how do we justify valuations, the most important thing is
I really cannot stand this mouse, and it's my own fault because I have not went and got another one, but I haven't really been to the store. Like, look at that. It's just wild. It's just crazy. I'm just coming up with my game plan this morning, just so you guys are aware. I'm just going through my game plan right here. If you guys have any questions, you guys can throw them in the chat. I'm gonna get ready for the day. There wasn't really anybody here, so you know how it is. I'm gonna just do me and get my stuff ready today.
Most people I know in real estate, they say these marks are just too high. And maybe they should be valued because it's a semi-liquid product. It should be different, but it's sort of hard to understand. Do you understand why people have those questions?
Yeah, no, I know I fully understand the comment, but I think what's important to note, of course, is if you went back in time when the public REIT market was up in 21 in some of our preferred sectors, 60%, we weren't marking at those levels. We publicly disclose every month our valuation metrics, and we show the increase in cap rates and discount rates. And I just come back again and again to the fact that we've sold $18 billion of properties above our marks, and the exposures we have, the fact that we have this large exposure to the data center space, which is by far the strongest segment of real estate. Right. It's probably the strongest segment globally tied to what's happening in AI. That's contributed a bunch to our performance differential to some of the competitors, as you know. So I think where you invest really matters.
One related question to this, and the reason why I'm even harping on it is because I think you're planning to create a separate product that would be for private equity, and that would be similar to this type of product. In the BREIT product, you effectively are offering what I call the equivalent of a dividend that is beyond the profits on an operating basis every year. So you're taking out effectively loans to pay those dividends. That's something that's not what most firms do. How should we think about that? And how do you think about this, what's happened in that fund as it relates to creating new products like a private equity product?
Well, BREIT has an enormous amount of liquidity today, over $8 billion. We run this product incredibly well.
They're going to take this trade away from us, guys. I'm going to tell you right now, I'm going to watch Tesla. It may not happen until tomorrow, but it could get ugly. I think you could get the next leg on the downside here.
Reflected in the monthly
I'll give you my analysis
valuations.
in 1 second.
So the key has been, if you look at the way we've operated BREIT at low leverage over time. By the way, we hedged out the debt for 7 years, something almost nobody did in real estate heading into this upward rate cycle. When I think about the responsibility we take in managing money for individual investors, we take it incredibly seriously. We've done an extraordinarily good job in the private credit space. I think in the private equity space, given the breadth of our platform, all we see, we'll do a great job there as well. We believe that delivering alternatives to individual investors operating
I
at the
say?
same very high
What'd I say?
standard we
They're gonna
do for our
take this trade.
institutional customers.
Unbelievable.
That is a product that
All right,
works, that makes a
that's
ton of
over
sense.
with.
We're proud
It's
of the way
already
we're
down at
doing it.
150.
And I think for individual
Oh my
investors, getting
God,
the
that's
same
sickening.
benefit pension funds
All right.
and endowments have gotten over the last 30 years is really beneficial. But I agree with you, it has to be done in the right way. You have to run these things with the appropriate leverage, the appropriate valuation process. We believe we do all of that.
Let me ask you a broader question just about the Fed again, but really where you expect interest rates to be for the rest of the year, what you think that's going to mean, by the way, to the prices of businesses in terms of loans to be able to buy them, mortgages in terms of the mobility of the American public to move around, buy single-family homes, and the like. When you guys have your famous Monday morning meeting, what are you saying about where interest rates are going to be over the next 12 months?
Well, I think you've got to step back. We're always caught up on what's going to happen at the next Fed meeting. I think the key thing to keep in mind is we've really, I believe, peaked in terms of cost of capital. If you went back to October, the fall, people were talking about rates going higher. Now it's a debate about when the cuts start. Spreads on borrowing costs in the high yield market were much higher. CMBS, as I mentioned earlier, borrowing costs were much higher. And so we're on the downside of cost of capital, and that's encouraging. Now, whether something, the Fed cuts now or 180 days from now, I don't think that's the key determinant. I think for us as investors with $200 billion of dry powder, investing capital in this window of uncertainty makes a ton of sense. So what I would say is, I believe over time the Fed will bring rates down. I think they'll be patient. They don't want to, stoke the market too much. They want more clarity on inflation. All of that makes sense. But I do believe over time, when we look out a year or two from now, short rates will be lower. That'll be better for markets. It'll be better for asset values. And as investors, again, I'd say you want to invest before that all clear sign. So we take a long-term approach to investing. We're focused on performance for our customers. That's what matters. And sometimes in the heat of the moment, people tend to get very nervous and they pull back. And I would say the broader picture is one of declining cost of capital, even if it takes a little longer than people had hoped.
John Gray, always good to talk to you. Thank you for joining us this morning.
Thank you, Andrew.
Appreciate it. Talk to you soon. Coming up, we are going to hear from NBA Hall of Famer Grant Hill on Team USA's preparations for the Summer Olympics in Paris. And Grant Hill happens to be an owner of some sports teams as well. We're going to talk about all of that with him. Stay tuned. You're watching Squawk on CNBC.
ambitiously.
Coming up next, breaking jobless claims. Also got the Philly Fed manufacturing data for you, and a can't-miss interview with basketball legend Grant Hill. All that when Squawk Box comes right back.
Right, so 214 for 4-week average. Where we at? Yeah, 212. So higher for longer. We're back in the low 200s. That's not where we need to be. The market should pull back. Let's look at Philly Fed manufacturing, because that's also very important. 15, huge increase. Hot damn! Look at that. Look at that jump. Oh, cow. All right. So, come on. So they pinned it right at 212. This is a crazy. Like, how do you go from 1.5 and 1 to 15? All right. That's a little volatile. That's a bit volatile of a number there. Business conditions 34 going down. 4-week average is 314.5 previously. Like, they just did not do any type of work, and they just pinned everything right at last month's number. Yeah, Steve Leisman.
Says phase 3 select.
2022 is when the Philly Fed manufacturing was last that high. That's crazy.
Welcome back to Squawk Box. Steve Leisman is standing by with some breaking economic data. Steve.
Hey, Mike, we have a big beat on the Philly Fed. I'm just double checking this number. It's 15.5, and we were looking for 2.5, a slight decline. Remaining on the positive side, that was the expectation, but not this much. Let me do a quick calculation and figure out when it's last been this high. You need to go back to, it looks like, April of 2022 to find a number this high. On the negative side on this number here, the prices paid component went up to 23 from 3.7. Interestingly, the employment index remains relatively muted, actually negative, -10, around where it was before. And the 6-month, the outlook is also pretty good, 34 versus 38. So we'll leave it there. CapEx in the 6 months also robust at about 20. On the jobless claims, Mike, again, no movement at all really to speak of. And I'm going to try to put some context around this. 212,000 was the weekly number. 212,000 was the prior number, slightly revised up by 1,000. And the continuing claims, 1.82 versus 1.81. So do not stop the presses on that one. Yeah. What might be worth thinking about is we've had, Mike, a ratchet up. It was 1.4 right in the wake of the pandemic. Then it ratcheted up to 1.8, and it's been pretty consistent around 1.8. And there was concern that 1.8 was the beginning of, say, the weakening of the job market. But what I want you to remember is back before the pandemic, 1.7, 1.8 was a normal run rate for the economy. 200,000 jobless claims a normal run rate for the economy. So at least in this regard, we're not getting any tighter on the job market, but certainly no loosening showing up here as we kind of get back to a pre-pandemic norm when it comes to weekly jobless claims.
Yeah, it just seems in general like a lower turnover labor market at the moment. You mentioned the business surveys tend to show a kind of muted hiring expectations, but on the other hand, not a lot of net job losses either. Steve, thanks very much.
Yeah, sure.
Meantime, at the Team USA Media Summit yesterday to mark 100 days until the Paris Summer Olympics, I spoke with men's basketball managing director Grant Hill. He is, of course, NBA Hall of Famer, 7-time All-Star, and he won a gold medal with the U.S. national team in the 1996 games. And this year, he added to his team ownership empire as part of the group that purchased baseball's Baltimore Orioles. I asked Grant Hill which job he enjoys the most.
I think I kind of like this the best. And it is fun, it's exhilarating, it's challenging, it's basketball. You get to roll up your sleeves, you compete. They're all great. They're all great investments, great experiences, great roles and responsibilities. But representing your country, assembling a roster, managing a team, put the coaching staff together, all the responsibilities and duties that are involved, this might be the thing I enjoy the most.
Oh, so is this more or less pressure, though? Because there's a feeling of inevitability of gold. No?
Yeah, no, there's a standard. And I think fans, we expect to win. We expect to win. We invented the sport. We've had great success through the years in the Olympic Games. So there's an expectation. But at USA Basketball, we have an expectation as well. And so I think we recognize how hard it is and how difficult the task is. But that's why we're here. That's why we were very thoughtful about this roster. Spent a lot of time preparing, putting it all together. And yeah, I mean, that's pretty much the feeling, like it's gold or bust in a lot of ways.
Is there any more pressure because this may be the last dance for, Kevin Durant and LeBron and a Curry all together, for example?
Yeah, I mean, I think, first of all, anytime USA Basketball, men's or women's team play, there's this pressure and there's an expectation. I think when you have players who've really been the face and the driving force of the NBA for a decade, over a decade, and the end is near. They still have a lot of basketball left in them, but this may be their last opportunity to play in the Olympic stage. Yeah, there's a feeling we have to get it done. They have to go out with a bang. And you know what? These guys like pressure. When you're great like these players are, and really all the guys on our team, you don't run from pressure.
Right.
Pressure brings greatness out of you.
There's something different about putting this kind of team together that's different than putting together an NBA team that's gonna play for a whole season?
Yeah, I mean, first of all, it's different. The NBA, there's rules, and you have to have cooperation and draft and trade, and so you can't sort of hand-pick exactly who you want to be on your roster. We certainly had, at least have had that luxury this year with the overwhelming response and so many guys wanting to be a part of it. But it's a different game, it's a different league, a different set of rules, different style of play. So what leads to success in the NBA doesn't always resonate to the FIBA game. And so you have to keep that in mind while assembling a roster.
Okay, so what's a different kind of player that you'd want on this kind of team that you wouldn't want on an NBA team?
Well, I mean, I think when you speak to the game and what the FIBA game is, it's much more physical. The rules are different. The spacing is different. Every possession is more important. It's more, you don't have the luxury of easing your way into the game that you sometimes can do in the NBA. How the game is officiated is much different. So these various nuances, these various rules that are in place in FIBA, it takes a minute. And so physicality, size is important. It's more. So those are some of the things that play a role.
What about managing all the superstar egos together? How different? And by the way, since we're talking about business, all of the various sponsorships and responsibilities that each of these players may think they very well have while they're playing.
Well, I mean, look, we have guys who are businesses in themselves, and certainly have been very accomplished, very successful both on and off the court. And being on this stage, on this platform in the Olympics, with all of their partnerships that they have and all their business relationships, I would make the assumption that it's good for business.
Right.
And
No, it is good for business.
It's good for business.
But I wonder whether it's competing business. I mean, I will never forget when Jordan put that American flag over his shoulder.
He did, yeah. Well, he did. And, but you know what? That moment, him on the medal stand back in 1992.
It's the greatest.
It's a great moment.
The greatest.
It was great for Nike. It was great for the Olympics. It was great for the USOC, USA Basketball. Everybody involved benefited from it. And so, yeah, sometimes there's competing relationships, but we all are respectful. The main thing is the Olympics, and everyone understands the significance of it. And everyone, I think, sees the value in having one of their players that they're in partnership with there.
Just want to ask you about the Caitlin Clark effect.
Okay.
On basketball broadly, but on women's basketball. I mean, where do you think women's basketball is headed?
You know, women's basketball, it's at an inflection point, I think. And I think we're seeing it about to take off. And certainly Caitlin Clark, what she has done the last couple of years, similar but different to like a Stephen Curry with the shooting and the deep range and the joy and the love that she plays with. All of those things have factored in and brought in viewers who haven't maybe traditionally or historically watched. The reality is, there's been great women's basketball for 30 years. I think Elisa Leslie, Cynthia Cooper, Dawn Staley, I mean, all these, Sue Bird, all these athletes who played. I think now we're just getting the attention. People are watching, paying attention. And so Caitlin Clark, Dawn Staley, South Carolina. Dawn's actually been three-time Olympian, Olympic coach. So Caitlin has kind of spearheaded that, and I can't wait to see what the next 5-10 years are.
When you look at WNBA, I mean, by the way, as a basketball team owner, do you say, as a sports owner, do you say that's where this is all going to go? Meaning, where the big investment's going to pay off in the future?
I think there's great upside in women's sports. I'm also an owner in the NWSL team and MLS, but I tried to buy the Atlanta Dream back in 2016. I did unsuccessfully. But I believe in the upside. I believe that, look, the NBA is 75 years old. It took about 35 years for it really to kind of get established and really become a part of sort of the American culture and take off in the 80s like it did. And you know what? We're kind of almost at the 30-year point for the WNBA. And so I think there's many great years in front of us. Our best years in the WNBA are in front of us.
And you can catch the Summer Olympics right here on the networks of NBC and streaming on Peacock. And seems to be bringing you coverage throughout the games. And I'll be bringing you a special week of live coverage on Squawk Box from Paris this summer, starting July 29th.
Yeah, interesting to remember. Magic and Bird and then Jordan. It's big for the NBA. We'll see what happens. Coming up, we're going to speak with a congressman looking for answers from Disney CEO Bob Iger and others on that newly announced sports streaming joint venture. Stay tuned. You're watching Squawk Box on CNBC.
SportsGrid.com.
Welcome back to Squawk. Two prominent House Democrats are looking for more information about the sports streaming joint venture planned by Disney, Warner Brothers Discovery, and Fox. In a letter to the CEOs of those companies, New York's Jerry Nadler and Texas's Joaquin Castro write, without more complete information about the pricing intent and organization of this new venture, we're concerned that this consolidation will result in higher prices for consumers and less fair licensing terms for upstream sports leagues and downstream video distributors. Representative Castro joins us now. Good morning. So the prices that these media companies are needing to pay for the most prominent league rights have gone way up, and you've got technology companies with nearly bottomless pockets trying to jump in here as well. How much is that a factor, you think, in how you are looking at this joint venture and the series of questions I'm looking here? You got 19 questions that you want them to answer.
Yeah, well, the thing that we're looking at is how this affects consumers, what it's going to do to pricing, and also how it affects competitors and workers in the marketplace. And so you're right, there's a lot of things going on right now in the cable industry, streaming, video, et cetera. And you know, linear cable is, I wouldn't say it's dying, but it's certainly on the decline. Companies are trying to strengthen their streaming services. And one of the things that we're concerned about is that you've got these big three companies, Disney, Fox, and Warner Brothers Discovery, that when they form this joint venture will control about up to 80% of the sports media market. And so what does that mean for their competitors? And ultimately, what does it mean for consumers? Are they going to start with a low price and then in 2 years that price has exploded? One of the companies, Warner Brothers Discovery, also just had to let go of two of their directors because of antitrust concerns. So there are a lot of big issues here that we've got to discuss.
To what degree is the free market going to take care of this, though, when you got Amazon Prime sort of waiting in the wings, it seems, in many of these cases, at least in the most popular sports, to say, hey, well, we'll take, you know, a game a week here or there. We're building our business with it. And by the way, it's going to be relatively affordable, at least in some cases, to consumers.
Well, look, you know, ultimately it could. But what's strange about this transaction so far is that for a while now, they've announced a CEO, but haven't put any details out there on the table about what this arrangement is going to look like. And you're right, Netflix and Amazon, and then the other traditional companies like Paramount and Comcast also bid for to cover these sports events. So it's one of those things that the marketplace perhaps will sort out. But, you know, if you look over the years, that hasn't been the case. The prices for everybody, whether it's cable or streaming, have just continued to go up, and in some cases go up at a rapid pace.
But are they going up because of how much these companies are charging, or are they going up in some cases because of how much these companies are charged, right? Some of these leagues have a whole lot of pricing power. We've just been talking about player salaries and the deals that they're able to work out. And, you know, so to what degree is it government's role at this stage to police that versus putting the conditions in place where the free market can operate in this new digital environment in a way that's going to end up being the right thing for consumers?
Yeah, I mean, look, it's Congress's job to, and ultimately the regulator's job to make sure that American consumers don't get a raw deal here. And so we're asking the companies to give us details about this joint venture to conduct oversight and make sure that that doesn't happen.
But to John's question, if you were looking at this as a marketplace where the prices for sports licensing costs continue to go up and up and up and up and up, and you were trying to actually prevent that from happening, what would you be doing? Would you be saying that you would need more powerful forces to be able to bid for these things? Do you want more people bidding, less people bidding, but less people with more resources? How would you think about that? To the extent that you're trying to create that market.
I think you guys are right. You would want more people bidding so that the prices that
well, I don't know if that's what you're saying.
Lower,
yeah, but
right?
I'm not sure more people. No, because there's a question whether all these people can bid at all because they don't have the resources to bid. So the idea that there's just more people, more people with less money.
Here you go. So these guys together are going to have incredible new leverage coming all together. to essentially
isn't that
set
a
the
good
price,
thing?
right?
I guess that's my point.
Well,
Isn't
that's what we're going to get into, right? I mean, they haven't released any deals about this. We've got no pricing information on this. Congress doesn't, and the regulators don't. And so that's why we sent the letter, because we need more information. And when we get it, I'd be glad to come back on and talk about it. And I hope that the CEOs of the companies will also come to Congress and come before you all and discuss it.
We agree on that. We love more information. We got the pictures up there of some guys who have it. Iger, Murdoch, and Zaslav. Congressman, thank you. Congressman Joaquin Castro.
Good to be with you all.
Up next, Skybridge Capital's Anthony Scaramucci joins us on Bitcoin and the halving. Squawk Box will be right back.
All right, guys. Sorry, I'm just trying to get a game plan going here. This bum ass Anthony Scaramucci's about to come on. He's such a bum. Let's see here. I may end up looking for. Let's see. Let me see here. What do we have? Look, he'll be on to talk about Bitcoin. I guarantee you he cannot go without talking about Trump. This little Jordan Belfort bum-ass mother flipper.
To learn more.
Guarantee it.
Welcome back to Squawk Box. Bitcoin slump when Iran launched its attack on Israel last week, and raising some questions about the idea that investors may see crypto as a safe haven during times of global tension. Join us right now on this, the halving, and so much more. Anthony Scaramucci, Skybridge Capital founder and managing partner. Please weigh in. We saw you weighing in on Twitter over the weekend when I think a lot of folks were trying to figure out what was going on. We've seen Bitcoin fall since that weekend and effectively stay where it is, despite where equity markets are. It's trying to understand sort of these price movements.
Well, I wish I could understand the price moves myself. I think where I'm coming from is a little bit of longer term as opposed to just the week-to-week or day-to-day price movements. I think the point I'm trying to make is that Bitcoin is on an adoption curve. If you go back to Web 1, Bitcoin is sort of in the 1999 point in the spectrum. And so just imagine where we went from Web 1 to where we are today. And so my point is you won't see this be a inflation hedge or a store of value, as other pundits are saying, until you get over 1 billion users. And so right now, it's going to be way more volatile than people like. And people look at it as a risk-on or risk-off trade until we get to that adoption curve. That's my point.
And given the adoption curve, what do you see right now as the upside and number, and what do you see as the downside number, call it 12 months?
Well, I mean, look, you could get shocks like wars, and you could get, God forbid, a terrorist calamity or something like that that could take Bitcoin down 10 or 15%. but I think you have a heavy bid on Bitcoin because of the demand from the ETFs and from the eventual drivers of things like the wirehouses that will enter the space, as well as the 401k market. So I don't think you have 50% downside, but you could have 10 or 15% downside just because it's still a risk-on, risk-off asset. But long-term, with the halving coming this week, Andrew, right, I think this thing trades to 170, possibly to $200,000, and that's consistent with where it's been over the 15 years of Bitcoin.
It's so sensitive to the starting point, though. Like what you want to say, how this behaves, or what does it typically do under different environments. I just looked at a chart yesterday. Since June 30th of last year, Bitcoin has been beat for beat with NVIDIA stock. Okay, I mean, nobody's saying it's exactly the same thing, but it sort of moves along this, hey, we're investing in this big picture future. This seems to be a way to play it. The other piece of it is, if the analogy is 1999 and Web 1.0, what was the central asset that you would have bought in 1999? Bandwidth? That's done nothing but gone down in value. Like, what's the thing you're investing
in? If you bought, okay, let's use Amazon as an example. Okay, right. And I think this is the point that Andrew is trying to make: is this risk on or risk off? Well, in 1999, Amazon was an emerging stock on an emerging technology, and it was quite volatile. And you lost 20 to 50% 8 times in Amazon.
You at one point lost 80%.
Yeah, that one time in March of 2020, it went down 80%. But if you held Amazon over that period of time, $10,000 is worth a little over $14 million today. And Amazon is now trading consistently with the volatility of the overall S&P 500, and it certainly wasn't
also
doing
producing cash flow
25 years ago.
I use a lot of Amazon. Okay, I don't use a lot of Bitcoin. Is that a problem at some point? And what do you expect to happen when we go through a dot-com bust type moment for the broader market? Does the feeling about Bitcoin shift?
I think if we go through a dot-com bust in the broader market in the next year or two, I think you'll have a price shock in Bitcoin consistent with a dot-com bust. However, if you're willing to hold that asset, which we are over a rolling 4-year period of time, no one has ever lost money in Bitcoin. But if you're willing to hold the asset for, let's say, 5 years, John, I think you do very, very well in the asset. It doesn't have cash flow. Gold doesn't have cash flow. But it does have cash flow in a weird way, because if you treat it like cash, cash can offer you a yield in the bank. And even though we had these problems with things like BlockFi during the crash, you could go to places like Galaxy, which is in my opinion, a tremendously undervalued asset, probably the most undervalued asset in the crypto space, and you could get yield in a borrowing agreement there. So you do have cash flow on Bitcoin if you think about it that way. And so long term, I predict people will do very well. And I think the point I was trying to make to Andrew through Twitter and here on the show is that, yeah, sure, it's 14 years old, but it's still very young in terms of the adoption.
In terms of adoption vis-a-vis the ETF, you look out your 4-year sort of time horizon, what percentage of Bitcoin effectively is owned by BlackRock on behalf of individuals versus individuals owning it themselves?
It's a good question. So let's say there's 15 or 20 billion now, just using rough numbers, and the asset's got a $1.4 trillion in market capitalization. And let's say it went up 5x from that. And let's say the market capitalization didn't move, it's still less than 10% of the overall ownership of Bitcoin. So this whole notion that the ETFs are going to overly centralize Bitcoin, I don't buy. I think what the ETFs are, though, is they're a great conduit for people that are used to buying them.
Does the ETF create more price discovery? I mean, in some ways, you think it should create more price discovery, which in some...
Well, it obviously has, though, Andrew. Look, I mean, I think we were 40,
well, but in the initial stages, the discovery will always be about adoption, so it should go up. The question is, long term, does it create a sort of different sense of discovery? And you also have to think that the people who own Bitcoin today were always true believers, right? It was sort of a special cohort of people who sort of thought about Bitcoin in an unusual way. I don't know in the future if you have a large volume of Americans owning it through ETFs, hopefully they won't all be true believers in truth. You'd want them to all think different things about it. Well, I don't know what that means.
Well, listen, I mean, you guys have a lot of skepticism on the Des. I think the skepticism is well-founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful. And so at $1.4 trillion, could this trade to half the market capitalization of gold, where gold is $16 trillion today? We believe it can. We actually think it's going to go through the market
didn't let him.
capitalization of gold. And if you're making the point that the American owners in an ETF are not going to be enough to get it there, I disagree, because over time, the acceptance regulatorily is going to allow people to put it in the portfolio. A 1% position in these global portfolios takes it there.
Anthony Scaramucci, want to thank you. Appreciate you as professional skeptics at the table, but I think there's part of me that does believe in it, just so you know.
You'll be long at 100,000.
Mike Santoli, John Ford, thank you guys for hanging out with us. We want to hand it over to our friends on Squawk on the Street right now.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber at Post 9 of the New York Stock Exchange. Kramer's in Philadelphia today.
I can't sound like that guy, so. UFC. It's time. Hold on.
And prices paid highest since December. Our roadmap begins with Tesla's troubles, though. Shares awfully close to a 52-week low this morning as Deutsche cuts on Tesla's, quote, thesis-changing shift from a lower-cost EV to robo.
Plus, stocks overall are looking for some traction. This after the S&P notched its fourth straight.
Ladies and gentlemen, this is the main event of the evening. And now, senores y senores do Brazil and UFC fans watching around the world, live from the sold-out HSBC Arena in Rio de Janeiro, Brazil. It's time!
All right. Tesla, down 2%. They're taking that trade away from us. You know, the ball can keep rolling downhill. Shit, I did not write that down. Damn it. I didn't mean to do that. Tesla, I'm going to look for a bounce back. I want to get short the bounce backs. And I will not be afraid that it's down X amount. I think it's on a mission. And I think it's pretty much done for right now. Just like we had a year ago. And I think you see more people pile in on it. I'm just eating a cracker, so give me 1 second. I'm sorry. So, Meta, I'm watching Meta. I kind of like it. I ain't even gonna lie. I'll be honest with you. Oh, it's already doing it now. I was gonna say I'm gonna look for a pullback right off the bell. And then look for a possible long down here, or I want to get another opportunity at the short side. So, let's go have a look at Meta real quick. Let's move this over. Let's get everything ready. We got a half hour. All right. Excuse me. I would like to get a 500 rejection on Meta. I would like to get a 500 rejection. It's a stock that's very strong on the year. So, understand that. So with that being understood, and that it just hit the 50-day yesterday, we got to understand what the trade is. Either we're just looking for a $2-3 move from 500, okay? Or, you know, we're looking for. Let me fix everything. So what we're gonna look for, at least, you know, it's up to you. This is my analysis. All right, all we're looking for is a pullback. All right, a pullback off of that 500 level. At least that's what I'm gonna look for. Profits off at 498. Profits off in front of 496. And see what happens when we get down into this 496 level. Alright. It's just my opinion. It's just my idea. 92.83. 92.83. So we'll say 493. 85. Damn, this thing's been moving, huh? On a light day, what does it do? 81. 91. So this thing moves about $10 a day.
Jim, do you think, I mean, overall, do you think the robo-taxi vision
87.
in the next 15, 20 years is legitimate?
So my idea for Meta, I'm going to let you guys know right now, is that I think it pulls back and you might find some longs in here that kind of like hold it up above the 50-day until you get Netflix earnings and get some more earnings next week. Meta does report earnings on the 24th, so which would be next week. So premium's going to be a little high. Could possibly be high. I have to use the restroom real quick. Give me 1 second. I don't think there's even anybody here. Give me 1 second.
Sure. That we just enjoy owning and driving our own vehicles.
Well, I think that there's still a love affair with the car. We know that from registrations. We know that from both new with GM, secondarily Ford when it comes to trucks. We know that from used with Carvana. It is not something that we really like. Now, who would like it? J.B. Hunt, because they had such a crummy quarter, and they don't necessarily want people behind the wheel. But, you know, I keep coming to that vision, Carl, where a truck is passing me, I look over to it, and there's no one driving it, and my tendency is to want to go to a road stop immediately. Kind of rethink, get my brain together. Look, it's just not, the time has not come. Now, you give that 10 to 20 years. Oh, sure, David, it's going to happen. And you know what else is going to happen?
Yeah, tell me what.
You're going to be able, well, you're going to be turning 80 by that point, and sure enough, you're going to want self-drive because you won't be able to see.
That's true. I will want
me,
self-driving.
I hope I'd be able to pedal.
I'll be Mr. Magoo.
I'm encouraged that you said anything positive about AI at all, that it's not just going to kill us.
I know some people have remarked on the fact that I'm so worried about artificial general intelligence, but not when it's behind the wheel of a car. All right, fair point.
Look,
what about the robots,
I'm sorry,
Jim?
your birthday
Don't forget
is front
about
and
the
center.
robots
Your
at Tesla,
birthday is front and center.
The robots at Tesla could be the key. They could be the key to the company's salvation. I kid in a way, and then I don't. I don't know if we have our video. I love that video. But, you know, at some point, you talk about artificial general intelligence. You put that in the robot, and maybe they're going to become the biggest robot maker in the world. I mean, Musk has said there'll be a 1-to-1 ratio at some point between people and robots.
Well, good. Good. Just go buy the incredibly shrinking NVIDIA, because the chips have to be from NVIDIA if you want to make it work.
By the way, Jim, it's not just shares of Tesla that have been, I mean, they've been down all quarter. That momentum to the downside continues. But AMD, one of your favorites, that looks pretty bad, that chart. Snowflake, that doesn't look so good. I mean, we are sort of seeing some significant weakness over the let's call it last month and a half or so. Your thoughts?
We are in a serious correction, and no one wants to admit it. Those two charts,
I do.
AMD and Snowflake.
I've been saying it. I've been
may I
saying it.
suggest that you buy Procter & Gamble.
Been
If
saying
you
it.
take a look at Procter & Gamble, the chart.
Been
P&G,
saying
you're going to see
it.
you're crushing it. You're crushing
Been
tech,
saying it.
which P&G, they have tech. They've got some plastic, David, that it might decompose by the time we have self-driving cars. But there you go. I mean, if you take a look at Procter during this terrible month of April, you see a better chart than you do AMD. It's been painful, David, and I think that people don't want to acknowledge the pain. I have the pain of NVIDIA. You know, I mean, look, there's the ecstasy, and then you've got the agony.
I know, but it's hard to,
I don't trade it.
Particularly sympathetic when it comes to a stock that is still up. What's NVIDIA up this year? I mean, you know, you're still talking about incredible performance. That said, yes, the chart doesn't look great the last 3-4 weeks for NVIDIA, even though the last 3 months, the stock is still up 47%. And you can see, of course, for the year over 71.
NVIDIA does this thing. And what people don't realize is that if you look at the last 2 quarters of last year, NVIDIA did nothing. I was starting to get a lot of heat because I liked NVIDIA. Like I was going to rename my dog that is rest in peace, you know, something else. Like I was going to go rename it Proctor. I mean, what's really happening here is NVIDIA is digesting its tremendous gains. They've got a brand new supercomputer that comes out in September that everybody wants. Instead, all we hear is that Zuckerberg, somebody at Google, and Amazon have competing chips when they're not competing. Where did that come from? They're not competing. They are synergistic. Okay, mate?
He mated me again,
He did. That's cold.
Me.
That's ice cold.
I didn't checkmate. I just mated.
Keeps mating me. Thinks I'm on that
You
boat
get him on a
with
boat for 2 days, and everybody's a mate.
Suddenly, go to the starboard. It's all sorts of nautical references.
Jim, meanwhile, speaking of the broader markets in AI, Bernstein, Tony Sacconaghi, who's been right on Tesla 150, by the way, says that he now expects Apple to roll out most AI features in September with the iPhone, as opposed to in June at the developers conference. That might put a delay in some people's hopes of what Apple has in mind.
Well, I would say I would flip it a little. I didn't expect it to be that soon. I didn't expect this iteration to be better. Here is a stock that is holding on for dear life. Again, like Apple, I say, NVIDIA, I say own it, don't trade it. But everything points to, David, a missed quarter. And people can't look through this valley because it looks like the valley of the shadow of Apple death, and it isn't. It isn't.
June is not that far away. You still may get significant announcements, of course, that then will be included in whatever is the next generation iPhone and/or the software that goes with it, Jim.
Look, I want a Vision Pro NVIDIA tie-up, but we're not going to get that. Did you know we used to read the Lord's Prayer? Did you know we used to read the Lord's Prayer in elementary school?
That's great. It's good to know. And the Pledge of Allegiance, I remember that.
When we come back, it's been 4 years since the start of the pandemic, as you know. The latest sign that companies are ramping up their push to require employees back into the office, in some cases 5 days a week. Got a bunch of calls on the sell side, including one on our parent Comcast, Oracle, Estee Lauder, Zoom. Take a look at the pre-market here, gaining a little steam. Squawk on the Street continues in a minute.
All right, guys, we got 15 minutes left. I really don't have much. You know, I was looking for a short here on Tesla up at this area. You may need another little pop higher. I'm not sure if you'll get it. I think it's... Look, they're going to take this trade from us. Let's see here. Let's see. You know, I think Tesla is headed for this gap fill finally, and that's down at like 145. All right, so keep an eye on the volume this morning. It's got I don't know what's going on here. I really don't. Other than the fact that it's going down, I don't know what I don't know what the cause is for any of this. I really don't. I mean, normally you would think, you know, they would wait for earnings. I don't know when their earnings are, but I'm sure it's not far yet. It's on the 23rd. Yeah, so the 23rd. I don't know. That could leave you a surprise for the upside. I mean, it is a car company. They need to tap into other markets, I feel like. You know, for anybody that bought last year, January and whatnot, that did not take profit, I feel bad for them. This is what stocks do. I mean, so, you know, again, it's not yours until you take it. Just remember that. This doesn't mean that you can't buy back. You're not going to call the top. You're not going to call the bottom. Just, if it's paying you, take it. Like, our job is to just create wealth in this market. All right? So, I don't know. You know, honestly, I would just look for a bounce. I may stay away from Tesla today. I'm not sure, though. I'm going to wait for the bounce. Meta, let's look at Amazon. Amazon's got a nice little gap up on it. Maybe we could get a pullback and a hold of like 182. 180, 150. The thing is we need the market to do something. Okay, we need the market to do something, and it's not doing anything. It's not doing anything. All right. I mean, like, I'm even thinking about taking a short on the Dow, and that's the stronger name. All right, it's going right back up to the 100-day moving average, this 379.50 area. It should bounce and see if it rejects the 50-day or if it's able to hold it. Yeah, let it pull back off the bell and see if you can get a bounce there. You know, with that, I'll probably be looking at Goldman Sachs. Alright, Goldman Sachs is on my list. Again, we gave that out at lunchtime yesterday. For the long here at 12 o'clock, right at lunchtime, we called the bottom and said look for another bounce back up into that 20-day moving average at this level up here at 407. So, me personally, 575, 575. Me personally, I think what I'm going to do is, where are we at here? We got 3 likes. Okay. I'll just wait and hold up a little bit. We'll just wait and see what happens here. We'll wait and see what happens here. Let's see where SPY. We have 10 minutes now.
Yeah, okay. I'll make sure to put that one on my list if you say it's worth doing.
Well, I put that on, David, because Comcast
Yep. Let's do it. I'm going to look for a bounce, which I think it's already doing. So, depending on where we open up at, all right, I'm going to look for a pullback on Goldman Sachs down to like 400. You know, especially if we can get a bit of weakness out of the markets. What is this, Thursday? Yeah, today's Thursday. Wednesday, Tuesday, Monday. So we made Monday a rejection point, guys. So now we need to look for Tuesday. I'd look for 503 on the SPY. Look for 503 in the S&Ps. 61. Sorry, I'm just trying to get my stuff going here. Alright. Got the SPY up. Let me get logged in. I literally just put in NVIDIA for my login.
The future is now open for investment.
It's so funny.
It's Blue Chew. Blue Chew?
All right, man. Let's do this. Let's get ready. All right, so where are we at? 848 right now. 848 on NVIDIA. 848. 848. You know, personally, I want to see if we get a pullback and then try to get long the pullback into like 860. You have this minor level here at like 854, 855, but I'm not really concerned about that level too much. You know, it's a tough one today, guys. It's a tough one. It's a tough one. So Tesla, okay, Meta. I was wanting to look at Meta real quick. It's 9:25. We have 5 minutes left. I did not write Meta down yet. I have not traded Meta in a long time, so forgive me. Yo, those AMD calls are going to be trashed. Again, don't live in the past. It's not a good look. All right, we learn from the past. We don't live in it. So we've had 23 views so far. We have no viewers right now, I don't think. All right. Meta's strong. Okay, Meta's up on the year. I kind of just deviated from this 20-day moving average. I was looking at this level here, even 497, 498. Yeah, 498. Yeah, 498. 498. 498. I just don't know if, like, what I really, you know, I think I'm just going to wait and be patient. I think yesterday kind of messed me up a little bit, but I would like a pullback. I just feel like they're going to do this right now and not give us anything. So, so for me, man, you know, it's going to be tough here. It's tough. I think Meta has a little more upside, you know, pull back to like 498. I think it needs to pull back in the near term and maybe pull back down to test the yesterday's close. All right, that's just my opinion. I think it needs to test yesterday's close. Does it? I have no idea. You know, it looks like right now what it's doing is testing the close from Wednesday. So up there at like 500. Maybe look for a pullback off of 500. That's what I would look for on Tesla. It's like 499.68, 499.75. Look for a pullback, which it looks like it's already doing, but I think it's got a little more ways to go. This just sucks, man. I hate the position that the market's putting us in. It's just some of these times where you have to be patient and wait. Nvidia, maybe puts, but I would like to get the long. I just don't think that's going to happen. We have 1 minute and 50 seconds. I don't know what I'm going to do, guys. I really don't. Maybe we can look for a pullback on Nvidia. Today's a little weird. What is that? 854. Maybe you look for a pullback and a long. But you know, you got to ask yourself, what's the SPY going to do? Is the SPY going to jump up to 503? And that's it? Like, the SPY is flat right now. So, we'll see if it can hold this level that it's at right now. And we'll look for SPY 503. It's just a tough environment right now. SPY is just sideways. We'll just go where the volatility is. That's the best we can do. Alright. You know, I'm just going to take it for what it is. I have Goldman Sachs, Meta, AMD was our short yesterday for anybody that just joined us. Which I... Let's see here. Let's see here. What's up, man? Good morning, buddy. It's a tough day today. It's a tough one. I know Apple has been a little volatile. Yeah, I just don't have anything. I really don't. You know, maybe this pullback on Meta, my target down here, 490. Oh my God, that's so loud. And look, it just pushes. Yeah, guys, like I said, I don't really have anything. Let it push up there, 505 or so, if you can get that. Let it push up to 505, and I'm going to look for a pullback off this 505 area right here. Right there. I'm going to miss it. I feel like I'm going to miss it. I'm going to miss it. I'm going to miss it because I keep playing around with my stuff. Oh my gosh. I'm going to miss it. Alright. So I'm going to look at... Dude, this thing is just cranking to the upside right now. Be careful. All right. Let's see. There it is. We'll look for a pullback to 500 or so, if it even gives it to us. This thing just really strong right now. Really strong. Look at the volume on that. That's pretty crazy. That might be the not not the correct move, guys, on Meta. The SPY pulling back. Meta's very strong. I hate fighting trends like this. What's Nvidia doing? Nvidia's pulling back like we thought. Okay, so what we could look for here is a see if Meta can get a bounce right there and try to bounce up to like 860 possibly, but be careful. I don't really have too much, guys. I really don't. I don't have too much on my watch list today. I need to see some things. Goldman Sachs wanted to get that pullback up there at 407 area. Just have to watch the Dow. Okay, you have to watch the Dow for the rejection on the Dow to get, looking for your follow through. So that's up there at the 20-day. So these are all ideas, right? Pullbacks, pullbacks, pullback. Come on. Oh my gosh. All right, I'm just gonna go with Meta. All right, it's already pulling back. I knew I was gonna miss it. I knew it. Oh my goodness, I missed it. I can't believe I missed that Meta put. I cannot believe I missed it. Unbelievable, God damn it, motherfucker, yo. I could just get sick right there. I cannot believe I missed that. I cannot believe I missed this, bro. You gotta be kidding me. I told you I was gonna miss that meta short. Told you I was gonna fucking miss it. See if I can get another opportunity at it up there. I tried. I was just a little slow there. I tried. I'm trying to get short, man. Guys, I'm trying to get short on meta up there. I think I'm. I tried getting short up into that level right there at 503. I feel like I may have missed it. I'm gonna be a little patient here. I need to look at the S&Ps and see what they're doing. Come on, bro. I missed it. I feel like I missed it. I missed it. Just looking for a pullback, man. Just looking for a pullback. I cannot believe it. Yo, it did it so fast, guys. These contracts were at 260, 270, and now they're up to 3. I'm not doing it. I can't do it. Not when it was right here, and you're talking I don't know, $40, $50 premium, $30 premium. Yeah, almost $50. There's no way I'm spending $50 a contract on 502 to 503 on a dollar, guys. On a dollar. Go ahead, please, Meta. Just go test the damn highs again. I'm not going to sit here and do this. Let it go higher. Please, please, just go higher. Go back. Put in a nice little double top there. It's going to reject VWAP again. It's going to take this trade from me. Fucking asshole. Just get one more try up there. I'm looking at the 495 puts. Dude, the asks are not going down. There we go. There we go.
Shares of Tesla falling to the lows now, 149.48 down.
All right, let's see here. Let's see what we got. See what we got going on, gang. Let's get it. Just so you know, I'm in that. I'm in these puts right now. I'm gonna just take it as it gives it to me. Let's get this pullback. Come on, Medi. I know you can do it. I know it's not, you know, it's not looking too. It might have a little more room to the upside. A little bit more room. I just don't know if it's going to give it to us. So if I get like a 315, 320, here it goes. It's going to fall out of bed. Rejection of the VWAP away. Let's go. Come on. Come on. VWAP away. Let's get that rejection on. Even if you want to pop back up, that's okay with me. Let's take a little profit. It's going to try and pop here. That's all good. I'm okay with that. I'm okay with that. The volume is down. I don't know if there's a whatchamacallit or not today. Like an upgrade, downgrade on that. Taking your profits. Taking your profits. If you got any. Not sure if you just market ordered in or not. Not sure if you market ordered in or not. Oh my goodness. Live chat. It's hanging out. It's hanging out a little bit too long. There we go. That's what I want to see right there. I want to see that. I don't want to see an increase in volume. It's going to try and pop. What's the SPY doing? Meta's very strong. You don't want to, what do I think about ARM? I think, I'm not sure. Semiconductors as a whole, we're pulling back. I know NVIDIA. Just look at NVIDIA, all right? Just look at NVIDIA and then, you know, shit. I was actually looking at NVIDIA today. Let me, I was wanting to get a bounce back. They're just really weak. You got a lot of volume coming in here. Shit. Where you at, Meta? ARM, you know, it's a good company. Are you asking for long term? Or are you just asking for a trade? You might be able to get another opportunity up there. That's where it was at, guys. That rip up higher. Look for that pullback. That's a nice trade there. Really nice trade. It's just relative strength with Meta. Again, I'm looking for 498. Now, here's the problem: is if we can get another pullback down to 500, now you're finally above VWAP and holding. You might. Let's go. Give me that rejection up here. Let's go. So I'm looking for 503, 505 area for rejection for anybody that's, you know, wondering what I'm looking at, what I'm doing. Short Meta up there at that area. Just looking for, again, I'm only looking for like, you know, a 500, 495 area is what I'm looking for. Pull back to 495, 500. But ARM, you know, a lot of relative weakness there. Not relative weakness, but you're pulling into the 100-day. You should look, just watch the volume is what I would say. Don, I would look at the volume, you know, and see if it can get a bounce back. You have a lot of people that are probably eager to sell, and we were talking about this a while ago. There's a nice move there. That means just look at NVIDIA, and that should be your leader, right? Leaders lead, laggards lag. So semiconductors are just weak right now. But we're getting a nice bounce here off the 50-day, and this is what I was looking for on the video, was a long to like 862, 865. Meta's going, guys. Take your profits if you were able to take that. Don't just hang on and try to like, you know, try to be ice cold, like you know exactly where things are going to turn around at. Because it could just sit there and sit sideways, okay? Meta could sit up here. It still has a little more room to the upside. Just a little more room to the upside. Let's go. Come on. Just give me that. Just give me that level right here. Just give me 5. Armed, you'll have to give me 1 second. You have to give me 1 second. This thing's just putting in a crazy bull flag. So I've got some profits off on Meta there. Let's see if we can get another little pullback. There's just really no volume. It's trying, but there's no real volume to the downside. The stock is strong. That's what I don't like about this, is that you're fighting the trend. All right, the stock is strong on the year. Fuck, I wanted this. So I wrote an 850 long on a video on my thing, and it went down to the 40s. Okay, so there's a rejection. No. All right, so Nvidia, let's see if we can't take it back to 860. That's what I'm gonna look for. That's some serious sell volume there, though. But I think that obviously came in on the reversal. So, damn, they went 600. Damn, that's crazy, bro. There's no way. There's no way. I'm gonna miss this move. I'm gonna miss it. I'm gonna miss Nvidia. Motherfucker, yo. God damn it. These are big swings on Meta. Like I said, Meta might need a little time, guys. Just give it like till 10 o'clock, 10:15. That's what you want to see right there. That bounce with low volume. I'm thinking about grabbing some more here. 495's fuck. I'm not going to be able to get more. Come on, just... Oh my god. I was trying to grab some more up here. Just be careful, though. Don't try to be a hero with this. If you get paid, take your money. The markets are bouncing back. I would expect, you know, because what could help Meta out is the fact that the SPY is on its way back to 503 to test that level. But I think it's almost time for Meta. Like I said, around 10:15 or so, we should see a nice little pullback. I gotta pull up semiconductors. Oh yeah, absolutely. Yeah, I do like the company. I really do. You know, it's just, here's the thing. It's just the sentiment right now is the worry about this war in the Middle East. You know, earnings. But I think you more so have the worry of this Middle East escalation, and that could really have things hit the fan. What I was going to say is I've been thinking, like, you know, I've been wanting us to get a nice move back, and I thought we could get that bounce back to the 50-day, like on the SPY and stuff, but the market's telling us, like, it just speaks volume when this stuff happens. When we just get crushed like that and sell off day after day, consolidate, bang, another sell off, like, that's telling you everything we need to know. So if you guys, you know, don't know how long you guys have been doing it, but you'll see that, like, you know, that action right there is telling you everything you need to know, and it's time to just take some profits, Financial conditions are going to start tightening. And this is the chart, right? This is the SPY right here. This is pretty much financial conditions. Put in that little double top there in the markets. Tried to rally to a new high. Sell off. That's liquidity. All right? That's what that is. That's liquidity. All right, let's see here. Let's see the volume dry up a little bit here on this pop. See if we can get these things cheap again. I don't want to try to be a hero on this either, though. Because I don't want to be... Come on, it might have a little bit more to go. I think that was it. So the resistance level is actually up here at 510. 509. It's a big move. Just looking for a nice, like, just to get paid. Nice little scalp, pull back. I need to all right, 495s. I really think that's it, though. I do. Come on, give me one more pop back up in there. Give me one more pop. Hit that level right there. Bang. Now pop yourself right back up in that level so I can get in. Damn it. It didn't do it. Shit. I wanted to add there, guys. I was hoping that 504 was going to hold and get another little pop back into that level at 504 right here. It never held. I was looking for like a little, like, just another little, like, and then failed back down. All right, didn't happen. Then it just didn't happen. I think we can still go. I think we'll still test that level, though. I do. Now think about that. That little move there paid $50 for the most part. $40, $30, 35 a contract. You know what your delta is. Know what your physical stop loss is as far as money is concerned. You buy 10 contracts, you're going to lose $100 or make $100 pretty quick, or 1,000. Okay, like, you buy 10 contracts, that's $100 for every dollar or so. So just understand what you're getting yourself into. Don't need nobody getting hurt. That's a nice move. That's all you need. 10 contracts right there, $75. Get yourself a little $500, $600, whatever. I never got my entry. Again, I'm telling you guys right now, I really think that we're going to get this pullback down to like 500. I want to go back down and test 500 again. We'll see here. Let's see, because this has a nice little bull flag, or whatever you want to call it. All right, nice little bull flag there. It's a nice little breakout. See if that trend line holds. See if it holds. You have VWAP lined up with it. What else do we have? I'm not taking the long because it's overdone. The minute you take the long, it's going to reverse. They're trying to suck you in the long. So I'm not falling for it right now. Let's see here. Let's see what happens here. Now you're above VWAP and trying to hold. See if you get a rejection. So 32. See if you get a rejection here. And then you want to break VWAP and turn VWAP into resistance, right? You want to make 504 resistance. Okay. Now you need to break. This is the next thing. You need to break VWAP. Or it tries to have a failed breakout. Or it just goes higher. The volume in the S&Ps. The volume in the S&Ps is like... looks like, what would you guys say? A little bit better than yesterday. I should have bought some 503 calls. That's what I should have did. Oh my gosh. Let's see here. See how the volume's just falling off now? I'm really upset I didn't get that opportunity again at the low 200s. That really sucks. I was really hoping that level would hold for like a minute, and then it just failed, but it's a nice tail off there. So we opened up. This could be a 510. Yeah, 510's probably our number. It's probably where Meta's trying to go to. Yeah, that's crazy. crazy. There's no way.
Coming up is existing home sales for March, 4.2 million expected. U.S. leading index minus 0.1%. That's coming up at 10 a.m. Eastern time in about
We're a typical middle
2
class
minutes.
family. We have a budget. We need to be aware of where our money's going. And the great thing about Renewal by Anderson was they actually had several financing options.
I'm really upset that I was not able to grab some more up there. That just sucks. I'm going to take, if we get a little extension here, I'm going to take I only have a couple left. I think, you got to watch for this holding. I still think with a little bit of time here, like 10-15, I just don't, here's what I don't, I just think you could have a bit of relative strength if you get the SPY to pick itself up. It's just, it's going to start holding, and, the A2R is going to add up with 510. It's going to, it averages $10 a move every day on a light day, 15 or $10. So it's either 506 to 496 or 5 to 510. Right? That's either the move. All right? Let's see here. So like I said, we wanted to do what? We wanted to make 504 resistance. Now we want to break VWAP and make it resistance. It can't. It just can't make VWAP resistance. So, all right. Watch the 1 minute. See if that 1 minute trade line breaks to the upside. Let's see. There you go. Very nice. Very nice. You need that extension. You're not getting no volume out of it, though. That's the thing. You got to watch your volume and how it reacts, busting off of those levels. Like, you see how we're taking it in stages right now? You had that double top up there. All right, you retested 504. You couldn't hold it. It quickly broke it because I was seeing if it was going to hold it to try and do like a fake pump back up to the 20-day and get short again. But it broke it. Now look, what it do? It tested VWAP because VWAP was resistant, made it support. All right, it never held 504, so we pull back to VWAP. Okay, still support. Where's our resistance? 504. Okay, we cannot get through it. So what do we do now? Now we see if we break VWAP. We got to break it. Got to break it, right? Take it in stages. See, somebody's going to give up one way or another. Somebody's going to give up. The volume sucks to the sell side, so, if you're not taking profits, you need to. Let's see. It's got to go now. Right now, it's got to break. You need this right now. You need it. You need it right now. You need this thing to just go boop and pull back. You need that pullback like right now, coming up. And it's 10 o'clock now, so you have data come. What'd I say? What'd I say? Let's go. It's all about, understanding what's going on. Is there a website I could find calendar of companies' quarterly financials reports today? It should be on your broker. Could be on your broker. See how this downside though is there's not much strength to it. I'm gonna take the rest of that off, guys. I'm out of meta. I'm taking the rest of that off. You're not getting any follow through with this right now. So, well, okay, there you go. Of course, right as soon as I take it off. Yeah, you can just go to Earnings Whisperer. You could go to Earnings Whisperer. You could go to like Google if you have Google. I don't know, if you're in the U.S. I'm not sure what state you're in or not. If you're out of, United States or another country. All right, so here goes NVIDIA. I need to get. Let's go. Come on. All right. SPY. All right, so the SPY ran up to 501.50, pulling back. You had some Iran talk that like, hey, we're ready. Israel decides to throw something at us. We throw the shots right back, and we have targets locked and ready to go. All right, so there was a threat this morning. Let's look at Goldman Sachs because I was looking at that to see if we could get a pullback if the Dow decides to pull back. Let's go look at the overall market real quick. All right. So we're mixed. Everything is mixed right now. Everything is mixed. Meta's up. Meta's strong. Taiwan TSM is down. We said we were looking for that one level. I never wrote it down, but TSM, we were looking. Look, right there. That was our target. It's already there. That circle. So it's already there. I wouldn't expect much more out of it. Come on, man. When I push backspace, I want you to freaking get rid of it. Look at that little hidden volume in AMD. AMD is done, bro. Let's look at NVIDIA. Come on, man. If we can get semiconductors to really start to roll over here, you have, guys, I don't know if you guys seen this or not. NVIDIA has a head and shoulders that with this retest on the daily chart, you could start to see some real downside. All right. It's an ugly head and shoulders. All right. It's not pretty, but that's your neckline right there at like, you could call it, you could call it 840. But you could also say that neckline is also at 850, like 851, 852. All right. I mean, I don't know anybody where their left shoulder, or I guess in this case the right shoulder, is way bigger than the head and the left shoulder. But I don't know, So you have. Let's see here. Is there anywhere that we did not make resistance, like the SPY? I think the SPY needs to bounce back because it has areas it has not made resistance. So right here, 860. I'm looking for 860 on NVIDIA. Just be careful with the volume. Look at that volume. Well, that's on the reversal anyway. I'm sorry. That's on the reversal. I'm looking for 860 on NVIDIA, guys. Watch for this to be made support and see if we can't break out the highs. 860, 435. I don't want to buy that far out of the money, man. That's crazy. Yo, they're so expensive. I might have to. 860 will be in the money. That's a $10 move. They could go from 4 to 8. All right, so that's a play, guys. I'm telling you all right now. I'd be doing the 860s right now. Look at that. Look at that bounce off there. That's showing you something. Make sure you have the volume with it. So let's look at the SPY. That's not good. Well, no, the SPY's holding there. SPY's holding there. Just watch for the Qs and or the SPY. Look, the SPY's going to break it. Everything is weak. That sucks. See what I mean? Whether it's going to take time, but nothing can't get up off of the ground. Nothing. And look, you have that 9 EMA right there, right in your way, acting as resistance. So you got to get above 844. Give it a little bit of time. Maybe it consolidates for a little bit. But the fact that we don't get it, we got an increase in volume here to the downside. It's not cool. It's still holding the 9 EMA. That's your entry point, would be that 9 EMA. I just think there's just a ton of weakness right now. So be careful. I don't want anybody to get hurt. Worst thing you can do is not trade and still have your money. Please remember that. All right? Worst thing you can do is not trade and still have your money. There you go. Get that 20-day to lift. There you go. Let's go. You should start seeing some volume start to come in here. Anybody that was short, let's look at AMD. It's just wild. Just crazy, man. This down, I'm telling you guys, just in my opinion, I think people aren't paying enough attention. I know it's only a 3-4% down move, guys, but at least you were able to before be able to get up off of those areas and be able to go up to retest levels. So, all right, so there's another Meta trying again up at that level. It very soon here soon it's going to it should start to give up and give us that 500 level. The more time that goes by, I'm really going to look at a test of that 500 level, and I may try to get in on this. It's just got a lot of strength with it right now. So 510 could be why is it doing that? Why is it moving like that? Okay. Yeah, 510. Meta wants 510, it feels like.
DAL and TMUS, Delta selected T-Mobile as its mobility partner. Delta Apple and Tango Micro Uniform Sandy.
All right, so that's your 20-day right there at 506, 505 or so. Look at that. See if you get this pullback And hold 504 would be an entry point to 510 long. This would be an entry point right here. Your buy trigger right there. This is a buy trigger for anybody that would like to get long. Right in here. A pullback and hold at that level. But I might try to take it short. I know I'm fighting the trend. It may sound stupid, but it comes to, there's a point in time when you can't get up through that level. And then it breaks it. I just think a pullback is... Look at that increase in volume on that breakout. Never mind. Be careful. But yeah, 510, guys, on Meta. If you guys want to take the long, wait for the pullback to 504. All right? Your stop loss would probably have to be underneath this 501.20, 501.22, 501. Make it just underneath 500. You gotta watch the SPY, and you gotta understand you are buying out a high. So let's see here. Is this going to be a failed breakout? I just think it's oversold, but that doesn't mean anything. Or I mean overbought. You know, it can remain overbought. I might try it. Damn, see, there's no volume. Yeah, there's relative strength right there with Meta. I don't know if there's an upgrade, downgrade, or anything. You had the talks with TikTok and stuff. So you have earnings coming up. So yeah, I would look for 510, guys, on Meta. Gotta look for 510. So there's your bear flag. It may just go off of this level. It may just start to go. Let's see. A decrease in volume. Part of me wants to try it, but the volume is so weak.
WISA, another pop here now.
We're supposed to thank some outside U.S. Oh, okay, cool. Oh, okay. Yeah, right now, there's a ton of volatility right now, Don. There's a lot of opportunity. You just have to be careful and pick your spots. I'm still working on like a book, kind of like a pamphlet, like a book to be able to help people like read and just be able to just actually make money at this instead of, there's a lot of people who, they leave a lot of things out. They charge a lot of money for courses, this, that, the third. It's not even really a course. It's just saying like, just showing setups and explaining things and I feel like some of the things that I use could help some people be profitable a lot more. I think it would actually help people make money. Understanding how to read the markets and how to and how to read your charts intraday. When you should be using, you guys will see. You guys will see. I'm working on it. But a lot of them just want people's data and they want to be upsold. Like if anybody paid for anything to learn, whether it's not learn how to trade, but to learn how to trade, you got to continue to give them money, and you don't get a physical good out of it. That's just the game, the markets, right? That's just, and the same people will tell you, we're not the industry, but yet they are the industry, right? They just want to collect people's data, and make money off of it, right? They want to sell your data off to make money for it, so other companies and whatever they do with it, right? So, it's allowed me to consistently stay profitable, and I have a lot of those things in there and understanding how to manage your risk as well. So I'm just working on that, and there it goes. So look, you can look for 510. Did anybody take that long? Did anybody get long there, or did they not get the entry? The SPY held. Nvidia, AMD. I wouldn't look at AMD, but look at the volume on AMD. It's bad. It's really weak. AMD is one of the weaker semiconductors. What's Tesla doing? So I wouldn't mind looking for a pullback on Tesla if we can get it. If we can get this level up there, I said this morning I would probably take a long to try to get back up into that gap, up into 154, but it's not worth it. A $4 move, it's not worth it. It's rejecting VWAP again. I might have to trade the indexes if I'm going to look for another trade. Look, you just made that pre-market, that area right there at 501.47, 501.50. Look at it pull back on the SPY right here. See if it turns it into support right there at 501.49, 47 area. So you guys can see right here, this area right there. Right there. You see how there's this gap right here? This area right there is what I would look for. See if it holds it. See if it holds it. Look. 501.46. 501.46. I'll put a dotted line right there. And you guys can watch it on the 3-minute if you want. Right here. Okay. And there you go. See if it holds that level. Alright. And where do I think we're headed to? I think we're headed to 503. Alright. I think we're headed to 502.50. I'm sorry. 502.50. 502.50. Oh, it didn't hold. See if it turns it into resistance. And look at that volume off the opening bell. Probably trade sideways. So we haven't really moved. Where did we open up at? 501.99. So 502. And we're at 501.50. So we've moved 60 cents. All right, let's do this. If the market can turn it, look, watch it make, see if it turns that area into resistance and you get a pullback one. Like Meta is really strong. I don't know if there's any news on it or not. Yeah, there's no volume there. Nvidia, JP Morgan. I need to. Apple.
Coming up at 10:30, natural gas storage. A draw of 54 BCF.
XOM. GLD was doing pretty good today. Their pre-market. Look at the gap up on GLD, man. We had a nice opportunity. Remember last week when everything sold off? Last Thursday, Friday? We had a good opportunity to get long GLD right here on this pullback. That would have been a nice trade. That would have been a really nice trade right there. What's today? Thursday, Wednesday, Tuesday, Monday, Friday. Yeah, Friday. And I thought about buying this pullback. I'm like, there's our chance. It's giving it to us. It's giving us another chance to buy, to get long gold. But it's all good. It's all good. Let's look at some small caps and see what we have going on here in the markets. 850 support and resistance. Let's see. XPON is selling off. Boeing is really strong right now. Looking for, this could be a nice rejection point up there at 172, like 172, 172.50. We'll see though. Yep, that is what we want to do. We want to be able to buy good companies at a lower price. Alright, I'm going to put a dotted line right here on Boeing. Everything is so oversold. I hate to short. AMD rejecting. I like that name though. Don Draper. The Dawn. It's the Dawn. Let's see. What do we have here? UNH. So you are getting. Look at these solar names.
Located at Hillsborough Urban R&D site. That's INTC. Tango Charlie.
As we head to break, here's our roadmap for the rest of the hour. Shares of Tesla hitting new 52-week lows right now as one long-term bull downgrades the stock, slashes his price.
I wonder if we're gonna start heading back up to that. Well, even though we made it a rejection point, 22 on Palantir. Man, that's some mean volume, guys. Look at that volume right off the bell. That's crazy. You just flushed them out. Airbnb. Okay, these are down. Let's go look at the map real quick, and let's locate what's going on here. So we have Meta that's strong, UNH, ELV, finding some safety on that pullback. Not really safety, but you know, this is a dip buy here where you have some relative strength, and they're taking the opportunity to buy it back. You have room up to 510, 509 on UNH. I would look for 510 area on UNH. Damn, it's already made the move today. That's some serious volume, guys. Look at that. That's what you want to get behind. It's not that crazy, but it is. That's demand. Okay, you guys want to talk about supply and demand? That right there is a picture of what demand looks like. Let me see what they are going for here. Let's see. Damn, $1.10? A buck? It's still early. What time is it? 10:18? I think this thing continues to go higher and higher and higher. This thing might be up 8% today. Along with the gap up. Oh, shit. You're in the gap now. You're making this gap support. Look at that. You see that pullback that it's doing? It's pulling back into the gap at 499. That's what it's doing. Oh, shit. It's already oversold. Are you serious? Damn, that's crazy. I wonder what's really going on at UNH, because this thing sold off like I don't know what. And now it's bouncing back, and it's about oversold on the daily while everything else is it's overbought, and while everything else is oversold. See if it holds this level. You could see a little more downside, or not downside, but you could see upside if that holds. If it holds. Let's see if banks are going higher. They are. Goldman Sachs. Let's look at a 15-minute chart. So I'm trying, guys. Got a little profits off on. I got made a little money on Meta today. Not what I wanted. I wanted to get the original pullback, but I'll take what I can get. All right, so. Okay, Goldman. Where are we at here? All right, Goldman Sachs. Okay, so, man. I got my eyes on Meta. I'm just going to keep my eyes here on Meta.
Near-term downside risk. Basically, Tesla is under tremendous pressure. There's a lot of pressure on the demand side for their vehicles. Pricing pressure, earnings pressure, free cash flow. So, if anything, we've had some...
That is some nice volume it has this morning. It's not crazy like back here. What time did that come in? That came in at 10 o'clock. 15-minute chart. Dude, this thing is...
DGICA, Donegal Group announcing increase in its quarterly dividend.
Potentially even cancel. You do not have this on the horizon anymore. And so now
17.25 cents from 15.5.
See, I feel like this thing could use a pullback to 500. I think Meta needs to pull back to 500. I really do, guys. I think Meta needs to pull back to 500. I ain't gonna lie. I think you need a 500 pullback. This may be stupid, but I gotta try it. Even though there's relative strength, you keep climbing. Because that's an entry point right there. Like, look, you're just not getting any sell volume. If this doesn't hold, we might see some volume to the downside and see the people that were long start to kind of give up. You might see that. You might. I don't think you will. I think you got to look for 510 on Meta. If you're not in it, this is not a trade. I would not trade it because you would have already had to have been in it.
This would have been the model too. If this is not coming, we're talking about the same old lineup for the foreseeable future, with all the eggs being put into the robo-taxi basket. This is not a consumer vehicle. We believe that this creates much downside to earnings and free cash flow estimate for the foreseeable future.
Yeah, well, that was reflected in what is now your 240 estimate, $2.40 for
166.
But Emmanuel, I noticed that your price
8,000, 295, 500. That could be sick. Well, be $1 in the money. A 3.
Our view is with the current lineup of vehicles, the best Tesla can do is around $2 of earnings.
Where's the SPY? I'm really thinking about this, guys. This is, I feel like this is a stupid move to make, but
Continues to come down or volume sort of like collapse. The thing is, it's not like Tesla is shutting its doors. They're now going all in on robotaxi. We do a deep dive on
I think it's going to all depend on the SPY and if it's going to get up to 502.50.
and it's certainly not into our earnings model, but that optionality is very much there. It would be highly differentiated, and we think that we should at least account for it in the
Yeah, the SPY's got some nice volume.
no earnings growth, because in the end, investors in Tesla will basically say, okay, I understand the core business is
Alright, is that a long?
shrinking, but look at how exciting this business could potentially be. Our rating, though, indicates this is highly risky. If it plays out, if they can deliver the robotaxi, is it exciting? Massively exciting. How long will it take to get there? Can you even get there based on technology risk, regulatory risk, operational risk? This is very difficult to say. So we're still applying an unchanged punchy multiple, but on much lower earnings trajectory.
Here's the thing. It's not really going to pay until you get way back down at that level. I'm going to hold off a minute.
With the CEO of CSX, one of the country's biggest freight operators, what he's seeing when it comes to the economy after a quick break.
160. You guys see how we're not getting any volume, and like now AMD is backbreaking the VWAP when you could see clearly you should probably get a test back to 160, 159.25, but there is no you can tell that the stock's not happy to be bought. That they're not like, oh, let's rush in right now on that pullback and buy it, and we'll take it up to like that 160, 180 level. It's just that's not there, and that is the weakness that I'm talking about for some of these names. So, right now banks are strong. I think. Let's look at where is, there we go. All right, so the Russell is really strong today, it looks like. Let's look here. All right, IWM is above pre-market highs.
Shares at the highs of the day now, up 15%. Delta Juliet Tango.
Come on. Look for a hold right there at 194 on the IWM, and I'd be looking to see if you can't get back to 196. Just be careful, you don't have much volume on the buy side. That doesn't mean that it can't go higher, but it means that you could run into trouble at any minute.
Coming up, natural gas storage, a build of 54 BCF is expected.
We would love a chance to frame it for you.
Encore Energy, America's clean energy company, now in production in South Texas, energizing America with reliable and affordable.
The Qs just got back to yesterday's low. That's so pitiful. Holy cow. Oh my goodness. 429 incoming. Probably. I mean, I could see it happening, but it's just when. When and why. Right? When and why. Because the closer we get to Friday, you know, you got to worry about some of these institutions saying, I am not going to hold anything into the weekend. Israel's going to strike. And I'm not coming into a big gap down because shit just started popping off. I'm going to protect my money. So that's why I think even if we get a little bit of upside today, watch out. Tomorrow could be the day. Or later on today, when this stuff gets rammed back to some of these like Monday, Tuesday lows, you could have some sellers stepping back in. Look at the volume. Look at the volume there on the Qs. This is a 5-minute chart. That was nearly 1.4 million, well, 1.5 million shares traded, just under. Last night, I was watching 20,000 shares get sold at a time. There's a 1,200, but that's nothing. I'm talking 20,000 shares after hours, 4,000, 5,000, right? Now, that could be positions that were just, that could be, you don't know what it's for, but still, I just wanted to relay that, that's all. I want to relay that volume that's there. So just be careful. If you make a move and you get paid. Does anybody have any ideas, like any trade ideas? Microsoft, I'm trying to give you guys mine. Like, I was looking at Goldman Sachs for like a rejection up here, but it looks like it's trying to hold. But look at the volume. The volume is really low. Oh, come on. And the sector is strong, so like look at the volume. Not really worried about that. Meta, 510 target there. The volume's falling out of bed. The farther you get up there, it's just falling out of bed. Let's see. Let me pull this way.
Coming up, natural gas storage, they build a
And then it just rips higher.
is the consensus.
I hate to put a line there, but wow. Another rejection on lower volume. All right, let's see if we can get this pull back. I'm afraid that, oh, the volume is decent. What am I talking about? Sorry. I must have fell and bumped my head or something, because
A build of 50 BCF versus the 54 expected on natural gas.
let's go look at names like HP. Look at HP ripping, guys. Rig.
Moving higher now, ticking a bit higher now.
Down. XOM. HP. Going way higher. That's a nice bounce. It's a nice setup right there. It's a really nice setup.
WINA, Windmark announcing multi-year partnership with STX, Whiskey India November Alpha.
Oxy. Sideways. Come on, man.
Yeah, so on the exporter coal side, you're right. Metallurgical coal is in demand, whether it's in India or whether it's in the Eastern Europe, whether obviously for Ukraine, but also
Okay, so insurance, industrials, UNH, copper, gold, materials, industrials. Baba's up. Baba's up today. Sideways. Snapchat. Oh, that's a nice reversal on Meta. That was a really nice reversal there. That was a quick one, guys. That was a quick reversal. I'm waiting for it. I'm gonna be patient and I'm gonna snipe this thing. Nvidia.
at the low right now, down about 3/4 of
Let's see if Nvidia tries to give you another leg higher here with this consolidation. Might maybe try and making it tough for traders to sit in the trade with it going sideways. But out of nowhere, you'll get an increase in volume. Still looking for 860 on Nvidia. Still looking for that 860 level. Right now. It should start to do it right now. Should. If it doesn't, that tells you that it's really weak if you can't get through that level. That's crazy. Fucking $200 for a $20 move. 60, 70, 80, $30 move. That's hilarious. Alright, Coinbase doing really well with the IWM. Nice volume and everything else. You have 219.50, 220. This level, like, right here. Look for VWAP, 15-minute VWAP. What is going on here? That's a nice double bottom, guys. That's a really nice double bottom there. I kind of like Coinbase here. I would love to get a pullback on Coinbase and take this thing long off of like 219 area. I think I'm game for that. Oh, that's not good. That volume. That's not good. Yeah, I don't really see much today, guys. Yesterday was the day, right? Yesterday I was really adamant about shorting AMD. I'm sorry if you weren't with us yesterday and when we called that out, but that was the trade of the day yesterday. It's a tough one because there's not much going on. What are you doing, Stinker? Hi. What are you doing, baby? You okay? You okay? No, baby. You got purrs. I know.
CTRI indicating 2250 on 300,000.
Yeah, we'll go with the Nico Lock baby stones. Nico Lock was the right choice.
What was that about? That pop there with Google or Microsoft.
50% off.
Welcome back. I'm Silvana Hanau with your CNBC News Update. Donald Trump is back in the courtroom today for his New York hush money trial. There are now 6 jurors that need to be seated after one was excused this morning over concerns her identity would be exposed. There are also questions about whether another juror lied during his screening. A new pool of 96 jurors will go through the selection process today. Meanwhile, the U.S. announced new sanctions on Iran today in response to Tehran's weekend attack on Israel. The sanctions target 16 people and 2 entities tied to Iran's drone program that includes executives of an engine manufacturer of a specific drone used in the weekend assault. And Boston Dynamics unveiled a new version of its humanoid robot Atlas. The company posted videos showing the fully electronic robot in action after announcing it would retire the previous hydraulic model. Boston Dynamics says Atlas, which could be seen standing up and walking around, is designed for real-world applications, Sarah.
It's crazy. We could just watch robot videos all day. Thank you, Silvana.
You got it.
Silvana Hanau. Now let's get to the broader markets. Financing activity. Our next guest is in charge of corporate credit. He identifies foreign issuers as one of the key factors driving capital markets higher, and pension fund de-risking helping drive, quote, ultimate demand in the U.S. bond markets. Johnny Fine is back, Goldman Sachs Global Head of Investment Grade Debt. Welcome. Good to see you.
Thank you for having me.
So underlying all of this is that we are seeing this back up in yields again. And I asked in the break whether you think we could see 5% on the 10-year again. You say yes. Why?
I think it's entirely possible. If you kind of think about the trends that have been in place for the last 2.5 years, the market has been consistently too dovish relative to what the Fed has ultimately delivered. We expected way fewer hikes on the way up than we ultimately got. We've predicted way more cuts than are going to ultimately be delivered on the way down. We've gone from almost 7 rate cuts expected at the beginning of the year to less than 2 now. And it's not just a postponement of those cuts, it's a pushing out, and it's also a flattening of what the ultimate cutting looks like. If you think about what the terminal rate is now expected to be, it's gone from 3.1% at the beginning of the year to 3.8. That 70 basis point move correlates almost exactly with the 70 basis point sell-off we've seen in 10s since the beginning of the year. I don't think I'm ready yet to call the end of the trend that's been in place for 2.5 years. So I really won't be surprised if 10s ultimately test 5% once again.
So it's been a story of higher yields, and yet capital markets activity, your world, has been super strong. Why?
So I think there's a number of reasons. I think probably the primary one was in the first quarter of the year, 10s on average were between 4 and 4.25%. And that obviously was elevated, but at the same time, it wasn't the 5% level we saw last October. And also offsetting that,
this thing just
we
keeps
had
messing
near
with me.
record-setting
Like,
tights in
come
credit
on.
spreads. So as issuers surveyed the universe, they said, we don't really like yields, but they're not as high as they were. We
Like,
really
it should not
love
take me this
spreads,
long
and we like the
to
execution
get in something.
environment.
I'm looking at Coinbase right now.
Happy to go to market as they thought about de-risking their liquidity ahead of the election at the end of the year.
So can that continue?
I think it will
230
continue, although
level.
I would say a lot of the issuance that we saw in Q1 was a pull forward of issuers' plans throughout the year. Now, depending on what the quality of the market looks like, depending on where yields and spreads ultimately trend to, that will determine whether or not we go on at a similar pace, which I think is very unlikely, or if indeed we taper and we have a more normalized level of activity.
I was going to say, FT piece a couple weeks ago looked at least frequent issuers doing a lot in the early part of the year. FT kind of framed it as a hedge against election uncertainty. Is it something else, or is that part of it?
No, I think that's the primary reason.
It is?
And we've looked at, if you look at what historical data will tell you, if you look at the September and October of election years and compare that to September and October of non-election years, and we did this all the way back to the year 2000, what you tend to find is there's a reduction in issuance activity that would be expected. There's a reduction in liquidity in the market in terms of the daily trading volumes, and there's actually quite a negative reaction in the spread environment. So history tells us, and the data tells us, that generally that September-October period is somewhat unattractive for issuers. And I think that as our client base looked at that, They thought, yeah, we're going to pull things forward. We like the environment in January, February, March. The yield curve's still inverted, so there's some attractive features
So
to
I'm kind
financing
of cautious
early.
about
I think that was a major driver.
jumping right
You
in
think
this,
spreads are
but
going to remain tight? I mean, there's stories
it's got
today
some
about
relative
pension funds
strength, I
allocating
feel
more
like.
to fixed income. Is the demand going to continue to be there?
I think the technicals of the market are going to remain very robust. I think you've seen pension funds de-risking, moving out of equities,
tough.
moving into
You had to
fixed
be on
income.
this early, I
As
feel
the funded
like.
status of pensions in the United States is roughly 104%. That generally creates some de-risking activity. Our market tends to be a beneficiary of that. In the elevated yield environment that we're in, we're seeing annuity sales
I'll let you
at
guys
much higher
know if I
levels than
do
we've seen in a
anything.
couple
I'm
of
gonna
decades.
go ahead and
That's driving a lot of money into,
look
in
at- see
particular,
what Meta's doing.
long duration fixed income. So I think from a technical perspective, I think
feels
the
like-
market's going to remain on pretty sure footing. Look, the reality is that whenever we've seen spreads at these kinds of levels over the last couple
Why
of decades,
218? If I
there's
push
usually something
backspace,
that creates
why
a
are you
significant
why are you not
derailment
backspacing
wider.
and
You can
clearing it
never
out?
really predict what that's going to be. My guess is that we're going
That's
to bumble
crazy.
along at these kinds
They
of
want
levels
so
for a little
much
while
for this stuff,
until
guys.
there's a real shock to the
It's
system.
not
Do you
even
worry
worth
about
buying.
auctions
You
at
should
all?
be
Just
selling options
speaking
right
more
now.
broadly here about the fixed
I think
income
it's time to start selling,
environment, Sarah.
selling
You know, we watch
premium.
it closely in a way that perhaps we
They-
wouldn't
they
have
want way
previously.
too much.
We had a good
You want
20-year
$300 for a 230
Look, it
call.
was a series of
300
auctions and stories about deficit spending and increased
For
issuance that drove us to
300
5%
for
last
230.
time. My guess is that we do
Like,
see
get
that
the
happen again. I think that the market
crazy.
will be intently focused.
That means if it does
on how
try to go
auctions
to that
perform,
area,
what
it's
tails
still
look
not
like,
gonna
what
pay
bids to
you.
covers look like. And I would imagine that in one bad auction, we see a more meaningful move higher in yields. I think that should definitely be on the agenda as something that people should focus on and be concerned about as they think about the next several months.
A failed auction?
Not necessarily a failed auction, but one where ultimately there's a knee-jerk move wider as bid to covers are low and tails are long.
And then what? Then are we in a new regime of higher rates because we're worried about how much debt we have to issue?
I think we're already there. So I think we're in that higher for longer regime. I don't think there's going to be anything from either political candidate in November that is going to change the outlook from a deficit and spending perspective. So I think the market's going to have to get to grips with there being elevated issuance levels for some time. Perhaps that ends up coming a lot more to the front end of the market. Retail's been a very large buyer and now holder of short duration treasuries. So maybe that's an area that ultimately can mop up some of this supply overall. But yeah, it's definitely a key focus of mine. It's a key focus of the clients that I speak to on a daily basis as well.
And mine, too. I didn't even get to the Treasury capital inflows data that we
No.
got for February, but Japan
we won't
was a
stop
big
focusing
buyer.
on it.
Thank you,
If
Johnny.
Johnny says we have to, then
Yes,
we got to. right?
Exactly. Johnny Fine, thank you from
Thank you
Goldman.
very much.
After the break, what to do with Netflix shares here. They've outperformed on the year ahead of results coming in just a few hours. We're going to help get you ready. Plus, CNBC's first ever Changemakers event is kicking off in New York City today, where you'll hear from leaders including the principal dancer of the American Ballet Theater, Misty Copeland, Secretary of Commerce, Gina Raimondo, Commissioner of the WNBA, Kathy Engelbert. You can scan the QR code right there or visit cnbcevents.com/changemakers for more. Some great conversations all day at that event. We're back in 2.
Did anybody take that 310 or 510 meta? There you go. There's your call. There you go. Bada bing, bada boom. I would be taking profits up there. You probably got a little bit more room, but 510, that's it. Target hit. Bada bing, bada boom. Nice location of a relative strong stock today. We located what was weak yesterday, which was AMD short side yesterday, and then along with the others we gave you. I gave you the Goldman Sachs at lunchtime for a higher move. Okay, come on, baby. And there you go, 510 Meta. Bada bing, bada boom. It's as easy as that. If you get paid, give back to the stream. That's all it is. Doesn't go to me, it goes to the stream. Abby, I'm getting you food. I'm going to go feed my cat real quick. I'll be right back.
Welcome back to Squawk on the Street. Take a look at shares of Netflix have reversed actually up a bit today. Of course, the company will report after the bell. Our next guest, keen on strong engagement and higher industry pricing. Alan Gould from Loop Capital joins us. Has a buy rating on the stock. Price target 700. Alan, good to have you here.
Nice.
What are the trends that give you confidence going into the earnings print where you think it's going to be a good one?
Yeah, two things. Number one, Nielsen comes out with some monthly data on share of television consumption. Netflix was at almost 8% this quarter, second best quarter they've had. Secondly, Netflix has started giving out weekly data on the top 40 shows or top 10 shows in 4 genres, and that trend's been straight up since November.
The commentary on the call can often sort of whipsaw the stock,
Sure.
Particularly if it comes to something like margins or content spend. What are your expectations there, particularly when it comes to margins?
I think margins will go up again. I mean, so last quarter, which was in the first quarter of the year conference call, they raised their guidance on margins from a 22 to 23% range to 24%. It's very unusual for a company to be raising guidance the very first quarter of the call, the first quarter of the year. If you look what's happened, the sub expectations are higher, which means revenue will be higher. If you have higher revenue on the same cost basis, you should have higher margins. Also, Netflix's biggest cost is its cost of its content, and it amortizes that content over 3 to 4 years. So about 2/3 of the cost for the year is already known because it's based on the content they bought in prior years. And as you know, we had the strike last year, so they didn't buy as much. So I think margins go up this year.
What do you think's happening in their film strategy? There's been some executive shuffling. Everyone's talking about the Tyson fight. I mean, are they really trying to change the direction of the boat?
Well, film hasn't worked for them that much. I mean, if you look, Netflix's TV shows are what everyone talks about. Very few people are talking about Netflix's films. So they were spending a lot of money. They were producing a lot of films. They're going to spend less, produce fewer films. Yeah, eventually they're going to get a film that is the same quality as a Stranger Things or gets the same hype as a Stranger Things. But they just haven't succeeded on that yet.
Is it still hit-driven with the shows and with the subscriber numbers? And what's fueling it for them right now?
It is to some degree hit-driven. Netflix, to me, is less hit-driven than the other streaming services just because they have so much content. There's always something for somebody there. This quarter, they actually had a few shows that were quite strong. So, yeah, the hits certainly help.
Obviously, the domestic sub numbers are not really expected to grow very much. It's more about international. So what are your expectations in terms of the numbers they may put up there?
Yeah, so we're at 5 million sub increase for the quarter. I think some of the whisper numbers on the buy side is as high as 7 or 8 million subs. Keep in mind, Netflix instituted its charging for password sharing in 2Q last year. And then 2Q, 3Q, and 4Q, they beat the street's numbers by about 4 million subs each. This will be the last sort of easy quarter on that. And by the way, they are still benefiting from the crackdown on password sharing because first it was just on the TV sets. Now they're cracking down on mobile. So there is a glide path here.
Alan, appreciate your coming by. Thank you.
Thank you.
Coming up in the next hour, the CEO of Walmart-backed Ibotta, the digital marketing company that handles promotions and cashback rewards, going public today. After pricing above the range last night, we're going to talk to the CEO on Money Movers at 11. And also, still to come, what a partnership with basketball star Caitlin Clark could mean for Nike, which has firmly underperformed on the year. We're going to discuss when we come right back.
Sorry, guys. I was feeding the cat. There you go. You got your 510 on Meta. That was a nice trade there for anybody that took it. Bada bing, bada boom. That's all it is. That's all it is.
Five.
When is the Caitlyn shoe coming? That's what I want to know.
Well,
Caitlyn
we'll
won.
see. We'll see.
Maybe when she goes pregnant.
Keep watching.
What's up, Matt? How you doing, buddy? Goldman Sachs, that's, I would look for the reversal now. Well, this area here, I think it's just consolidating. Look at the volume today. The volume's really low. For the most part, I would hold off on it. I would just watch 410. Watch 410. If you get a little pop in the 410 rejection, look for a 410 rejection. I'm not sure if you get all the way up there. You could. So this sector is kind of strong today. Insurance, JP Morgan, Bank of America, they are kind of going up today. So you know, I took a quick short on Meta on that rejection of the 20-day, and I don't know what I'm going to do now. I really don't. Here's what I would say. Let's go look at Goldman Sachs. Let's just pan it all the way out. Let's go to a daily chart. So it performed the best off of earnings. It had good earnings, and it performed the best. You got this really nice gap up, but it sold off the next day. I would sit here and look at the support level that's here at 405, 404.50, and I would look at that, you know, as a hold, and then its next location would be up there. See, I would look for the gap fill. Okay, gap fill at 410, especially if the market, just watch the overall market. If the overall market can go higher, and it can get past, which it looks like it is. I was looking at 503 for the SPY, and you cleared that. And it looks like you already made 503 support. So then I would look for the top of the range on the SPY at like 505. That's a 2-point move, and see, you know, if you are able to get above. See if you are able to get above that level there. Me personally, I would have to look. Let's keep going up. Hold on. I would look for a rejection if you do get up there at like 410 or so. Once you get this gap fill, it's at 409, it looks like. So it looks like it's struggling right now. It could just sit here and pull back to like 404.50. I think it's range bound. Look at the volume. See how there's like no volume? How the volume really fell off today compared to the last couple days there. So there's just no volume on Goldman today. So I really probably wouldn't look at it. That's what I would do. Or if you do look at it, like your expectations have to be really low. You know, because as much as I would say, yeah, let's look for a pullback, well, you know, the pullback may only take you to 404.50. It might take you $1.50. So, but as long as you can't get up above that level to hold it. That's the level I'd be watching from last week's pivot low. Watch 407. If you do get above 407 and can hold it, then I would look for 410. I doubt that that's going to happen though. So I would it'd have to be a no trade for me. I want to see if we can get a pullback on Goldman Sachs to fill the gap down at 400. That's ultimately what I like. That's what I like. But I think we need the markets to pull back for that. So that's my opinion. I would it would be a no trade for me. I just think either 410 or 400. Right now, you have not gotten above. You got above 407. It never held. So which 407 would be the 20-day moving average. If you do get back above it and it does hold, then look for 410 maybe tomorrow and next week, Monday or Tuesday. But I would just caution anybody to just remember that, the closer we get to tomorrow is the closer we get to the weekend with a possible attack from Israel. So you could see a day where they really start to take profits before the weekend. So. But outside of that, I don't really have anything for Goldman. I have it wrote down here this morning. I know it just never. There's just no volume. It's just not doing anything today.
Just this week alone, which has been just awful for a name that is down almost 40% now on the year.
Welcome to Schwab. Welcome.
The average of analysts right now. They said that overall that they believe the lower price vehicle that's typically referred to as the Model 2 will be pushed out until late 2025. His buy rating previously was predicated on that car arriving as soon as possible. So this lower price Tesla is expected to really help boost their total addressable market. Tesla obviously needs the overall delivery boost because it just saw its first quarter deliveries fall about 9% year over year. But they said that delaying the Model 2 will cause significant earnings and cash flow pressure beyond even 2026, leaving self-driving robo-taxis to pick up the slack. They're also working on these self-driving vehicles. Those are expected to be unveiled on August 8th, but there is no guarantee they will be ready any.
I just took a quick scalp, kind of like a scalp on Meta. I took this pullback here on Meta, right here off the 20-day moving average. This was a nice trade for me. And then we quickly realized right there that, you have a nice flag here that I called out after that short early in the morning. I called the long to 510. I didn't take it, but really certain with the volume and everything that 510 was our level. You might even get more out of this. You might even get more. But that right there, Meta 510 was the call out. Me personally, from what I seen, there wasn't anybody here, really. I think there might have been one person. I'm not sure, but I just took I took pretty much like, that pullback on Meta there. This thing was setting up really bullish. I was looking to be long Nvidia, but these premiums are so high, it may be worth just selling instead of buying. Like, they're looking at $300 for like a 380 call. 80, 50, 60, 70, 80, and you want to charge $3 for a $40 move? Like, what? Like, look, well, okay, they must have went down. But still, $370 they want $350 a contract? You're crazy. There's no way. There's no way. Those things will be worthless by tomorrow. Worthless. That's why it's a good time to sell. I would sell them. I would. I think Nvidia goes higher. I think we do get somewhat of a small relief bounce, but I mean, bounce is an understatement because I don't think anybody's going to be in a hurry to buy this market anytime soon. All this is going to allow anybody who didn't get in or anybody that did not sell, it's going to give them an opportunity to sell here this afternoon. So I would look for some of these names to go a little higher and, possibly a good time to start selling spreads for anybody that wants to sell spreads. I really think so. Like my opinion, that's not too bad of a deal. You're talking $20 versus a $3.50 move. Like you would have to get to 873.50 for your break even. And I don't see you going past, you might, but I guess it's not far. I guess this thing is really volatile. I think it's expensive. I do. You know, I just think time isn't on the side. So, if you feel better at like 390 or 380s, you know, maybe that's where it goes, but I don't know. Look at it. Like, look at the volume. The volume's to the sell side. So, wait, why is there an hourly chart up there? So those and those meta puts, like, they were paying quick. Like, they were going from like 360 to, or 260 to 330, 320, like quick, like a dollar 50 move. So, man, I just don't think we'll get that type of volatility now because it's later in the day. But we'll have to see what happens today. It just stinks, man. I really am upset that with yesterday. So I mentioned this morning. I've done so good for myself the past 3 weeks. Just, you know, sticking to the analysis. I could have done a lot better. I could have taken these positions and held them. Today when I came in, the analysis was just, it was just looking at the charts. It was just like nothing was really there in my book. But yesterday with AMD, I found myself, even with like KRE and AMD yesterday, you know, just buying a few contracts, you know, knowing I'm probably going to lose money, but wanting, you know, talking myself into spending money on something that, like, just in case headlines come across that, like, we're not, like, I don't think Israel is going to change their mind, but, like, something to just help the market out. And, you know, I just need to not do those things. I need to wait, because it's better to wait for that to happen instead of trying to anticipate it. Like, I was just making money, so I'm like ready to spend it on something like useless. Like, so I need to not do that. And I noticed that yesterday, and specifically this week, that I put, and just because it's small and it's, you know, that doesn't mean I need to do it. So I kind of am upset that I did do that yesterday, but then again, hindsight's 2020. Something could have came out and said, you know, maybe we'll try to talk or do something, and this market would have ripped higher. But again, hindsight's 2020. I knew that those AMD calls were going to lose money yesterday. I just feel bad for anybody that took them. I tried to say it. I tried to say, hey, look, I'm going to lose money on this. Don't do it. But I don't know. And I guess that comes from, you know, having a good couple weeks. We'll see what we can find today into tomorrow. I'm going through the scanners right now, and I'm browsing through. We'll see if we can find something.
The valuations are a little bit more attractive should we continue to have bumps in the road. So sticking to energy and financials, I think, would be a little bit more prudent in this market.
Yeah. I mean, at some point, AI, you know, that AI arms race and the AI madness and craze in a good way, you know, we're not going to not have AI anymore, right? So maybe there will be a time for that. When? Next year? Or, you know, are you going to look for that? And when that happens, you'll get back in?
Absolutely. I think it's a function, not so much if AI is real or not. Obviously, it's real. It's a function of the valuation that you can enter a stock. And we don't find these stocks right now attractive enough to put new money in after we've had an amazing run up. Even with the pullback recently, the last 12 months, the S&P is up nearly 20%. I think I think it's a function of if you can find a right stock at the right price, and Nvidia would be one of my favorites, but I think the valuation right now is a little bit too rich for us.
We could look for a
When the
pullback
market
here. You just
pulls
have to
back
watch
a
because
few
there's a lot of
days the way
volume
it
to the
has,
upside.
do you say if you're
Um,
big picture or buying the S&P
Boeing,
500
you
or the
could
triple?
possibly look for a pullback here. I wouldn't do it now. Let me just say this: don't get them now. Don't buy the puts or anything now. Don't try to short it now, because what could happen is this thing could just sit here and just trade sideways all throughout lunch. I would just keep your eye on it for like tomorrow, next week, or an end of the day sell off. Like if you notice that like the market's run out of steam and you see some like a heavy increase in volume later on, I would look for Boeing to get pushed back down to like 170.50 area. You might be able to get that. You do have a gap up above you that I didn't see earlier. You have a gap up there at 173 to 173.33. I didn't see that earlier. So, but I think Boeing is getting to the point where it's a bit overdone, but I don't know. Like, when I say overdone, I mean to the upside. But it might have a little more room to go. Again, the trade would be just a pullback, right? Just looking for like $1 or $2, like $1.50, $2, maybe $3. Again, just a pullback off of this level. And I would look for that pullback. I would have to at least get this thing to take me back down to 169, 170. So yeah, that's only like, that's a $2 move. So maybe you just wait. Maybe you don't take it. I don't know. Maybe it's not worth it. I haven't really... The one day that I traded Boeing, it had a lot... It moved really nicely. But I'm not sure if that's going to be the case today. Or now. Walmart's in a downtrend. Amazon... I'd watch this level at 183 on Amazon. 183 to 182.50 it looks like. Yeah. I think that's where Amazon's heading. Right there. It looks like Amazon's going to head back to that level. Oh, it's no problem, bro.
Of Trading Insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Achilles Larea, founder, CEO of Larea Wealth Management. Glad you are both here. We're seeing up arrows. The Dow's up 300. The S&P snaps 4 days of losing. What do you think is going on in the markets, Achilles?
I think we're taking that pause. We talked about the last point.
Look
it's
at that
pulling back right
rejection.
now. The market's
Possible
readjusting
rejection
itself.
coming in up
A
there.
lot of profit taking is taking place at this point, and it's well deserved because people have made 30, 40% in year-to-date numbers.
I wonder if I'd probably just do it on my keyboard. So Amazon is coming right into that 20-day moving average. Why is... Oh my gosh.
digital marketer Ibotta this morning, pricing above the range last night of what was already an outsized IPO, raising over $500 million. Right now, indications look pretty good, 107 to 112.
All right, so yeah, right there. But your resistance level is up at 183. So if you get up to 183, either you're gonna hold it up here. Let's see, it goes up, boom, pull back, held. Yeah, I would see if it breaks above it and you do get to 183 and then you pull back, something like this. This is what I would look for. I would look for like a close today up there. And then like going at when's earnings? Not till the 30th. Up there, and then you get, you know, a nice little pullback there. And then you look for, I'm not sure if you get there, but I think it's just going to sit in this area, like right there, up until earnings. You know, it's not, the candles, it's so weird because it'll be wicks. There'll be wicks here, obviously, but I could see Amazon just staying pretty much in this area here. I could. Let's see how it's going through there? I expect it to get up here. I expect Amazon to get up to 183.
BB BlackBerry shares at the highs now up 4%. Bravo, BB.
Right back down to those lows that we saw into the middle of March. So leading in some ways, getting a bit ahead of price here. But at this point, it looks to me like if we can hold levels up here, again, key levels 312, 112, we're talking that this could be just potentially another longer term buy opportunity in this long term trend to the upside we've seen.
Yeah, look at that breakout there above the moving averages. Final thoughts here on Micron.
Yeah, if you see any weakness in the stock, you see a drop back, a little pullback, I would definitely use that opportunity to accumulate the shares and make a little bit more return on your money this year.
All right, next up you have Microsoft. This has been a family favorite. Certainly shareholders have been happy when they see Microsoft. Your thoughts on Microsoft, which today is at 411?
You know, Microsoft's one of these companies that it keeps reinventing itself. They're gone and made some really good strategic AI acquisitions just recently. So there's another opportunity for growth there. They don't have to create the infrastructure anymore by doing that acquisition. We believe it's going to bring value. It's going to be accretive to earnings within the next 24 months or sooner. We also believe that they're going to continue their dominance in the AI sector. You know, if you're looking for a top AI company, not a lot of people are thinking of Microsoft at this point. They're thinking of the other companies, and Microsoft has a really good foothold in this sector. So we see a nice move to the upside in the 12 to 18 months.
That's good. People would love to hear more about that. I mean, ChatGPT and OpenAI, all of that has been front and center, so people must have paid attention. I mean, it's been one of the great Magnificent Seven. Take a look at the technicals on this one, please, Ben.
We just mentioned in terms of Micron, Nicole, that we were testing a key level, right around 112, holding above it. Very similar pattern in terms of Microsoft. Let's take a look. First and foremost, hourly candle chart in this instance, migration of value to the upside, well-defined trend higher, right? The area balance that we're coming out of right now is around 420, and the area you can see that we're testing is at 405. So still kind of holding above that key level right now, an area where if the bulls are still in charge, you expect them to flex some muscle here. But yeah, coming off those recent highs at around 431, not what the bulls want to see, but still hanging in there pretty well considering, again, some of the broader market weakness. Let's add a little time onto this discussion here. And you can see why I'm still giving the benefit of the doubt to the bulls here, because throughout this process, and we're going all the way back here on this daily candle chart here to the beginning of January, we're talking 2023, and well, here you can see well-defined trend up here, very easily identifiable. 405 is the line in the sand right now. Again, 420 is the area that we're balancing around, testing the lower extreme of, and well, working our way out of it. The bulls want to see this hold. They want to see a new area of value form at a higher level. Let's take a look at where we are relative to the 50, the 200. Much like the broader market here, we've seen a little bit of a dip below that shorter dated, the blue line's the 50. Similar pattern here in terms of RSI, though, as we took a look at with Micron. It's leaking lower, right, back to levels we haven't seen since the fall of last year. So a little bit of a concern, relative strength indicator, leading price lower here, it looks like. But one to watch here, again, at a critical kind of make or break point in some ways. If the bulls still in charge, you expect them to step up at some point real soon here, Nicole.
Yeah, all right. Thank you for that. The bulls need to step in on this kind of when it's crossing over the moving averages. There are opportunities when you see this name trading at this level at 411. Do you buy it here today? And where do you think it's headed?
Yeah, I don't think you're going to get hurt by buying at this point. We're going to see some resistance, of course, as Ben was alluding to. And with that resistance comes the opportunity. Hey, maybe it'll pull back a little bit, but I don't think you're going to get hurt if you buy it right now.
How about NVIDIA, which has had a big pullback? Is that a buying opportunity?
Yeah, I believe NVIDIA is a big buying opportunity. Yeah. Anytime we have that kind of a pullback in that type of high quality stock, you want this to be part of your portfolio. You want to keep accumulating it. You don't go past your allotted percentage if you're a portfolio manager. But at the same time, you should see anywhere between 20% and a little bit higher. Wow. We are being conservative on that number because a lot of people will say, well, it's gone up 70% or what have you. But you still want to be cognizant of the fact that there could be a couple of more pullbacks. There could be some more near-term resistance at this point with the stock. But we could also see something interesting where it allow us to accumulate a little bit more. As we said, the market's kind of taking a little bit of a pause, and so are these wonderful stocks. It's just another opportunity to get in there and be a good owner and make money.
Yeah, I mean, last week I saw it at maybe 839 at one point. I didn't check what the low was, but, you know, and I said, oh, look at this. And then it shot back up. And so it certainly had some volatility lately. Let's hear about the technicals. Ben Lichtenstein.
Well, let's start with a quick look at some of the price activity we've seen, the decay off the recent highs. We saw up around 974, just shy of 975, and how not what the bulls are looking for, but again, similar to the other two that we looked at, possibly just stacking up for this longer-term buy opportunity because we still have a bull trend playing out on the bigger picture. We'll get into that in just a second. Here you can see from the level I mentioned, 974, a series of lower highs coming into play, lower lows, in fact. It does look like some of that momentum here, if we've established a lower extreme at 824, could start to taper off. Maybe we'll start to balance out here around this, we'll call it 850, 60, 870 level. But let's step back from this, look at the more intraday price activity. The move we just identified was this one from 974 down. So you can see somewhat counter trend to that longer term trend up, right? Where we've seen migration of value to the upside, currently testing or establishing a new lower extreme around the balance that's been forming around 910. You've got an upper extreme well defined up around 974. Should we find a bottom here, hold above 720, the line in the sand, well, back through 910 opens up a door for a retest of that all-time high. Let's take another step back. I want to show you what's going on. Another just adding some time on and really solidifying that working
I know
assumption
I
that
was a
we are
little
in a
early
well-defined
with this
trend
one,
up off the lows from, we're
but-
going all the way back to last summer now, around 392 off that lower extreme balance forming around this 900 level. And again, in many ways, Nicole, exactly what the bulls are looking for right now. They don't want to see the price decay from 974 to back to where we are right now, but they do want to see value being established at this upper level, and then eventually a breakout to the upside, new area value forming at a higher level. One more chart for you so we can see where we are relative to the 50, the 200-day moving average. Look at NVIDIA holding that key level. So again, we're at this kind of make or break point for lots of these stocks here. You can understand why they've been getting so much attention over the last couple days. But I think that what we're seeing here more is just investors and that jitteriness, that unease that we feel as you pull back a little bit off all-time highs. We've experienced this multiple times along the way up. Those that have been sticking with this for the long term have been rewarded handsomely.
All right, thank you for all of that, Ben Lichtenstein. Great to see you there on the charts, breaking it down, and obviously I love the little things he writes on there to watch the trends that we've been seeing. Final thoughts here, Achilles.
Yeah, you have to be smart and you have to be strategic about what you're going to acquire at this point. You don't want to be caught too early at the punch, but at the same time, you want to pick the high quality companies. And if you want to start looking at a sector rotation at this point, that wouldn't be too bad of an idea to take a look at some new names, albeit you could still stay in technology and the like, but why not take a look at some different areas and make some money in other places?
All right, Achilles Larea, great to see you. Thank you so much. Good look at the big three today. All the names you know, Micron, Microsoft, and NVIDIA. Thank you, Achilles. Coming up next, a spotlight on Bitcoin. We've seen a recent slide, but don't forget it wasn't that long ago. We saw it near 75,000, and there have been many calls for 100,000. What should we expect? Trading 360. We'll be right back.
All right, I might do it. I think I'm going to try and go for a little longer.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab
She's
Network.
so fine. God damn.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom.
All right, so
At
what
the end of
we
the day,
have
my
here
mom raised 3
What we
children,
have here.
including myself. And so once the client
Making new highs now, $17.10, up about 9%.
So what you have here is another rejection off of Monday's close. So where was Goldman Sachs at? Be careful, guys. Yeah, see it's consolidating. AMD, Meta. Nice candle on Meta. 507.50. I would look for a pullback on Meta at 507.50. It's one of the stronger names, so I probably won't short it. But that rejection off of Monday's close again. That was your rejection point yesterday, too. So watch this level here and see if the volume increases. Like I said, it wouldn't surprise me if they do some dumb stuff like this. They randomly just pull it back. So this level does seem to be holding. You're up 0.5% today. I just be careful out there. Just be careful. You know what's funny? They need to, like Bob Pisani right now. Did you see banks? They're flying today. Bro, what? This whole time, CNBC, y'all didn't say anything about banks flying. It's like, if y'all want to help people trade and like people at home and stuff, what's the point of paying for cable when y'all ain't good for nothing? Like, come on, bro. Like, have those topics instead of Kramer and useless ass Carl Quintanilla. Carl wouldn't want to be ya. Like, throw out relative strength and relative weakness. What has volume and what doesn't?
To improve the humanitarian situation in the enclave.
After the fact.
The answer, again, is not in our favour. The Council adopted 2 humanitarian resolutions, 2712 and 2720. And yet, without a lasting ceasefire, these resolutions, as we warned everyone, remain dead letter. Humanitarian aid workers cannot do their job against the backdrop of active hostilities. These people are unarmed. Not only can they not help civilians, they can't actually defend themselves. We repeat that despite the disinformation being spread by the US, both of the aforementioned resolutions, just like Resolution 2728, contained measures for protecting humanitarian aid workers. And yet, without a ceasefire, they cannot be implemented. Israel's clear out of Gaza has already earned the dubious distinction of claiming the highest number of lives of humanitarian workers. Over 240 people have died, including 178 UNRWA staff. And this clear out is not yet over. The Israeli military is hitting humanitarian convoys, blocking access, slowing the passage of supplies. And yet, Western states are only castigating Israel for these actions if Western citizens die as a result. All calls for deconfliction, which are based on the goodwill of field commanders, are empty. They won't actually do anything to change the dire situation of humanitarian aid workers on the ground unless we have a fully fledged ceasefire. The last question I'd like to put to you is this. Did the international community manage to prevent a spillover of the conflict throughout the region? The answer is, once again, no. The situation on the Lebanese-Israeli border is highly unstable. Lebanon and Syria are being subjected to Israeli bombing constantly. Our Western colleagues, specifically the US, the UK, and France, are to blame for the fact that the Security Council did not condemn Israel's strike on the Iranian consulate in Damascus on the 1st of April, which would have reaffirmed the sacred basis of a sacred principle of international relations, the inviolability of diplomatic and consular premises and staff. This resulted in a new, highly dangerous uptick in regional escalation. The consequences are wholly unpredictable. Such disdain on the part of our Western colleagues to specific states and their rights, their division of the world into us and them, the us are above the law, the them, well, their lawful interests can be ignored. This has brought the Middle East to the brink of a large-scale war. This is what you call effective diplomacy. This is what it looks like. The fruit it bears each time this diplomacy is more victims and more destruction. By the way, another effect of this disdain is despite the clear demand of Algeria that we haven't managed to protect Palestinians from Israeli slaughter. We haven't been managed to end the spiral of violence. Not to mention the fact that since 1948, we haven't managed to help Palestinians secure a fully fledged state. The ambassador of Israel, in his statement, and in fact we knew what he was going to say before he said it, was disrespectful towards ministers from the region who are in the room today, Arab ministers and other ministers. For a long time now, the PR of Israel has managed to say awful things about UN staff, the SG, and today he called the Security Council the Terror Council. This is insulting. He forgot, probably, that the State of Israel was, in fact, established on the recommendation of the Security Council based on a General Assembly resolution. Do you want to cast doubt on this decision as well? Perhaps the Israeli ambassador will answer my question. Did Israel meet the criteria for membership when it was admitted to the UN? A short sideline about history. This is a letter from the chairman of the Committee on Admission of New Members to the President of the Security Council. dated 1948. It's a very short letter. I'm going to read it.
Membership Committee has discussed Israel's application for admission to membership of the United Nations. As a result of its discussions, the committee came to the conclusion that it was not at present in possession of the requisite information to enable it to come to any decision. In particular, it was pointed out in the committee that the General Assembly itself had not yet reached any conclusion on the Palestinian question as a whole. The USSR and Ukrainian delegates declared, however, that for their part, they saw no reason whatever for delaying Israel's admission to the United Nations. The Syrian delegate, on the other hand, expressed his opposition to the application for admission and added that the application did not merit consideration. The Security Council Membership Committee has instructed me to apprise the Council of the above. The committee considers that it will be for the Security Council to decide at the proper time whether to refer the matter back to the committee or take a decision itself.
Then, on the 7th of March 1949, a letter from the President of the Security Council was drafted, transmitting the draft resolution on the admission of Israel. It was transmitted to the General Assembly. Therefore, the mere minimum we're compelled to do, based on all moral imperatives, is to satisfy Palestine's aspiration for UN membership. Palestine has walked a lengthy and agonizing path towards this point. Since 2012, it has enjoyed a singular status at the UN, a non-member observer state. It's one step away from permanent membership. We call on all Security Council members to vote in favor of the relevant draft resolution, which was put forward, as I said earlier, on behalf of the Arab States Group by Algeria. We're convinced that recognizing Palestine and its status on par with Israel will help the long-term settlement of the Palestine-Israeli conflict on the basis we all know well, an international legal basis endorsed by the UN and buttressed by the 2002 Arab Peace Initiative. The goal being the establishment of an independent, contiguous, sovereign Palestinian state within 1967 borders with East Jerusalem as its capital, which would live side by side with Israel in peace and security. It's clear that to advance towards this goal, in addition to efforts which involve the resolution of the aforementioned acutest humanitarian issues, we also need the establishment of a collective diplomatic mechanism. We stand convinced that in such a mechanism, a key role should be played by countries from the region, Arab states, Islamic states. They understand no less, they probably understand better and more than others about how to achieve a fair solution which would be founded on a mutually agreed international legal basis. Of course, none of this should overshadow the immutable importance of a ceasefire as per Resolution 2728. If the resolution isn't implemented, the Security Council is within its rights to impose sanctions on those who violate and sabotage its decisions. We'll be reverting to this issue very soon. Thank you.
I thank the representative of the Russian Federation for their statement. I now give the floor to the representative of the United Kingdom.
Thank you, President. And let me start by thanking the Secretary-General for briefing us today. Let me start by reiterating that the UK condemns, in the strongest terms, Iran's unprecedented attack against Israel, as well as its violation of Jordan and Iraq's airspace. The UK continues to call for de-escalation and remains steadfast in our commitment to protecting and upholding stability in the region. Iran's actions do nothing to advance the prospects for peace in Israel and Gaza. President, the UK condemns the October 7 attacks unequivocally and calls for the unconditional and immediate release of all the hostages. The United Kingdom remains resolved to work with international partners to urgently secure an immediate pause to get aid in and hostages out, and then progress to a permanent, sustainable ceasefire without a return to fighting and loss of life. We also urgently call for the full implementation of Resolution 2720 to protect civilians and enable humanitarian assistance. There is a devastating and growing humanitarian crisis in Gaza. Gazans need more aid, and they need it now. We welcome Israel's commitments to fully open Ashdod port and the Erez checkpoint, and to increase capacity through the Jordan land corridor. We are resolved that the international community will work with Israel to see these vital changes fully implemented. As my Foreign Secretary made clear during his visit to the region yesterday, we must maintain our focus on getting more aid into Gaza and getting hostages out. For our part, the UK has trebled our aid commitment this financial year. We will keep doing everything we can to get more aid in by land, sea, and air to reach people in desperate need in Gaza. President, we support a two-state solution that guarantees security and stability for both the Israeli and Palestinian people. We must give the people of the West Bank and Gaza the political perspective of a credible route to a Palestinian state and a new future, and it needs to be irreversible. This is not entirely in our gift. However, Britain and our partners can help by confirming our commitment to a sovereign, viable Palestinian state. On recognition, this cannot come at the start of the process, but it does not have to be the very end of the process. Our long-standing position has been that we will recognize a Palestinian state at a time that is most conducive to the peace process. That pathway must start with fixing the immediate crisis in Gaza. President, we must focus collectively on the vital elements for a lasting peace. These include the release of all hostages, the formation of a new Palestinian government for the West Bank and Gaza, accompanied by an international support package, removing Hamas capacity to launch attacks against Israel, Hamas no longer being in charge of Gaza, and, as I have mentioned, a political horizon which provides a credible and irreversible pathway towards a two-state solution. Finally, President, I'd like to address the ongoing settlement expansion and demolition of Palestinian properties in the occupied Palestinian territories. We are clear that settlements are illegal under international law and once again urge Israel to halt settlement expansion immediately. The UK remains committed to acting robustly to support peace and stability in the region. President, let me end by reiterating the UK's commitment to a two-state solution and turning this Council's words into actions. We must work together to make this vision for peace a reality. I thank you.
I thank the representative of the United Kingdom for their statement, and I now give the floor to His Excellency Mr. Timothy Musa Kabba, Minister of Foreign Affairs and International Cooperation of Sierra Leone.
Thank you, Mr. President, the Honorable Dr. Ehrenborg, Minister for Foreign Affairs and European Affairs and Trade of Malta. I thank the Presidency of Malta for convening this meeting in the format of a high-level open debate. I also thank the United Nations Secretary General, His Excellency Antonio Guterres, for his comprehensive and sobering briefing. Today's debate is being held in the context of the request for the admission of the State of Palestine as a member of the United Nations, 13 years after Palestine's application was first considered by the Security Council's Admission Committee. Sierra Leone recognizes the basis for such a request, which in our view is legitimate and could create the pathway to a political horizon founded on the principles of the two-state solution, based on United Nations General Assembly Resolution 1812, which recommends for an independent Arab and an independent Jewish state. And in line with Article 4 of the United Nations Charter, Sierra Leone support the application of the State of Palestine for admission as a member of the United Nations. Our support is in line and within the context of our consideration of Article 4 of the United Nations Charter, Rules 58, 60 of the Security Council Provisions of Procedure, and the guidance provided by the International Court of Justice in its 28 May 1948 advisory opinion on conditions of admission of a state to membership in the United Nations. This request for reconsideration of the 2011 application for membership to the United Nations by the State of Palestine has come in 6 months into the conflict between Israel and Hamas. We have had first-hand testimonies about what it means to live in the Gaza Strip since 7th October 2023. There are expert reports on the impact of the conflict on women, children, humanitarian workers, journalists, and other vulnerable groups, and all civilians in Palestine as well as Israel. In the Gaza Strip, we are raising against time to prevent famine and infectious diseases epidemics. We therefore reiterate our strong call for an immediate and permanent ceasefire in the Gaza Strip and for Resolution 2712, 2720, and 2728 to be fully respected by the parties and implemented. For 6 months, we have made it unequivocally clear the 7th October 2023 heinous attacks by Hamas on Israeli civilians is unacceptable. We condemn the taking of hostages, with 134 of those hostage still being held by Hamas and other armed groups. Hostage taking is a serious violation of international law, and we repeat our call, the call by the Security Council, the call of the General Assembly, and the call by the International Court of Justice for all hostages to be immediately and unconditionally released. We have also deemed as wholly unacceptable the military response of Israel, characterized by massive bombardment of Gaza Strip without distinction, proportionality, protection of civilians, civilian objects, and humanitarian personnel. The killings and suffering and collective punishment must stop. Sierra Leone urges accountability for all violations and international law by the parties. Mr. President, Sierra Leone continues to urge de-escalation, continuing political and diplomatic engagement following the emergency meeting of the United Nations Security Council on 14th April 2024. We recall our condemnation of claimed reprisal attacks not in conformity with international law and the United Nations Charter. We also recall our condemnation of the use of force in violation of the UN Charter, relevant international law including the development and conduct of friendly relations, diplomatic and consular protections, as well as conduct in the region that may lead to an escalation or exacerbation in the already volatile situation in the Middle East. We regrettably further note with concern the rising tensions in the occupied West Bank across the Blue Line in Lebanon, with the exchange of rockets, missiles, and other attacks. Such developments are dangerous and have potential to escalate the ongoing conflict into a regional one. We call on all parties to exercise maximum restraint and desist from unilateral actions or retaliation that will be detrimental to the civilian population and peace of the region. Mr. President, it is especially important at this time that the focus remains on the critical issue at hand, which is the cessation of hostilities in the Gaza Strip, leading to the peaceful resolution of the Israel-Palestine conflict through the two-state solution. The level of suffering in the Gaza is unprecedented. It has been reported that over 33,500 Palestinians have been killed, over 76,000 more injured, and estimated 1.7 million internally displaced. Yet, Israel continues its intense military operation in the Gaza Strip, as well as raids in the occupied West Bank, further escalating tensions and risk of a regional spillover. A prolonged war means no one group of people will be spared in the occupied territory, not the civilians or humanitarian workers, healthcare providers, or journalists. Quite recently, following the report of the killing of 7 World Central Kitchen humanitarian workers, it has been reported that a UNICEF convoy was attacked en route to northern Gaza to deliver life-saving aid, including therapeutic food for children at risk of malnutrition and preventable mortality. We are deeply concerned about the findings of the United Nations Interagency Assessment Mission in Khan Yunis, which indicates that the town has been marred by the profound destruction of homes, schools, hospitals, roads, and other infrastructures. In the face of this critical challenging situation, we must not renege as a council with regards to the Charter responsibility to maintain international peace and security. The Council must build on its important interventions through the adoption of Resolution 2712, 2720, and 2728, and consider the important issue of implementation of its resolutions. In recounting the effort made by the international community to address the plight of the civilians in Gaza and in Israel, Sierra Leone expresses support to the United Nations Secretary General and its representatives and commend their work in difficult circumstances. We commend the humanitarian aid workers, including the UNRWA staff, who have demonstrated exceptional professionalism and empathy in their work, with some paying the ultimate price. Sierra Leone expresses its deepest condolences to their loved ones and families. Mr. President, at this stage of our engagement and as we collectively work towards having a lasting solution to this long-standing conflict, Sierra Leone would like to reiterate the following point. Firstly, we emphasize the need for parties to the conflict to adhere to the numerous calls for an immediate, permanent ceasefire and allow for expanded flow of humanitarian assistance through all modalities and to implement in full Resolution 2728 and the previous resolutions of the UN Security Council 2712 and 2720, which are not only still valid, but are all binding. In this regard, we call on all concerned to strengthen the effort of the UNRWA. UNRWA cannot be replaced by any other agency or entity, as the work they do for Palestinians, not only in Gaza, but the wider region, is immeasurable and life-saving. Secondly, the need for parties to the conflict to comply with their obligations under international law, including international humanitarian law, to protect civilians and civilian objects. Thirdly, in acknowledging the complementary significance, Sierra Leone calls for the speedy conclusion of the negotiations between Israel and Hamas, involving Egypt, Qatar, and the United States, and invites the parties to engage in good faith. Let me close, Mr. President, by echoing the need to intensify political engagement, to persistently pursue peace between Israel and Palestine, premised on the two-state solution. I thank you.
I thank His Excellency, Mr. Musa Kabba, for his statement, and I now give the floor to the representative of China.
President, I welcome you to New York to preside over today's meeting and thank Secretary General Guterres for his briefing. China welcomes the Special Representative of the President of Palestine and the Foreign Minister of other Arabic states at today's meeting. Over the past 6 months since the outbreak of the current round of Palestinian and Israeli conflict, China has stepped up to shoulder its responsibility and worked with the international community to do its utmost to save lives and realize peace. Chinese President Xi Jinping has repeatedly elaborated China's position on the current situation in Palestine and Israel, calling for an immediate ceasefire to end the fighting in order to prevent the conflict from expanding and ensure safe and smooth flow of humanitarian relief. He has also emphasized that the fundamental way out is to implement the two-state solution so as to promote a comprehensive, just, and long-lasting solution to the question of Palestine at an early date. As the conflict still goes on, the situation on the ground is precarious. War is a test of conscience and justice, while peace calls for rationality and responsibility. The international community, especially the United Nations Security Council, must demonstrate firm determination and make the right choice by taking vigorous action. An immediate ceasefire must be promoted with the utmost urgency. Until the end of the Ramadan, the people of Gaza still did not see the long-awaited ceasefire. Moreover, the negative effect of the conflict continued to spill over. The cruel reality of more than 6 months has made it abundantly clear that continuation of fighting will not make either side safer. Rather, it will only result in more innocent civilian casualties and drag the entire region into an even greater Holocaust. We urge Israel to effectively implement Security Council Resolution 2728, immediately reverse its course and cease its military operations against Gaza, and abandon any plans to attack Rafah. We urge countries with important influence on the parties to the conflict to take an impartial stand and make concrete efforts to promote ceasefire. We call on the parties concerned to exercise restraint, refrain from taking any actions that can exacerbate tensions so as to prevent the conflict from further widening. Tangible action must be taken to alleviate the humanitarian disaster in Gaza. Even if the people of Gaza are lucky enough to escape shelling and airstrikes, they still have to face man-made famine. Such a catastrophe in the 21st century breached the bottom line of moral conscience. Israel must act in accordance with the orders of the ICJ and relevant Security Council resolutions, lift the blockade of Gaza, open all land crossings, guaranteeing adequate and rapid access for humanitarian supplies, and their safe and orderly distribution within Gaza. UNRWA is the pillar of humanitarian relief in Gaza, and its role is irreplaceable. We oppose any malicious attacks and suppression against UNRWA and call on countries concerned to resume funding to the agency as soon as possible. The two-state solution must be revitalized with strong determination. The fundamental way out for the Middle East question lies in the implementation of the two-state solution so that both Palestinians and Israelis can realize common security and both the Arab and Jewish peoples can achieve common development. The current round of conflict is an extremely tragic warning to the international community that it can no longer evade the aspiration of the Palestinian people for independence and statehood or perpetuate the historical injustice inflicted upon the Palestinian people. China calls for intensified international diplomatic efforts to revitalize the political horizon of the two-state solution. In this connection, we advocate the convening of an international peace conference that is larger, more comprehensive, and more effective to develop a timeline and roadmap for the realization of the two-state solution. The Palestinian-Israeli conflict has dragged on for more than 70 years. Israel has long realized its independence and statehood, but the right of the Palestinian people to self-determination and statehood has long been disregarded. Full membership in the UN is an important step for Palestine to establish an independent state. Palestine has requested renewed consideration of its application for full membership in the UN. China calls on all members of the Council to take an responsible attitude in light of history and cast a favorable vote this afternoon to support Palestine join the UN family as a full member. Thank you, President.
I thank the representative of China for their statement, and I now give the floor to the representative of Ecuador.
Gracias.
Thank you, President. I thank the Secretary General for his briefing this morning, and I also recognize the presence of the Ministers of State here with us in this chamber. For several years, this Council has been holding quarterly open debates on the situation in the Middle East, including the question of Palestine, which allow all members of the United Nations to express their views on this important topic. This debate in particular is happening after 6 months of an unprecedented explosion of violence, which has caused death and pain to the peoples of both Israel and Palestine. Over 6 months have gone by since the terrorist attacks perpetrated by Hamas on the 7th of October 2023, which Ecuador once again condemns unequivocally. The horrors of that day have not been forgotten: the massacre of innocent civilians, the indiscriminate launch of rockets, and sexual violence. We have also not forgotten the hostages, who have still not yet recovered their freedom. My country reiterates our call for the immediate and unconditional release of all these hostages. Moreover, for over 6 months there has been a constantly deteriorating humanitarian situation which seriously affects the civilian population in Gaza. A few moments ago we heard once again a report on this bleak reality. The numbers of dead and injured are continuing to grow, and we cannot forget that every one of these numbers represents a human being, just as worthy as those of us here in this chamber today. Hunger, overcrowding, and disease have gained ground. Humanity has lost ground. The full implementation of all the resolutions of this Council is necessary to relieve the penuries facing the civilian population in Gaza. It is indispensable to facilitate the safe delivery of sufficient, timely humanitarian aid to all of those in need. For this to happen, a humanitarian ceasefire is essential, as this Council demanded in Resolution 2728. In the meantime, there is still violence continuing in the West Bank. The events of recent days are worrisome and remind us that the full implementation of Resolution 2334 is also necessary. President, violence will not achieve the solution to the question of Palestine. The almost 8 decades of conflict, the thousands and thousands of dead, and the suffering of whole generations attest to this. Ecuador therefore reiterates its commitment to work towards a peaceful, definitive, and just solution for the parties, with the existence of 2 states, Palestine and Israel, upon the basis of the 1967 borders and the relevant resolutions. I thank you.
I thank the representative of Ecuador for their statement, and I now give the floor to the representative of France.
Je vous remercie, Monsieur.
Thank you, President. I'd like to thank the Secretary General of the United Nations for his statement and welcome the participation of numerous ministers and dignitaries in the chamber with us today. Mr. President, we've seen major developments in the region on the night of the 13th of April. We saw unprecedented attacks waged by Iran and its proxies against Israel. We condemn most emphatically these attacks. They are a serious and major threat to international peace and security and to stability and security in the region. We reiterate our solidarity with the Israeli people. We recall our commitment to Israel's security, our partners, and regional stability. We call on all parties to show maximum restraint to avoid any escalation, the consequences of which would be corrosive for the region. This attack recalls, as if we needed reminding, that we need to urgently resolve the various crises in the Middle East to curb a new uptick in tensions. In Gaza, as the President of France, Emmanuel Macron, said, it's necessary to conclude without delay an agreement on a ceasefire that would guarantee the protection of all civilians. France reiterates its request to the Security Council for impediments to the delivery of humanitarian assistance to be lifted, for Israel to open and facilitate the use of all crossings for the delivery of humanitarian aid, including in the northern Gaza Strip and through a direct land corridor through Jordan as well as by sea. We reiterate our solidarity with the Israeli people. We reiterate our condemnation of the terrorist attacks and the sexual violence committed by Hamas and other terrorist groups on the 7th of October. We do this in the strongest possible terms. We urge all the liberation of all hostages immediately and without any conditions. It's equally necessary for the illegal, under international law, settlement and the cycle of violence in the West Bank to end. We condemn, in the strongest possible terms, violence committed by settlers against Palestinian civilians in the West Bank and the murder of a young Israeli. These acts are unacceptable. Settlers committing such attacks on the Palestinian population must be held accountable. Such violence is the fruit of the ongoing settlement policies, which is stoking tensions. In addition to being a serious violation of international law, we call on the Israeli authorities to ensure the protection of all civilians, as per their obligations under international law. France has already taken measures against violent settlers, and we're planning further measures in working hand in hand with our partners. President, France is highly disquieted by the ongoing clashes on the Lebanese-Israeli border. We call on all parties to exercise the greatest possible restraint to prevent a regional conflagration from which Lebanon would not recover. These clashes also affect UNIFIL's security, the capacity for action and the security of which must be maintained. France remains committed to Lebanon's sovereignty and the full implementation by all parties of Resolution 1701. We will continue our efforts geared towards this objective. And in fact, the President of the French Republic has been pursuing this very objective through its contacts with regional and international counterparts. In Yemen, the Houthis must end their attacks in the Red Sea. They are an acceptable attack on the freedom of navigation and seriously impede international maritime traffic. We reiterate our condemnation in the strongest possible terms of these attacks and demand the full implementation of Resolution 2722. The Houthis must immediately cease their destabilizing actions and at last commit to a peace process under the auspices of the UN Special Envoy. In Syria, only a political solution rooted in Resolution 2254, passed unanimously by this Council, is well placed to offer the lasting peace Syrians so sorely need. Against the backdrop of rising tensions, France is committed to a swift de-escalation and a political settlement that's lasting, a political settlement to the Israeli-Palestinian conflict, together with regional and international partners. It's against this backdrop that we submitted to the Security Council a draft resolution on the situation in the Middle East, because the two-state solution is the only way of achieving just and lasting peace in the region. France would like to reiterate its commitment to Israel's security and to the establishment of a state for Palestinians. The Palestinian Authority must play a pivotal role in this process in the West Bank and in Gaza. Thank you.
I thank the representative of France, and I now give the floor to the representative of the United States.
Thank you, Mr. President. And I want to thank the Secretary General for his appearance here and his briefing. Colleagues, we meet at a moment of great peril in the region. Iran and its militant partners, including Hamas, have driven us to the precipice of a broader conflict. The United States condemns Iran's direct attack on Israel, which we, along with Israel and other partners, helped to defeat. There is no doubt Iran's aim in launching more than 300 munitions at Israel was to inflict significant damage and cause a loss of life. The U.S. commitment to Israel's security is ironclad, repeat, ironclad, and our contributions to Israel's defense against Iran are a clear manifestation of that commitment. It is vital that the international community is united in condemning Iran's reckless escalatory acts, which pose a direct threat to international peace and security, destabilize the region, and endanger its own people. In response,
The United States announced sanctions this morning against several actors involved in Iran's unmanned aerial vehicle program, suppliers and customers of one of Iran's largest steel producers, and Iranian automobile companies with connections to the U.S.-designated Islamic Revolutionary Guard Corps and the Ministry of Defense and Armed Force Logistics. We anticipate that our allies and partners will soon be following with their own sanctions, and we will continue to disrupt the networks that support Iran's reckless proliferation of weapons that destabilize the Middle East and beyond. The Security Council must also not let Iran's actions go unanswered. Indeed, for far too long, Iran has flagrantly violated its international legal obligations, notably through the actions of the IRGC. The evidence is clear. Iran has armed Hezbollah in violation of Security Council Resolution 1701. It has also armed, facilitated, and enabled Houthi attacks on Saudi Arabia and the UAE, and, more recently, merchant and commercial shipping in the Red Sea, in clear violation of Resolution 2216 and in defiance of Resolution 2722. Iran has transferred Shahed one-way attack drones used in attacks against multiple member states at a time when such transfers were in clear violation of Resolution 2231. Iran has also repeatedly violated international law by targeting with mines and seizing commercial ships in international waters of the Persian Gulf and surrounding waterways, just as it did on April 12. Iran has provided significant funding and training for the military wing of Hamas, which, as we know, perpetrated unspeakable acts of cruelty on October 7 against Israelis, Americans, and citizens from countries all over the world. This long-standing Iranian support continues to contribute to the current crisis in Gaza. While Iran's minister will offer excuses for these actions today, we have a collective responsibility to set the record straight on Iran's nefarious actions, to ensure that Iran both complies with the Council's resolutions and ceases its violations of international law. Colleagues, the United States is committed to strengthening our cooperation to end the crisis in Gaza, including by continuing to work towards an immediate and sustainable ceasefire as part of a deal to release hostages by Hamas and deliver additional increased humanitarian assistance to Palestinian civilians in need. Hamas, however, continues to reject offers from Israel that would halt fighting and release hostages. Over and over and over, if Hamas accepted the offer Israel has made, it would allow for an immediate ceasefire that would benefit Palestinians immediately. Hamas should take this deal. If not, they should explain to the world and to the Palestinian people why they have yet to do so, because right now, Hamas is the sole obstacle to a ceasefire in Gaza. The sole obstacle. Colleagues, it is extraordinary the extent to which Hamas has been almost erased from the story of what is happening in Gaza. None of what we have seen in Gaza would have happened had Hamas released the hostages, put down its weapons, stopped hiding behind civilians and in tunnels, and surrendered. Hamas has an opportunity now to agree to the proposal on a ceasefire and on hostages. The ball is in Hamas's court, and the world is watching to see what it does. President Biden has called on Israel to announce and implement a series of specific, concrete, and measurable steps to protect civilians from harm, address humanitarian suffering, and ensure the safety of aid workers. Israel must do more to prevent civilian casualties. Far too many lives have been lost. And the President has made clear that U.S. policy with respect to Gaza will be determined by our assessment of Israel's immediate and sustained action on these steps. We welcome Israel's decision to open more land crossings. We need immediate implementation of these commitments. We need immediate results. As Gaza faces imminent famine, lives depend on it. We reiterate our support for Senior Coordinator Sigrid Kaag and call on Israel to cooperate with the UN's efforts to facilitate the delivery of humanitarian assistance at scale. Over 240 humanitarians have been killed. There cannot be any more. We reiterate our call for Israel to implement immediate measures to remediate deficiencies within its deconfliction procedures so that humanitarian personnel can safely perform their life-saving work. Colleagues, the United States also remains gravely concerned by the tensions in the West Bank. We strongly condemn the murder of 14-year-old Israeli Binyamin Akimir and the violence against Palestinian civilians and their property that ensued after his disappearance, resulting in dozens of injuries, property damage, and the killing of 2 Palestinians, 24-year-old Jihad Abu Alia and 17-year-old Omar Ahmad Abdulghani Hamid. We strongly condemn these murders, and our thoughts are with their loved ones. Civilians are never legitimate targets. We call on the authorities to take measures to protect all communities from harm, and we urge Israel and the Palestinian Authority to do everything possible to de-escalate tensions. Additionally, the United States will continue to impose our own sanctions on people involved in violent activities in the West Bank. Colleagues, the United States reiterates its commitment to continue working to address the multiple challenges we face in the Middle East today. We will support Israel as it faces unprecedented threats from Iran and reiterate that Iran must comply with all UN resolutions and the Charter. At the same time, we will also continue direct diplomacy to advocate for normalization of ties between Israel and its neighbors, as well as a political horizon towards a two-state solution so that Palestinians and Israelis can live side by side in peace. We are committed to achieving credible, time-bound, and irreversible steps toward a two-state solution. Mr. President, the representative of the Russian Federation has criticized a U.S. resolution put forward on the situation in Gaza. As many in this room
to just get into the business, it's like $100 billion table stake. So I get that. It's going to be one of the companies we talk about. It's just too soon to crown anybody. And I think you're seeing that reflected on Wall Street, where every month we decide it's somebody else. Maybe today it's Meta. But so I like that, though, for investing. I like that it's murky and unclear, and we don't already know. And we don't have a stock selling at 500 times earnings because they definitively won.
So we're going to have more, as I said, on that in just a moment, because it's developing into an interesting story today, and we don't want to let it go. We could have had perhaps, some other stocks as our chart of the day. We chose Taiwan Semi today because there's been, after ASML, there's been a lot of talk this week about what's going to happen with what has been one of the best trades in the market, clearly, and that's the semis. Well, Taiwan Semi today is falling on earnings. There's some news on Micron. It does lead us to NVIDIA as well, which gets reiterated as its top pick, Josh, with a $1,100 target at Cowen. And that stock's been in correction territory, too. Do we need to worry about some of these chip stocks, which month to date, Intel's down near 20%, AMD's off 13.5%, onsemi's 13.5% to the downside, NXP's weak, Skyworks, ASML, as I just mentioned, Lam Research, and then NVIDIA. So these stocks, I don't know if it's a full trend reversal. You would look at those charts and be able to decipher that better than me, but how do you look at what's happening in this space?
No, these are falling knives right now, and NVIDIA is probably holding up better than most of the names in the group that I follow. Taiwan Semi is 60% of global foundry revenue. There is no company doing anything in chips that doesn't deal with them in some way, shape, or form. So if you're not paying attention to what they're telling you, I don't know what you're looking at. Here's what they're telling you. They lowered expectations for chip growth in 2024. They cited macroeconomic and geopolitical uncertainties, as though there isn't ever, those things. But they think that those things are weighing on end market demand. You need to remember, every semiconductor company is cyclical in the end. That's number one. You might not believe there's a cycle anymore at some point. The reality will catch up and say, oh, yeah, no, there still is a cycle. That's one. Two, end market demand is all that matters, and frequently chip companies will be the last to know. they'll be the last to know. They'll find out later than some of the other companies that are the consumers of their chips. So that's what we're dealing with here. They are echoing some of the same things we heard from ASML. How many more companies this important do you need to hear from to understand that maybe the expectations got ahead of the reality?
If you, Jim, you look at these chips and you say, okay, it's the more perhaps industrial ones that maybe need to keep an eye on more so than some of these AI-related ones. On Semi, NXP, as I mentioned, 13.5% and 10% respectively to the downside month to date.
Mm-hmm. I think, I'm sorry.
And you have NXP, right?
I have NXP. I did trim that recently, also trimmed NVIDIA, albeit lower than it is now. But the point, and I think I'm going to echo what Josh said, which is that expectations got ahead of themselves. Now, if you want to just focus on the industrial, Scott, NXP rallied up to 260. And what was that all about? That was about rebuilding auto inventory after the auto strike last fall. And you can look at Qualcomm as another example. And what I'm saying here is these are not fatal conditions. These are small pullbacks. They're going to last for a little while, but with the economic cycle going where it is right now, they should resume a growth trend, and I don't think it's going to take too long. But yes, they got ahead of themselves. Qualcomm, just for example, as much as it's doing what it's doing in automotive and Internet of Things to diversify, it still is beholden to the smartphone market. The expectations there for the smartphone upgrade cycle probably are a little ahead of themselves. Now, I want to make this point very clear. This is not a time, in my opinion, to go sell Qualcomm, NXP, NVIDIA, any of these things. I trimmed those a few weeks ago, but this is a time to just sit tight and let this part of the cycle happen. It may last a quarter, and then let the economic growth, which we're seeing in the U.S., which is likely to transfer to the rest of the globe, take over through the rest of 24.
Can I ask you a question? Taiwan had 40% net profit margins, which is the highest in the company's history. Doesn't that seem peakish to you? Given the amount of investment we know they're all going to have to make, doesn't that seem like as good as it gets?
Yes, but that doesn't really worry me, Josh, because I think what you're going to see here is whether it's the reshoring of the whole supply chain or just economic growth that I was just talking about, that these volumes are going to pick up.
And by the way, it's not just semis, Liz. It's since the S&P's record high on March 28th, which may feel like an eternity ago to some people relative to where volatility has picked up of late. Software is also down 6% since the S&P peak. I could go through a number of other sectors away from tech that are down more, but nonetheless, do we need to worry about under the surface names within tech, not just the mega caps?
Well, I think this part of the cycle, and I said this on Closing Bell a couple of weeks ago, that if we do have a sell-off that actually picks up steam, I think what happens first is the broadening out trade goes, right? People that had bought things on the premise that we're broadening out, it's because the economy is expanding, everything can participate, and that largely has happened. Small caps have taken it hard. When you look at semiconductors, if we're talking about it from a cyclicality perspective, you have to also compare them to the trends in software. And software has underperformed semis on a trailing 1 month basis, but that gap has narrowed recently. But when I say recently, I mean in the last 4 days. This is not yet something where the trend has reversed and suddenly software is outperforming. So I'm a little bit more optimistic, or maybe I'll say a little less pessimistic than Josh. I don't know that they're falling knives, but they are sending a signal that cyclicality is challenged.
All right, we're going to take a quick break. We are going to come back. We will have more news regarding these meta headlines, which are very interesting. We'll do our calls of the day as well. Don't go anywhere.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
humanly possible.
All right, we're back. We do have more news now on Meta. You see the stock moving higher by more than 3%. Let's go to Steve Kovac, who has this news, which is really about the next frontier, Steve, of these large language models, and that is image generation, as we've heard from some others, and now we hear from Meta. What do we know?
Yeah, that's part of the Meta thing. By the way, this is their new large language model, Scott. They're calling it Llama 3, which is, of course, sequel to Llama 2. Two really important things to know about this, Scott. First of all, it's immediately going to be deployed to billions of users who use Facebook's apps, whether that's the regular Facebook app, the WhatsApp, Instagram, and so forth. So right away, huge user base for this new Meta AI product. On top of that, there's a new relationship with Google here. Previously, they've already have a relationship with Bing, but when you ask Meta AI a question that might need to search the web or crawl the web for the exact right answer, it will either credit Google or credit Bing as the source of that. I asked Meta what the nature of that relationship is, who's paying who, basically. They wouldn't tell me that, but it is also kind of a boost here for Google search and Bing search being tapped by the large language model made by Meta in order to get you those right answers, Scott.
Yeah, I appreciate that. Steve Kovac, thank you very much for that interesting news moving those stocks. Exactly what we were talking about earlier.
Yeah, 100%. And the open source nature of this is very different from the walled gardens that so many of these large tech giants have historically built. I think it's the smart route.
Hi, I'm in a showroom in Oregon. I guess I'm doing this just to say what I've been doing since Barstool, but
Crypto.
If you mean crypto like Bitcoin, I've always said it's a fraud.
No hope for it.
Well, if they think they're a currency, there's no hope for it. It's a Ponzi scheme. It's a public, decentralized Ponzi.
Crypto.
If you mean crypto
That's one part in this entire equation is the payout ratio. So that's the percentage of earnings that is being paid out in the form of a dividend. MasterCard, 19%, 20% roughly, somewhere in there, which means they've got a lot of space to grow.
Okay, Hershey. 2.6 yield. Why this one?
Cocoa prices. So over the past...
We just showed those on the network within the last hour.
Oh, seriously?
Yeah.
Okay, good.
Yeah.
So over the past year, hopefully I'm quoting this right, is somewhere roughly around it's 250% year over year. So I think a lot of that comes from supply, Africa, some issues with weather, but Hershey is a great dividend payer. Was not on our radar before, but as the price has moved down, I think the price is down about 27% over the past year. Yield has went up, and it hit our radar, and we look for a 10-year track record of dividend growth.
How are you thinking about dividend growers here?
So what's different from your strategy versus buying the dividend aristocrats as kind of like a smart beta factor-driven strategy? What are you doing qualitatively that doesn't get captured in something quantitative like that?
So aristocrats is a 25-year period, and that gets stretched out so long. That's such an extended period. We look at 10-year on the dividend growth side. I mean, that's the simple answer to it.
So you'll pick up on stocks before they become aristocrats?
Correct.
Interesting point. Others that are part of your buys recently, Lockheed, right? Starbucks, McDonald's. You want to talk about any of those?
Sure.
Why they stood out?
Yeah, so Lockheed, purely a geopolitical play. With the tensions in Iran, Israel. It's a long-time holding, one of our original holdings on our books. Loved it ever since. It's got a great dividend growth rate track record. I mean, performance has been great over the past decade, but purely a geopolitical play.
What about McDonald's?
So you can almost, I don't know if it's okay but Starbucks, McDonald's, almost lump them into the same group. They're both kind of kings of the fast food industry. They're both down. Stock price is depressed, year to date, and really not a great reason as to why. So their valuation looks excellent, and they fit that dividend growth rate perfectly.
All right, you keep us up to date on what moves you're making. It's good to see you again.
I'll do that. Yeah, thank you. Thank you very much.
Joining us here at Post 9. Coming up, a pop for D.R. Horton today on strong earnings and guidance, and committee member Stephanie Link. Well, she bought the stock last month. She has a trade update. She's going to join us next.
will.com.
Take a look at DR Horton today. The stock's up about 2.25%. That's after topping estimates, raising its outlook as well. Committee member Stephanie Link, she owns it, and she joins us now with a trade update. So tell us what you're doing with the stock today, Steph.
So I am adding to it. I think the stock actually should be. I'm sorry, I'm hearing a little bit of feedback here. I think the stock should be up more than just 2.5%. And this is a company that just delivered 14% earnings growth, 15% total revenue growth, unit closings up 15%, and their orders were up 46% sequentially. And gross margins were also very good. They raised the guidance, as you mentioned. And I think the important piece here is that 57% of the homes that were bought in the quarter were first-time buyers, and that is where I am very bullish on, because we know that we are 5 million homes short in this country. We know we have 5 million millennials that are first home buyers, and we are seeing that come to fruition. I also like the mix. 51% of their revenues is in the southeast and south central part of the country, so I like that a lot. And at 11 times forward estimates, I think the stock is awfully cheap.
No worries about higher rates.
I do worry about higher rates, and I think that's one of the reasons why the stock's not up more. But I do think that the dynamics that they offer in terms of that first-time buyer, that's where I want to have exposure, and that plays right into struggle here a little bit in the short term. But I think over the long term, I mean, I think housing is a 10-year theme, and so on any pullbacks, I'm a buyer.
Okay, and you also bought more LVS, Las Vegas Sands. Why did you do that?
Yeah, I mean, the stock down 8%, I think, is a little overdone. It was a disappointing quarter. I mean, they came in line, but the mix was a surprise. So Macau, which is 63% of EBITDA, that actually disappointed. A lot of that had to do with CapEx and renovations that were a surprise. So they disappointed and they lost some market share. That being said, they still have 27% market share in Macau, and I like that region very much. And then Singapore actually delivered very good numbers. They beat on expectations, and they're benefiting from all the renovations that they've done. So I just think this stock also trading at 11 times versus its 13 times historic. I just think, if numbers are going to come down because of Macau, they're coming down by like 1-2%. I think the stock down 8%, it's a buy.
Yeah, worst day in about 18 months for that stock.
Yeah.
You still own Wynn, Jimmy?
I do still own Wynn. Frustrating.
He says reluctantly, I think.
No, I mean, the reluctance, the frustration, and Stephanie, I get it. I mean, operational results at Wynn are fabulous, and the stock continues to be lackluster. And, Las Vegas Sands down 8% today. I get it. 2 quarters ago, Wynn reported a blowout quarter on every metric and was down 9%. It's just part of the story right now. This higher interest rate regime is making people think that maybe the recession's closer. Maybe people aren't going to gamble as much. I don't think that's the case at all. So stick with it, Steph.
Steph, briefly, last word.
Yeah, no, I mean, I think I love Wynn. I've owned it in the past as well, but Las Vegas Sands is actually cheaper, and it's a pure play on Macau and Singapore, whereas Wynn, they have also domestic operations. And I know, Jimmy, you like it for the diversification, and they've done a good job as well, so I like them both.
Steph, appreciate you coming on with the update. That's Stephanie Link.
Thanks, Scott.
All right, we'll see you soon. Mike Santoli next with his midday word. Got an IPO update for you. Ibotta, open for business. There you go, with a nice move, too, about 27%. Price at 88, opened at 117. And we'll continue to watch that stock throughout the rest of this day. The latest IPO on the floor of the New York Stock Exchange. Our senior markets commentator, Mike Santoli, is here at Post 9. All right, so what? We got down to yesterday to, what, 5,007-ish, around there. Had a nice little bounce off that.
Yeah.
Still feels a little uneasy.
Yeah, and the bounce didn't really get up to yesterday's high. So, I mean, whoever, feels like it's safe to sell every rally is probably going to have to be disabused of that by something a little more forceful. We're down like 250 S&P points in 3 weeks. You were up like 25 at the highs today. So it shows you that we're still kind of convalescing in here. Pressure's been taken off a little bit by the fact that yields aren't making new highs, but they're pretty close. So I think we're still in the same dynamic of trying to gauge if anything really has changed about the trajectory for the economy with yields up here. I am very fixated on some of the cyclical parts of the market. So consumer discretionary, equal weighted, has flagged a little bit. Industrials have done better. Transports, we know, had been a little bit ugly. So you want to just try to read the message in the macro, aside from just, hey, we needed a pullback. We got a 4% pullback. Maybe it goes a little deeper. No big deal. In a bull market, usually there are opportunities to buy, but we haven't quite seen a big flush yet.
Let's see what Netflix delivers today, just as an entree into the growth stock earnings reports.
That's what it represents, I think, and that is where all the push is in terms of earnings revisions and all the rest of it. So almost regardless of how Netflix itself trades on a reflex, it opens up that moment when it's like, can we believe the published numbers? Can we get some guidance that is anything but? Consumer demand remains soft, and we're being conservative about the rest of the year, which has been, I think, the mantra for a lot of companies so far.
All right, we'll see you in the final stretch on Closing Bell. It's Mike Santoli, our senior markets commentator. We'll step away. We'll come back with finals next.
Follow up.
Boy, do we have a big interview coming up on Closing Bell today. BlackRock's Rick Reeder will join us live today. So much to talk to him about, obviously the backup in rates and where this market might be going from here. So please don't miss that. I'll see you at 3 o'clock with Mr. Reeder. Okay, let's do final trades. Farmer Jim.
Delta, I mean, you're hearing all this good stuff from Delta, Alaska Airlines, United Airlines, and you can look at TSA counts and see that people are traveling.
Yeah, well, United was a huge winner yesterday.
Yeah.
Liz Young.
That backup in yields has me talking about short-term treasuries
Again?
Again, I'm back at it. As long as we're still talking about cuts later, not never, this could be a good buying opportunity.
All right, thank you for that. And Josh Brown.
Coverage at Loop Capital today with a $42 target. I am long the name. I think it's a really interesting story.
All right, I'll carry through the final stretch today, and it's going to be interesting because the market's losing some steam as we speak. I'll send it to the exchange.
Market in very much, and welcome everybody to the exchange. I'm Tyler Mathisen in today for Kelly Evans. Here's what's ahead. Stocks are bouncing back today, but our market guest says proceed with caution if you're all in on one particular trade, on one trade in particular. She tells us what it is and how she's positioning from here. And high rates continuing to put pressure on the overall housing market, but not the builders. D.R. Horton delivering an earnings beat, raising guidance. The higher is the stock today. But with the 30-year mortgage rate at 7.5, can those gains continue? Our analyst is bullish, and he'll make his case. And the consumer not slowing down when it comes to traveling. Fresh off earnings, Alaska Air CEO Ben Minucci joins us in an exclusive interview to talk about that, about Boeing, and more. But we begin with today's markets and our friend Bob Pisani at the New York Stock Exchange. Hey, Bob.
Tyler, always a pleasure to see you. We started flattish. We moved up in the middle of the day, and we've been losing steam. We are essentially flat on the day after being up about an hour ago. We had a very strong Philly Fed this morning. Economy's still good. Unfortunately, the yields are still elevated, and I think that's a problem here. We were up a lot more today. As you can see, we're basically flat on the S&P. It's been a fairly narrow trading range, about 40 points, a little narrower than it's been recently. Dow Industrials split, strength in United Health. Travelers bouncing back after a rotten earnings report. And the NASDAQ is the disappointment here. It's big cap tech is mixed but largely down. Semiconductors are a bit on the weak side. The tech space is the weak area here. Look at big cap tech here today. NVIDIA and Google, still Apple, still mixed here. Alphabet is up slightly. Micron is down almost 3%. That's a really weak stock in that sector right now. For earnings, you heard about D.R. Horton here. For all the worry about higher rates, D.R. Horton is just off an historic high. It's done very well here. They beat on the top and the bottom line. They were asked about the high mortgage rates. They asked about sticky inflation, and they said they're going to center on incentives. Incentives usually mean some mix of closing cost assistance or mortgage rate buy downs, free upgrades, price discounts, all sorts of things that are still out there. But the bottom line is not a bad earnings report, but the stock is down right now. I'm focused on IPOs today, two big ones today that opened successfully here at the New York Stock Exchange. Century Holdings is an energy infrastructure play that came at $23.75. It priced at 21. That was the high end of the range, so that's successful. That just opened a little while ago. And just a few moments ago, Ibotta opened. Ibotta is a digital advertising play. They priced at $88. That was above the range. And look at this, opened at $117. So the price talk was 76 to 84, Tyler. Prices at 88, opened at 117, now at 109. Again, this is a digital advertising play. Next week, Tyler, we'll get Rubrik as well. We've got 2 or 3 of them. But the way I add it up, if we get next week's IPOs, we'll have about $3.5 billion. It's gone public in the last 3 weeks, and that's one of the best strings of weeks for IPOs we have seen in several years. So I know the markets are a little shaky, but so far the IPO market is definitely showing some signs of life. Tyler?
All right, Bob, thank you very much. Bob Pisani. The IPO market may be opening up, as Bob points out, but our next guest says tread carefully because investing in tech with an AI-only strategy will be risky. Instead, she's sticking with a broader stock play as earnings season gets underway. Joining us now, Kim Forrest, Chief Investment Officer at Boca Capital Partners. Why are you wary of AI, Kim?
Well, it's been about a year since the AI rocket took off, and I'm sure everybody that owned NVIDIA at that time, or maybe bought it subsequently, is super happy about that. But I do have a warning, having been in the world of technology and certainly having watched it since I became a sell-side analyst, first job in this industry in 1999. Not all stocks go to infinity and beyond. They just don't. And generally, whenever a technology is being rolled out or developed, there are pauses in spending. And I think a pause in spending, and I do believe in the long-term viability of AI, certainly, but a short-term slowdown might make investors lose their minds and start selling a lot. So that's my warning to you.
And the warning then is, if these stocks go down, don't panic and sell, or what? Make sure I understand.
I think you are always supposed to be looking at what is in your portfolio, right? And if you only have AI-focused stocks, I think it would be time right now to take a look and broaden out and think a little differently and hedge your bets. Take some money off the table and apply it somewhere else. But I do think that you can certainly know that those AI stocks that are good quality companies probably will come back, because if they provide what we think they can provide, which is mainly productivity to businesses, AI is a winner.
Two stocks I see you do like are AMD and Intel. Would you describe them as AI-related stocks, number one? And you're choosing one that is a beloved stock in AMD and another that has been at a loss for love lately, Intel.
Yes. Yeah, well, I always like to have, a winner and a loser. No, I'm teasing, totally teasing. No, I do like both of these, and I like them for different reasons. However, both of them can and probably will play into generative AI data centers. But the other thing is, there is going to be a lot of computing needed around those data centers. And I think both of these companies have good track records of playing well in data centers. And data centers are a focus of spending. So that's why I'm focused on it. I also like Intel's foundry idea. And it always takes longer to develop technology and roll things out. We know that. And we learned that earlier this year. And that's one of the big reasons behind Intel's unlovedness right now in the market.
Yeah, interesting. I think of like a kindergarten report card. Plays well in data centers for both of those. I think that's very nice. And two others that you like are United Health and Urban Outfitters, two companies that on the surface couldn't have less in common.
Right, except they delight their customers. And they're very good at
I don't know whether United Health
generating,
delights its customers, having been on the receiving end of lots of their explanation of benefits. But go ahead.
Well, I mean,
Make the
isn't
case.
that every healthcare company, though?
Yeah,
Really?
Oh, absolutely, it's true of every healthcare company. To my eternal infuriation. But that's just me.
Well, no. I mean, I rip open the 19-page, documents from them and wonder what they all mean. But here's the thing. United has been an innovator in creating technology and doing whatever its business is to frustrate its end customers, not its the companies that it works with. Anyhow, they do that very well, and because of their use of technology, they have good margins, and they beat all their competitors with respect to technology. So that's why I like them. And Anthropology and Free People are doing just super at Urban Outfitters, and they do have a path forward for their title name of their company, Urban Outfitters. That section of the business has a new president, so it could be firing on all cylinders later this year. But even so, Anthro and Free People are just doing a great job at delighting their customers.
All right, Kim, thank you very much. Good as always to see you. Appreciate it. And when you figure out an explanation of benefits, give me a call. Walk me through it, will you? All right, thanks. Kim Forrest. All right, home sales dropped last month despite a surge in supply, and Diana Olick is here with the very latest. Hi, Di.
Hey, Ty. Yeah, the added supply just couldn't counter the higher mortgage rates. As a result, existing home sales fell 4.3% in March compared with February. Sales down 3.7% year over year. Now, these sales are based on closings, so contracts signed in January and February. Mortgage rates stayed lower in January and then shot higher in February. Now they're even higher, hovering around 7.5%. Inventory did improve slightly, up 4.7% month to month to 1.11 million homes for sale at the end of March. That's a 3.2-month supply. 6 is considered balanced between buyer and seller. Now, inventory is about 14% higher than March of last year, but more supply is not really helping cool prices. The median price of an existing home sold in March was $393,500, up 4.8% from the year before. It's also the highest price ever for the month of March. Now, the market is moving faster, with the typical home sitting on just for about 33 days compared with 38 days in February. Investors pulled back a bit, making up 15% of sales compared with 21% in February and 17% in March of last year. And first-time buyers did make a comeback, though. 32% of sales, up from 26% in February and 28% the year before. Interesting, though, on the price tiers, sales rose sharply for homes priced above $750,000 and especially above $1 million. There is simply more supply on the high end, and higher-tier buyers aren't as affected by slight shifts in mortgage rates, and a lot of them also use cash. Tyler?
So prices are up in the most recent month. I'm looking 4.8% year over year. Sales a little bit off. Why have housing sales and prices been able to hold up as well as they have, given those higher mortgage rates?
Well, the prices, that's an easy one. That's because there's simply still very little supply. Yes, we said supply increased to 3.2, but again, 6 months, twice as much as we have now, is considered a balanced market. So when you still have demand and so little supply, prices have nowhere to go but up. As for sales, the realtors are characterizing this as sales are kind of stuck in this narrow range right now, which are really actually pretty low. And that's because mortgage rates are significantly higher and prices are higher. So the affordability level is just out of hand, especially for first-time buyers. They did come back a little bit. We've seen more action on the FHA mortgage rates because they can get in with less money. But again, it's still coming off very, very low volume. So even the move up isn't really that much.
All right, Diana Olick, thank you very much. And meantime, higher mortgage rates and weaker sales not being felt at D.R. Horton, which beat on the top and bottom lines this morning on higher than expected orders and prices. Our next guest had a buy rating on the stock, and even his expectations were beaten. Joining us now, John Lovallo, home builder analyst at UBS. What do you make of D.R. Horton, John, and its report?
I'm gonna go make some coffee. Thanks for having me. Look, I think a lot of the things that Diana described are exactly what's happening, helping the new home market. There's very little existing home supply. Underlying demand is still very good. All that demand is being channeled to the home builders, and the home builders on the public side are taking a lot of share from the privates. What D.R. Horton reported today was a very strong quarter across the board. They took their outlook up. I think that everything is kind of pointing in the right direction for these builders to continue to operate even at a higher interest rate environment. And let's not lose sight of the fact that in October and November of last year, rates were even 60 basis points higher than they were today, and the companies still continue to operate very effectively.
I'm interested in one of your surveys. You say 34% of respondents plan to buy a home in the next 12 months. Historical average is 29%. 24% say they plan to sell their home in the next 12 months. Those are high. Those are surprisingly high numbers to me, given prices, given the level of interest rates, which we keep hearing are keeping people staying put in their homes because they don't want to trade a 3% mortgage for an 8%.
Sell into that bounce. Yeah, no, it's a great point. I think what's really important to keep in mind is that there is this tremendous wave of demographic strength coming through the U.S. In terms of millennials and Gen Z reaching prime home buying age, life events, marriage, children, things that necessitate more space. And don't lose sight of the fact that there is a massive wealth transfer of $68 trillion occurring, channeling from baby boomers to millennials and Gen Z again. And this shows up in financing for mortgages. In fact, 25% of respondents to a survey about a year ago said that they're receiving, these are first-time buyers, receiving down payment assistance. That, coupled with the fact that the home builders are offering financing, so you're not paying 7.5% when you go to a builder. Maybe you're paying 5.5%, maybe you're paying 6%. The affordability equation starts to make a lot more sense.
You've got buy ratings on neutrals. But you are very strongly oriented to strongly in favor of these home builders. Give me the thesis, basically.
Yeah, I mean, the thesis is the demographics that we just talked about, also the shift from resilient demand not being able to be satisfied by the existing home market, so all coming over to the new construction market. But don't lose sight of the fact that balance sheets are vastly improved for this group, right? If you think back even to 2013 when the market started recovering, you're looking at companies that are 18% debt to cap relative to close to 50%. They're generating strong cash flow through the cycle. They're 2 times the size that they were in 2013 in terms of market cap, and they're buying back stock, paying dividends. These are real companies that are being valued at half of the value of the market, at 10 times earnings. That seems a little bit dislocated to us, and I believe that there is room for that to close.
So many of these stocks hit all-time highs as recently as late March, many of them up 46%, 86%, 42%, 72% over the past year. You think that can continue?
We do, and we think, look, I think earnings estimates will have a bias to move upwards, but most importantly, these companies are earning at levels that they've never earned before and generating consistent cash flow. This warrants a higher multiple. Now, whether that happens this year or next year, it's going to happen. But the fact of the matter is that the cash flow generation and the earnings resilience and power is really something that is, I think, being missed by the market.
3 cheers for the home builders. John Lovallo, thanks, my friend. Appreciate it. Glad to have you with us.
Thank you for having me.
All right, coming up, Alaska Airlines hitting its highest level since last August after giving stronger than expected guidance for the second quarter and the full year. The CEO will join us exclusively after the break to discuss the results, travel demand, and the fallout from that door plug blowout incident in January and a computer glitch that hit the airline yesterday. Plus, a C-suite view on the health of the banks after a year after the collapse of SVB. We'll speak with one of this year's CNBC changemakers on how her bank is navigating today's high-rate environment. And as we head to break, here's another check on the markets. Losing steam, the Dow erasing almost completely a 330-point gain. The S&P flirting with its first 5-day losing streak since October. The exchange is back after this.
This is The Exchange on CNBC. prices go up.
All right, welcome back to the Exchange, everybody. Alaska Airlines trading at its highest level since last August after posting a smaller than expected loss in the first quarter, forecasting strong second quarter and full year profits. As for the fallout from January's door plug blowout incident, the airline says Boeing already paid them $162 million, and they're expecting even more compensation after a third of their January capacity was affected by the incident and the groundings that ensued for inspections. So what's next for Alaska? The CEO joins us now exclusively with our own Phil LeBeau. Hi, Phil.
Hey, Tyler, thank you very much. Let's bring in Ben Minicucci, joining us from Alaska's headquarters in Seattle. Ben, I listened to your conference call about an hour ago. You guys
got no volume on the bounce back. I knew this was going to happen. I knew everybody was going to get all excited. We might just hang out, maybe go a little higher. Nope. Again, tomorrow's Friday. It's the last day they can take profit before going into the weekend with a potential Israeli strike on Iran. And Iran came out this morning talking about you hit us, we hitting back. You know, so 4.95 or 14 cents. I'm gonna try here. We'll see what. Let me see something here. I want to try to make a move. I just don't know what the move is, guys. I don't. Unless you guys have small caps or something. I had Meta this morning. Look at the volume, man. Look at the volume when we came out the gates this morning. Look at the volume there. Wow, that's weird. That one. Yeah, it needs to bounce. Meta, I guess I missed that one now again. I had a second opportunity there. Kind of curious, you know, I guess the markets went red. Yep, the market went red again, 0.2%. And then when we were up, we were only up 0.3%. So I need y'all to hear me when I'm telling y'all, hey, you know, when I'm saying, hey, listen, this ain't okay. You ain't seen something like this in a while. And I'm gonna tell you guys right now, I think this is worse than 2022. Worse in the as far as when Russia invaded Ukraine, and you know, you had volatility because, you know, the data points were way off. I really think shit's about to pop off if Israel hits Iran. I'm telling you guys right now, shit is going down. That's just my opinion. I don't know if that's the truth, but it's not a good look. So I might be thinking about getting back in Facebook or Meta puts. I got into some Meta puts this morning. Quick little trade on them. They paid really nicely, but I'm not sure if the volatility is going to be the same as what it was this morning. Because, you know, this morning, you would get, you know, you'd get like $1 to $2, and those things would jump anywhere from $30 to $50 a contract. So it was really easy to get paid on those. Just buy the dip or short the rip, you know, bright and early this morning, and you got paid. So I will be looking at Meta tomorrow for sure. For sure tomorrow, or maybe even Nvidia or something. But Meta was paying really good. I like the way Nvidia was paying this morning, so I'm going to be looking at that tomorrow. I mean, it was volatile as all hell. I mean, I forget what, 260 to 330, something like that. You know, we were getting $50, you know, on a $2 move. So I don't know of. This is pretty wild. It really is. This is crazy. If I get into something, I'll let you guys know. I'm trying. What are the 495s at now on the SPY? Are you serious? 20. So they're up like 10. Well, they were like 13, 14 cents. Now they're 20. So 5 on 20 times 4, 20% or so. at the volume increasing too. This is just insane. It's just wild. I think you got a little more room to go. I think she got a little more room to go. Just a little bit. Just a little bit. What you might get is a bounce. Wow, I can't believe the volume's really starting to increase like that. That's insane. Fuck, bro. I can't believe that. Just bounce, fall out of bed. I had a feeling we were going to make a new low today, too. I literally was going to type it in chat. Chances of a new low coming in. Right when we got down here. That was kind of a sign to me that, you know, we're going to go probably put in a new low. The setups weren't as good today as they were yesterday. Oh, hold on. I think you just got word. Hold on 1 second. I think you just got word of an attack from Iran. As soon as I was speaking of it. Don't quote me on that. Just hold on. So I wouldn't mind trying to get, you know, after what happened yesterday, I don't want to, but like now I'm scared to try to get a reversal on this. Now I'm scared to be like, yeah, I'm just gonna buy the dip. I was a day too young. I was a day early yesterday, and I went ahead and I feel like once I've made some really good money and I make stupid ass decisions, try to front run moves. Looks like we're going for a gap fill here, guys. So I probably will look at trying to get short this gap fill.
IBTA, Ibotta continuing to make new lows, $101.51.
I don't know. It just sucks, man. I want to have more going on than I do today. I really wanted to redeem myself, but sometimes it is what it is. Should have just thrown some more size on that meta trade. You see what I mean? See that mean ass reversal? But I'm scared to do it now because we tried to play the reversal yesterday and just got you know, we just got played. Nah, not yet. They just said that there was just something from Wall Street Journal about Iran and Israel. I don't know what that was. Let's see. Let's go online and see if we can see, or Twitter, and see what that news was. Wall Street Journal. Yes, we all stand with Evan, but Evan knew. I don't understand sometimes, like just me personally, like I think it's wrong what they do to some of these people, but on the same hand, like if I was in China or my ass was in Russia, like you're not going to find me there because I'm already going to be paranoid. You know what I'm saying? I don't even want to go there. I don't even want to go there. I don't trust them. But to have documents and shit, bro, knowing if they found out, you're fucked. You're screwed. Why would you, don't put yourself in that position. Senior Iranian, so here it is, guys. Senior Iranian official warned that Iran could work on building nuclear weapons if Israel attacks its nuclear facilities. Okay, that's not what it sounded like he said. Much of the next several weeks, President Biden has a window of opportunity to play the offensive. He is not building any support. He's not. He doesn't have the opportunity. He had the opportunity when he wasn't a politician. Just like what they're going to vote on today. That, your guys' phones and my phone, they can pretty much do what they want with our business. There is no constitution. But not yet, man. I think this is, if you can buy longer dated puts on whatever bounce back we get, I think I would wait though and see if you can't get it back up in the 500s and maybe try that. Like, look at this. Like, this is what I mean. Like, look at the extension you're getting with like no volume. Like no volume at all. Like 200,000 shares traded. Like, come on. That was a mean pullback. That's like, what exactly are these candles printing, and who decides which ones get printed and which ones don't? Because I'm gonna tell you, last night, I seen 20,000 shares of QQQ being sold. Do you think that there was a tick on the candle? Nope. 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 I'm like, are you kidding me? Like, what decides the tick and what doesn't? I'm not saying it's rigged or anything. Like, we can get the direction, just understanding and being able to read the markets. It's just kind of funny. It's kind of funny to me. Like, look, out of nowhere, you're just going to get all this follow through. I should have never got long yesterday on that, or not that I went long. I've been long, mostly short, but I just took a long just in case of anything. Look at this. It's just gonna continue, and you're gonna be like, yeah, that's probably just a pullback, and then before you know it, we're down here at 497 on low ass volume. So this market's just tough right now. It's gonna be hard to. I'm going to look for Meta, though. Meta's very strong. That's the only part I don't like about this, is that it's really strong. So it's not a name you want to short. But don't you want to sell high and buy low? Like AMD is on the lows. I don't know how much more I get out of this thing. Let's see. I need to come up with a couple ideas. Like, I can't think of stocks. Okay, so okay. Dude, Micron got hit. They did Micron in? Yep.
What's hurting the real estate industry also is that with these losses in terms of occupancy, is the interest rates have more than doubled. And that has made these buildings, essentially almost all of them, have made the cities insolvent. If the Fed does not drop rates, these buildings,
Listen to this. Oh yeah, he is absolutely correct. And people keep talking
Welcome
about
back to the
higher
exchange,
for
everybody. You know,
longer
it's been
and raising rates.
13 months
Did
since
y'all
the
not
collapse
forget that there
of
was a
Silicon
credit?
Valley Bank
The
and
U.S.'s
the
credit
turmoil that
almost got
followed in the
downgraded
banking sector.
along with the banks.
While that turmoil has sort of settled, the billionaire real estate investor Don Peebles warns
Like,
today
people
that
just seem to
the
forgot
Fed's
that
shift
happened.
on rate cuts
And the only
could
reason it
lead
stopped
to new
happening
trouble.
was because of the bank term lending program,
What's
which is no
hurting
loss.
the real estate
That is no
industry
more.
also is
And look,
that
this is
with
your-
these losses in terms of
which is
occupancy,
financial
is
conditions.
the interest rates have more than doubled.
And this is
that has
exactly
made
when
these
the market
buildings
started pulling
essentially
back.
almost all of them in major
when we
cities
got this
insolvent.
data.
If the Fed does not drop rates, these buildings, there will be a catastrophic, I believe, events going back to these
There's
local
going to be a
regional
credit
banks.
event. There could be.
Our next guest is at the helm of a mid-sized bank and says higher rates haven't been an issue so far for her and her company. For more here, let's welcome
the Fed had your
Amalgamated
back.
Bank CEO Priscilla Sims Brown. She's also one of the 2024 CNBC Changemakers on our annual
and it
list
may not be
spotlighting
all
women
banks,
whose accomplishments
but
have
there will
left
be
an
some.
indelible mark on the business world. Ms. Brown, welcome. Good to have you with us.
Thank you.
And
It's great to be here.
congratulations on being a change maker, which I know is a title you have justly earned. Let's go back to what Don Peebles said there, predicting a catastrophic effect on commercial real estate. I think he's speaking mostly of office buildings.
Loans that are gonna
if
come
interest
due,
rates
that
don't
are
come
coming
down,
due.
and that catastrophic effect will ripple through to banks just like yours. How do you answer him?
Yeah. Well, I can't speak to the larger banking industry or even the effect that it will have on all mid-sized banks, but I do think it's important that banks are well positioned in this environment. And for us, it means even prior to the Silicon Valley Bank problems that you mentioned about last year, we have positioned ourselves
I'm
to
glad she's not denying it.
thrive whether interest
I was
rates are
scared she
going
was
up
gonna
or
come
down.
on and
And one of the
deny it.
ways we
That's
do that,
good.
obviously, is to maintain high
Because
liquidity.
it's-
In our case, more than double what is required for satisfying our most risky depositors.
How exposed
Those
is your bank to the kinds of commercial real estate companies or properties that Don is
Yeah.
referring to?
Yeah, Don is talking, I agree with you, he's probably talking mostly about office real estate. And in our case, it's really important for us to have
it's
a
any real
limited, a
estate.
minimal
Hotel?
amount. And we have 6 serious loans,
Commercial
serious size
properties?
loans in metropolitan areas of office-only real estate. Together, they make up something under 60 million. So it's not, for us, a very significant problem. But again, that goes to speaking to the responsibility we all have when you have.
So here's the thing. You know, when a loan comes due, correct? A lot of these places are not putting out 5, 6, 7, 8 caps, which means if you get a property and you get a 6 cap, 5 cap, whatever it is, we'll just say 5 cap. That means, you know, rates should be around 3%, 2%, which they were for a while. And you have a lot of 5, 6 caps, which means, you know, if you can get it depending on the right price, you know, also depending on the price that you get it at, you know, you need rates to be lower than the cap rate, just for basic knowledge. I'm not claiming to be a real estate person at all or not. But the basic principle is you can collect on the difference between that, just like banks do. And that's how banks make money. And you can make the same money in real estate the same way the banks make money on lending money. You can just do it through homes and you know, real estate. Not necessarily homes. You could, but, you know, you want to be able to get, you know, you want to be able to accumulate a decent amount. You want, you know, 40, 50 million, 20 million, and be able to collect that, you know, 2, 3, 4, 5%, whatever you can get for the right price, and value add on top of it. But the thing is that these loans come due. If you were to go buy a Starbucks and the Starbucks is offering a 6 cap and rates are at 5.5, you know, you're struggling. Something goes wrong, you're underwater. It's coming out of your pocket at that time. So, you know, it doesn't matter if you're in hotels. It don't matter if you're in offices. You can't say that you're okay. The only time you can say you're okay is, they could come up with a couple different things. I just think to be naive that, oh, well, we don't have very many businesses. He's probably talking about that. No, this goes for everything. This goes for the Starbucks, the McDonald's, the Chick-fil-A, right? Whether they own their own building or not, I don't know. Okay? For all the shopping centers, okay? Those loans come due and rates are higher. And if they, need to refinance or, do a new loan, they're going to have to sell it. And if they can't sell it because prices haven't gone down, somebody's taking a loss. That's all it comes down to. That's the other part that nobody's talking about, is that if rates are still at 5.5%, 5%, nobody's going to want that at a 5 cap paying when the rates are paying 5%, because you got the loan at 2 or 3%. And you locked it in for 5 years, and that 5-year day, which is going to be coming up very soon, okay, that's what people aren't talking about, is that these aren't just loans that are 30, 40, 50 years, okay? These are loans that are 5 to 10 years, 2, 3, 5, 10 years. So when they start coming due, and you have a higher rate, and your cap is only 5%, you're breaking even, and that's not if something goes wrong. Now you got to sell it. Now you're going to have trouble selling it because you didn't value add it. You didn't add any value. Even if you did add value, it's paying a 5 cap. And rates are at 5.5. Nobody's going to buy that. And the only way that they are going to buy that is if the price goes down. So somebody's losing money. Like, do you guys understand what I'm saying? Like, I'm not claiming to be a real estate agent or anything, but when it comes when shit, there's gonna come a point where shit does hit the fan, and the only way for it not to hit the fan is if they pull rates down. Because if I have a property if one of you guys are looking to buy it, and I say, hey, I got a property here, all right, it's 10 million. Or we'll say it's $20 million. It's a 5 cap. Or we'll say it's a 6 cap. Okay, cool. Let me go to the bank. Let me go talk. Let me see what I can get it for. Okay. Well, guess what? You go to the bank, and you can get it for, we'll just say 4.5, maybe 5. Not that you can. All right. Maybe you can get interest free for a year or something. Something isn't going. It's not. That's not going to be enticing. There needs to be more leg room there, whether it comes through the price or it comes through the loan. So if I have trouble selling it, the bank is already, lent out on this for a while. They're either going to take a loss on the building, which means they're going to pay. They've paid more for it, or either way, somebody's taking a loss unless Powell has pulled rates back. And that's what we're coming up to. It's 2024 now. And you have a lot of these places are 5, 6, 7 caps. And rates are up there at that, and it's either if you're not going to get it out of the cap rate, you need to be able to get it out of the price. And prices have not came down. They have not come down. So I feel like we are going to get there. And you haven't seen a lot of it because people haven't had to sell the place. They haven't had to make a new loan. So let's see. Let's go do a lesson right now, as a matter of fact. I'm going to go do a lesson on that. And we'll trade the after hours. We got 15 minutes until 2 o'clock. Because I'm really interested in a lot of this stuff.
from breakintocre.com, and in today's video what we're going to do is talk about cap rates and why they actually don't really matter for your next real estate investment deal. Now the cap rate is undeniably one of the most widely used commercial real estate investment metrics. Don't really matter for your next real estate investment deal. Now the cap rate is undeniably one of the most widely used commercial real estate investment metrics, but at the end of the day, how important is a cap rate really? And at the end of the day, should you be using a cap rate to guide your real estate investment decisions, or should you be using a different investment metric entirely in order to value a real estate deal? That's exactly what we're going to cover in today's video. Subscribe button and hit the notification bell to be notified every time I release a new video. Now, if you cap rate for that deal would be 6%, meaning that you would essentially receive a 6% cash return on your investment, not taking into account any sort of debt on the property. Now, this metric can seem helpful at first glance, and oftentimes it's helpful just to get a benchmark of where the valuation of a property might be. That said, the cap rate fails to take into account a lot of other really important factors in a real estate investment that are going to end up making your returns over an entire 5, 7, or 10-year hold period. So in this video, what we're going to do is break down the 5 major downfalls of just using a cap rate to value a real estate deal and what you should be using.
Everybody, it's Ken again.
Right now,
This is Tyler. 2 years ago, he
Oh my god. This dude is so done today. He's having... Oh god. Just, why do they do this to him? Dude, what do they do this to him for? I don't want to click on him because they'll be knocking at the door. I'm telling you guys, don't trust them. They are not your friends. All right. Whatever they can do to tap into your phones and impede on your rights.
Hitting 74 cents at the high of about.
It's just
There's some kind of misunderstanding.
Business.
My city, Wilmington, one of the cities, only cities since Reconstruction to be occupied by the military, the National Guard.
He was
drawing
bad.
Bayonets in every street corner for 9 straight months.
I haven't heard a mumble like that until just
when
now.
I graduated that summer, I went home to take a job at one of the oldest law firms in the state. But after only a matter of months, I left that law firm and took a job as a public defender because I wanted to be more engaged in the effort. I went on to run for the county council, for the United States Senate, and then as Vice President of the United States. I've done so in large part because I thought that's something your dad would have done. I'm not exaggerating that. It's always been on my mind.
It didn't sound goofy, so you had to reiterate
Today,
that.
I sit behind the resolute
So you know
desk
he
where President John F.
did make that
Kennedy
up.
once sat.
The psychology
As I
of
look
him
from the desk,
reacting
if
to
you're
it.
ever taking a tour of the White House, I sit in that desk and I look in front of the fireplace. To the left is a bust of Martin Luther King. To the right is a bust of your dad.
I just hate how he plays
And
people.
I remember to
He's such a, he
looking
just
to remind
plays the
myself
shit out of motherfuckers.
what they would do in tough calls.
Yeah, you got so much respect. But here you are making the United States.
Principles Bobby Kennedy embodied were principles taught by my
wonder
grandparents
they,
and parents
burn our flags
around our kitchen table, and that's not
Your
hyperbole,
friends
that's a
trying to
fact.
put Trump behind bars.
My dad said everyone's entitled to be treated with dignity and respect no matter what their station, no matter what. And they thought I was taught the worst sin of all, and I mean this from the bottom of my heart. The worst sin of all was the abuse of power. Physical power, economic power, psychological. That was the worst sin of all, abusing power.
So why are you going after Trump? Why are you in your mans on your campaign? If you guys don't know this,
to leave no one
the
behind.
guy that's in the judge in
To
New
give
York
hate no safe harbor.
was his
all of us
on
to
his
preserve and
campaign
protect the
in the
very
Obama
idea of
administration. He
No,
left working
we're
for
unique-
Biden,
we're
and now
unique in
he is
America and in world history. We're the
judge
only
in New
nation
York.
Founded on an idea.
It's kind of
Every
funny,
other nation in the world is
taking
founded on
Trump's case.
geography, ethnicity, race, religion, except us. Think about it. The idea was we hold these truths to be self-evident. But all men and women are created equal in the image of God, deserve to be treated equally throughout their lives. We've never fully lived up to it, but we've never walked away from it. We've never walked away from it. And we're not going to walk away from it now.
Whoever said we were? What the hell is he talking about? Holy shit.
Today, we face another inflection point in history. The 2024 election is about two fundamentally different visions for America.
Less
Donald Trump's
government
vision
and more
is one of
government.
anger, hate, revenge, and retribution.
No.
He embraces the insurrectionists of January the 6th. He's running on it. And as mentioned already, he promised to be a dictator on day one, his own words.
Jesus Christ.
And he called for,
You gotta stop, Joe.
He calls for
You
another
gotta stop.
bloodbath when he loses again.
Yeah.
Look. Your family, the Kennedy family, has endured such violence. Denying January 6th and whitewashing what happens is absolutely outrageous.
He is.
I have a very different view of America. One of hope and optimism, like I hope all of you do.
The one of police
Optimism
and me
that Bobby
telling you,
Kennedy
putting my
embodied.
thoughts on you and your family.
I see America where we defend
Where we listen to
democracy,
your
not
phone to
diminish
make
it.
sure
I see
you're not
America
doing
where
nothing
we protect our
that we
freedom,
wouldn't do.
not take them away. And I see an America where the economy grows from the middle out and the bottom up. And
Oh,
that way the
Jesus
middle
Christ.
class does well. and
Well, that ain't
we'll have a
working.
shot. And where health care is a right, not a privilege.
I can't remember a time where young people were making videos about themselves about how they're just done with everything and how they can't make it.
By the way,
working
all the
two
stuff we've
jobs.
done so far, we've
But
done it,
bottom-
and guess what? We've
middle
cut
in
the
and
budget
bottom out.
by
Whatever he
a lot
says.
of money, $172 billion so far. So don't tell me it can't be done.
We just spin.
I see a future with a planet
I would love to see how many
save the
people
planet, as this
are
guy's
there.
busting his neck doing from climate change. Literally. Climate crisis in America.
Remarks
We've
of
got to
Martin
do
Luther
something.
King
The idea we send
Recreation
our
Center.
kids to school, teaching them to duck and cover. Think about that.
Think about it.
The idea of the United States of America, Bobby. Duck and cover at school. More kids being killed by gun violence than almost anything else.
Oh, we didn't have to duck and cover
Folks,
from the president
The
in
America we're
a
building
nuclear attack?
is significantly that we're going to get it done. And now it's time to keep going and not slow down because there's so much at stake. Let me close with this. I know Bobby Kennedy liked Greek poets, and they're great, but I prefer Irish poets. I know it's not a joke, unfortunately. My colleagues used to always kid me for quoting Irish poets on the floor of the Senate. They thought I did it because I'm Irish. That's not the reason. They're the best poets in the world. One I enjoy particularly is Seamus Heaney. He wrote a poem called The Cure at Troy that reminds me of the courage of Bobby Kennedy, and I mean this from the bottom of my heart, and it goes like this, one stanza. It says, history teaches us, do not hope on this side of the grave, but then, once in a lifetime, that longed-for tidal wave of justice will rise up, and hope and history rhyme. In 2024, we have a chance to make hope and history rhyme again. Are you ready to do that with me? Are you ready to move forward, not back? Are you ready to choose unity over division? Dignity over demolition? And choose truth over lies? Are you ready to choose freedom over democracy? Because that's America.
No, that's not Joe, though.
Folks,
y'all got
busted
with.
I've been doing this a long time. But I've
Y'all
never been
got
more
busted
optimistic about
before.
the future, and I mean it. You just have to remember
There
who
is
we
no
are.
democracy.
We're the United States of America. There's nothing. I mean this sincerely. Think about it. We're the only nation in the world, as a student of history, I can say, that's come out of every crisis stronger than we went in. There's nothing beyond our capacity. when we
He
do it
loves to
together.
like whisper and go. He's just such a
God bless you
goofball.
all. May God protect our troops.
May God, you could protect him. You cannot make those decisions. That you know is going to start some shit. You do anyway.
Your love takes me higher.
I just don't like that he lost it. It's going to get harder and harder because there's going to be more regulation. We already are starting to see it. We're starting to see it. What's going on? Is this...
Please have a seat.
Yeah, it is kind of funny how his son's getting away
Mom
with
and Dad, I hope you were listening. What an
how
incredible honor.
how his son
What an
can
incredible
go right
honor.
through the court
I
system,
don't want
but
to become emotional, but what an incredible
I'll be
honor
damned if the other guy is just
to have
getting
the
it.
support of
Yes.
the Kennedy family. John White Jr., thanks for the...
It's a shame. It's a shame. Things didn't have to be that way. Anyway, whatever he was I don't know. He was talking about Martin Luther King. Then he started talking about JFK, and then it was just mom, dad, unity. Then it was about Trump. He just can't get that guy name out of his mouth, like Anthony Scaramucci. So yeah, things are so good, but more and more people are struggling. Let's see. So look, we have a nice little bear flag here setting up again. This happened yesterday, right? This is the same one of the same setups as yesterday. We'll see if this amounts to anything. I mean, I doubt that it will. I mean, that would be a lot. What is that? There's no way we could do that. I'm not gonna say there's no way, but because there's always, dude, that's damn near 1%. That's a full percent from there. There's no way we can go. I guess we could go 1.2%. Or, you know, we could go about 1% today. Look, and that takes us right to 494. What do y'all think? Do we do it? You guys want to take a shot? 495s? 495 puts? I might try it. I might go ahead and do it. You might get some headline news.
Anything about the markets, or is Tesla just kind of in its own cubicle?
Yeah, Tyler, I would say it's mostly about the fact that Tesla's been in free fall, but it does also reflect that this is much more of a show-me market than maybe it has been in the latter part of last year or even the early part of this year, meaning where the earnings estimates are going higher or you're getting evidence that the current estimates are supportable, the stocks can perform. Otherwise, no. And earnings estimates for Tesla have been really going straight down for months now. So therefore, the valuation looks still challenged even as the stock has gone lower. I would point out it's also pretty much crossing with Walmart's market cap at this point as well. So it's kind of going down the ranks as these more steady companies, and UNH, of course, had a tough start to 2024 as well, but did have better than anticipated guidance within its report. So I think it's about the market following the numbers in a little bit of a macro flux moment, because we do have yields going up again to those multi-month highs. People trying to figure out if the economy can absorb that.
It's about a 4% decline, I guess, from the highs or thereabouts, but recent highs. Is anybody really worried about this decline having longer-term traction, or are more people on the side that we're probably, no matter what the Fed does or doesn't do, in a bullish sort of environment?
At this point, I do think most folks are saying, look, we went up about 28% from the lows in October to the high 3 weeks ago, giving back 4% of that. So I don't think there's panic. I don't think you see evidence of panic, but I do see evidence of growing concern about this little upturn in volatility. If I'm looking at things like people buying protection on the downside, put option volumes, and also, of course, when you do get a pullback, sometimes you want to see people get a little bit more scared before you have this sense out there that you've kind of shaken enough people out and this pullback can be viable.
All right. Thank you very much. Mike Santoli.
All right. For more on the market and the Fed, let's bring in CNBC contributor Tom Lee, who's the co-founder and head of research at Fundstrat. Also joining us is Professor Raghurajan, former IMF chief economist and governor of the Reserve Bank of India, a professor of finance with the University of Chicago Booth School of Business. Gentlemen, it's great to have you both on Power Lunch. And Professor Rajan, I want to start with you. Incredible just to see how quickly the market narrative has changed from expecting a rate cut in June now to some economists saying perhaps not at all this year. You've been in the seat that Powell is in, different country, India, but still I'm curious how you think he navigates this complicated scenario that we're in, which is hotter economy with inflation remaining much higher than expected, and at the same time, rates also staying higher, the impact that could have on consumers.
Yes, I mean, clearly what's happened is we've had 3 strong readings of inflation. One you can dismiss, certainly the January one, but the next 2 basically suggest inflation is not coming down. In fact, it's going up. And if you look at the measure that the Fed has looked at most closely, which is the super core measure of inflation, taking out housing, it's gone up at an 8.2% rate over the last 3 months. So this is something to worry about. Is inflation coming down steadily as it seemed at the end of last year, or is it having a new set of legs and moving up? So my sense is, they're going to do what they did, which is watch and wait. But you heard New York Fed president talking for the first time about potentially rate hikes. I think that's still some ways away. Serious talk about that. But clearly, the kind of rate cuts that were expected are off the table. Certainly, in the next meeting, they have no more news on inflation or the labor markets, and it's likely they will continue pausing. But how long they will pause is now very much in question.
Tom, Professor Rajan mentioned John Williams, New York Fed president, who did just mentioned rate hikes, but he did said that's not his base case. But even the fact that he mentioned it, you saw the 2-year move to around 4.99%, which is a high for this year. You still have this notion that stocks can continue to outperform if
they don't
rates stay high. How long do you think that theory will last?
Well, I think it's
do anything
going to be valid as long as
they will,
one of several things
he will
happens.
Sit there
one is that,
and this is what I'm talking about with him personally. When it comes to just getting a vote and lying to these people about how, like, you guys have to understand, for anybody that thinks that Donald Trump is against someone like getting abortion or something, he is not that. That is not him. His opinion is, who am I to tell you what to do? Just like you need to not tell me what to do. Right? And that is why things like him going to court, the damn judge used to work for Biden and Obama, okay? And his son just is left alone. One case, good, bang, gone. Cocaine in the office, gay stuff going on, and everything else from there gets they just bat an eye. But because he's a competitor, they stay on him, and it's sick, right? And it shows how they really treat you. When I tell you guys, he ain't your friend. I'm telling you guys the truth. I don't just make this shit up. There's a reason why I know. And I'm just going to say that he stands for stuff that's fair, this, that, the third, but he doesn't. He doesn't. He wouldn't if he really cared, he wouldn't use things like on his campaign trail, I want to, make Roe v. Wade, whatever the hell it's called, Roe v. Wade, the law of the land. He knows he can't do that. But yet he does that in hopes to get people for it to trigger somebody to vote for him. When he himself knows that. And if he could do it, why would he hold that over somebody's head instead of doing it now or last year? Right? Because he can't, and he doesn't. He's not going to. He's just using these as things to get a vote. So, I mean, there is a democracy. Donald Trump believes in a democracy. This is not like Donald Trump just did his own thing. No. What the Senate and the House passed, he signed. It's not like he didn't sign these things. Right? He met in the middle with them all too. And this is what is what the thing is that what they don't like is when he comes on TV to say, "Hey, American people, this is where the money's going on. This is what they agreed to. Do you agree with this? Because a lot of you ain't going to read it or look into this stuff. So I'm going to let you know. I'm going to sign it because they agreed to it. And since they agreed to it, I'm going to sign it." People forget that that's how things work. And it's about who you have in your cabinet. The people that they have in their cabinet, whether they are a friend or a foe, will be based, or your business being sold to a bigger company. You started small, you're ready to retire, you're ready to hand it off to somebody else who can run it and take it to the next level. Because most people can't take a business to the next level. So if you have any type of ill will towards the administration, or they have an ultimate right to say, no, you can't sell your business. Right? That's not how that should be. There's a lot that goes on with Biden and the people who he decides to put in his cabinet that are a little shady, just like John Kerry. You don't ever see him. I thought I used to like John Kerry, but he's a joke. He's just a fucking joke. He's just another one of them. Let's hire a whole bunch of IRS agents to continue to go after more people, because I got a war I got to fund. How about you fix the war? And if you have so much money to give out, what are you going to do about all these people that can't make it? All these young adults. And then you're going to take all their drugs away so they can't have something to just drain their sorrows in. All right? It's just crazy. We're gonna have more regulation to where mom and dad send you some rent money, and you get an $800 to $1,200 transfer. Now you got to tell the IRS where that money came from, what it was used for, this, that, the third. First off, it ain't their business. That's Joe Biden. That's Joe Biden's America, not Trump's. Let's just get that straight. That's not democracy. That's big government over people, and people are not able to make it with big government. All right, you had the greatest transfer of wealth 2016 to 2020, and it really showed in 2018 going into 2019. You really had a shift in people in different age brackets, feeling like they were getting a break. And he talks bad about businesses. Big business, they got to pay their fair share. Well, let's just not forget that each paycheck every single week gets taxed. Let's just not forget about that. Okay? And big business is people. Okay? That is people. So yes, they should be getting tax breaks. That allows them, those tax breaks, you know where they come from? Doing things like giving people raises. Okay? This is not, I have a whole bunch of shares in equity that I'm going to be paying capital gains tax. My capital gains just got dropped. That's not, nobody's getting away with anything. Like they think people just get away with stuff. You either spend it, or you, it still comes down to whether it's earned income or if it's not. So this idea that some billionaire is just not is paying less taxes than a teacher. Well, did that billionaire just literally buy a restaurant and put 20, 30, 40 people to work? How many businesses did he help when he pieced that for the fabricators of the restaurant that he paid for and hasn't seen a dime off the restaurant yet? He had to put that money out for that. So it's like just this idea that like people are ignorant to not pay taxes and they're stingy and they don't want to give back. It's crazy. There may be a few out there, and I don't blame them for not wanting to give it to the government. It's their money. I don't care if you make $1. I don't care if you make 100 billion. Okay? It is not the government's job to continuously take from you. Especially if you have payroll and you're hiring people and you're spending money that goes directly to other businesses, whether that be for buildings, automobile, whether it's the materials for jobs or pens or whatever, that gets put back into the economy. So, wanting to raise taxes, the only reason he wants to raise taxes is because he's got wars to fight. And listen, I'm just saying, I grew up with it my whole life. And we finally started to get a break with it. And then not only did we get a break from it, there was this burden pushed off us where we all had a little more money. And it wasn't under this guy, it was under the last guy. When you went to go get a job, it wasn't hard to ask for $36 an hour, $32 an hour. You were getting it if you were worth it. If you had some kind of trade or you were doing something decent, you were getting your 65 to 70,000, if not 80,000 a year. You probably get it now. You probably had it back then without working 2 jobs, but a lot of that came because of, you know, the last guy, not under him. But it'll get harder. It's okay. I can't do another 8 years of that, man. I'm gonna say right. It's not even just him. It's the entire cabinet, especially Regina. Like, it just shows it just goes to show you the type of people that they are. When her own mother asked her not to join, and she said no because when her mom asked her not to. I thought her name was Regina. Let me see here. Let's see here. It's Gina? No, not Gina. I thought it's... Why is it still coming up as that? So her mom asked her not to join politics. You know, because it is Gina. Okay, Gina Raimondo. She said, "No, Mom, I'm ugly too. I want to join them." Her mom didn't want her to, because it's an ugly place. And she said, "No, I want to be ugly. I want to be that dickhead. I want to be ignorant. I want that. I want to have that feeling of power." Right? It's just, this guy don't look too bad. I don't know what's up with that guy, but that might have been. You know what? That's where the bag. I can tell you right now, he's the one who probably dropped the bag that they found. I don't know. I'm just seeing if I know of any of these people. Economics. She doesn't look bad either. You know, most of these people I don't know, other than this goofball. But I do know her. See, the thing is if you're in the markets, you should follow and take notice to what companies allow buyouts and what don't. And it just speaks. I mean, here's a former prosecutor who put a bunch of people behind bars, whether for the good or for the bad, right? From major to minor, right? And then this one, like the fact that they would okay that, because the thing is that they want government over you. They want to know who you are, what it is you're doing, and you have to explain to them half the shit that you do. Like when you need something happens and you get something sent to you and it's over $600, but it's for the rich people. That's my point. It's for the rich people. Do you remember the cages with the Spanish people that, you know, the people that crossed the border? You know, they all got on Trump on everything, and then what did they do? They just tacked signs of love and everything over the cage. Like, what? Holy shit. I should pull it up, man. Yeah, Janet Yellen, all of them, there just needs to be a new administration. There really does, as a whole. I want less government. That's just who I'm for. If you're for government, that's fine. You know, that's not me. That's not what government was built for in the first place. And it's just like after 9/11, and you guys saw when they started to put a cage around the White House. They'll protect the White House, but will they protect the border? Nope. They said, nope, bring them in. We got another war about to happen in Taiwan. We need to bring as many people in here as we can because we're going to need them all in the front lines to get killed over on Taiwan. And then they won't fight for their own country, so what makes you think they're going to fight for here? You know what I mean? Put 2 and 2 together. Oh, you thought they was going to actually fight and do something. Instead of, nah, you just going to find them getting drunk laying in the ditches. They ain't want to do it for their own country. What makes you think they're going to do it here? Come on. Come on.
Just like what happened in the Big Ten with Iowa playing in those sold-out arenas. That's happening for us, and hopefully a rising tide lifts all boats, and it'll lift all of our teams. We have some great rivalries forming with Caitlin, Sabrina in New York.
All right, so Meta's just hanging out. If we can get a retest, we'll see what the spy does, and some nice volume. I'm gonna go make some coffee. I'll be right back, and we'll put this on. I'll play this, and looks like another day without a trade today. Well, I mean, I traded Meta, but I was really looking for something nice today. I haven't went through much of on the scanners. Let's see here. Let's see here.
So it starts with media rights. We need to get those values correct. With Caitlin, Diana Taurasi in Phoenix, there's a little edge there. Obviously, you have Cardoso and Angel Reese going to play in Chicago. So I think parity in the game is really important, as well as having these players really help us drive the league to higher heights. So you asked a revenue question. Revenues, media rights, corporate partnerships, and then gate, people coming to games. So we need more people to watch, attend, and the quality of the game is what I'm so proud of. It's there. I mean, people love watching our game. If we can get fans into the funnel to watch the games, they're going to come back, and then they're going to attend and rep and buy merch and everything that goes around the revenue model for sports. So it starts with media rights. We need to get those valued correctly. And then it goes to corporate partnerships, and we've been doing great on that. There's a lot of corporations who are stepping up to support women's sports. A lot of money and capital inflows. We raised capital, $75 million in capital 2 years ago. So when you see that money coming in, you know you're a growth stock, and you know you're a legitimate sports media and entertainment property.
Kathy, what does that ultimately mean for WNBA players, where there's been so much criticism around how they make much less than NBA players and, in general, male athletes overall?
Yeah, and one thing, there's a false narrative out there about Caitlin herself, and nobody ever just looks at base pay. It's proxy season, right? You look at base pay, but plus bonus, plus stock options, et cetera. She'll have the ability to make up to $500,000 in just her W earnings this year. And then obviously she has huge endorsements. You just mentioned her Nike endorsement. There's a huge opportunity for us to lift this for all of our players. And as we get into a new collective bargaining agreement in a year or two, that'll be an opportunity to pay the players more. The one we did in 2020 was viewed as progressive and historic. We tripled the pay of the top player. And now I think what's happening, they're also getting endorsements. I mean, I think LeBron James signed an $80 million plus endorsement with Nike before he even came into the NBA. And no one ever had that narrative that his salary at the NBA was a lot lower than his Nike endorsement. And so we're getting there. Those other men's leagues are 50 to 100 years, so 75 to 100 years older than we are. We're tipping off our 28th season. We are the longest tenured women's professional sports league in the country by double any other. So we're proud that we're leading here. But yes, do we have a lot of hard work to do? Yes, we need our media rights valued appropriately, and we need more partnerships and more people to attend and watch and rep the WNBA.
I'm just curious about expansion. You talked about bringing new teams to new cities from Portland. You talked about Nashville, Denver. What about international? Because we've, of course, seen the NBA and NFL go to Europe and other countries beyond.
Yeah, it's a great question. We're trying to globalize our game, too, because when I joined the league, we were basically a domestic league, and we have a lot of fans around the world. We showed our games in India last year. For the first time, I think 22 million unique viewers watched WNBA games, so we have enormous opportunity globally to bring our game there. We are, we bring our game to over 200 countries and territories, but we also did do a preseason game in Toronto last year, sold out. The night after the Stanley Cup playoffs with the Maple Leafs, the next day we sold out the same arena. And so, yes, this year we're going to Edmonton in a couple of weeks for a preseason game in Canada, and hopefully we can expand in Europe and more broadly. And I've admired how the NBA has globalized over time in Asia, in Europe, now in Africa, and we'll follow on suit as we start to grow this league.
A question and an observation. The Olympics fall right in the middle of your season. How are you going to accommodate that, and how important will the U.S. Women's Olympic team be to expanding the brand awareness, the personality awareness of your players?
Yeah, so the U.S. women's national senior team are going for their 8th consecutive gold medal in Paris. Actually, the WNBA was born out of the '96 Atlanta Olympics when the women won the gold medal, and David Stern, the commissioner of the NBA at the time, and Adam launched the league back in '97. And so it is really important because now we're on this run of 8. Diana Taurasi herself is going for her 6th consecutive gold medal. That's 24 years of excellence. So it'll be a great story. We will break for a couple weeks, but it'll be in the middle of our season, right off of our All-Star game. And it'll be great. When they come back, we'll get a big pickup and lift. I know NBC is going to market a lot around this team.
You bet.
And again, 8th consecutive gold medal.
Well,
yes.
we are the network of the Olympics, Kathy, as you well know. I want to just make this observation. One of the genius things I think you all did was have at the NBA All-Star break, was it Sabrina Ionescu in the shoot-off with Steph Curry? She almost beat him. Yes. Steph Curry almost beat him. I think he had to make the last shot, and she was shooting from the NBA three-point line. I encourage you to continue to do that because that was the most compelling part of what otherwise to me was just kind of a normal NBA All-Star weekend. So congratulations, Kathy Engelbert.
Yeah, and I think it was. Yep.
Go ahead.
Great.
Finish your thought.
It was a great event. It was a great event. It came off of Sabrina breaking Steph's record in our All-Star game last summer. And it was an idea we had executed beautifully by the NBA during the three-point competition at NBA Skills Night. And it was highly viewed. And
it was
I think
awesome.
people,
crazy,
especially for young girls, to see Sabrina on that court,
over
and
some
even
hush
someone
money.
like me who played back
when
in
you
the 80s.
when your president's son was over a gun.
Yeah, it really was.
More
Kathy
so a
Engelbert,
violent
thanks.
crime.
Exciting time. Dow is back in positive territory.
Now.
Let's get to Kate Rogers
Y'all
with a
can't
news
tell me
update.
he
Hi,
stands
Kate.
for equal.
Hey there, Seema. Welcome back to Power Lunch here. So, jury selection in former President Donald Trump's hush money trial is just resuming after the lunch break.
Hush money trial.
Were dismissed, reducing the number of seated jurors to 5.
4th Street, Wilmington, Joe.
Accused Trump of continuing to violate
your
his
man's
gag
out on
order.
4th Street
The judge
every
also
other
urged the
day.
media to stop reporting
Go there.
detailed
Go to
information
Wilmington. Go to
about
4th
jurors
Street.
out of concern
You'll
for
see
their
him every other
anonymity.
day. Every
U.S.
day.
senators
You'll see him.
introduced a bipartisan measure to speed up the development of
you
nuclear
didn't have none of this
power plants
going
run by
on.
nuclear fusion reactions.
It's
The
kind of weird,
senators
right?
say it would set a clear regulatory authority to scale up fusion energy facilities and incentive investments here. Fusion, which is the same process that powers the sun, could be a power source that emits virtually no greenhouse gases. And the countdown is on for Taylor Swift's newest album. And even though it hasn't come out yet, it's still breaking records. Spotify said the Tortured Poets Department is now the most pre-saved album on the streaming service. It comes out at midnight. Back over to you guys. I cannot wait for that one.
All right, Kate, thanks very much. And up next, Netflix on a hot run, up 78% over the past 6 months, fueled largely by its password sharing crackdown. What's in store for earnings? Power Lunch will explore that when we come right back.
CIS and WBD.
That's so funny. You guys know what just came out? That's
Futures settled at 82.73, up 4 cents.
That's so funny. And y'all and a few of them just tried to tell me how good they were doing. Oh, it's up 12% year over year. It's up so much Disney don't even want to do it. NBA just got dropped. They didn't sign a new contract. They don't want it because ain't nobody watching it.
All right, welcome back, everybody.
Anybody who's anybody in the sports industry and gambling and betting and just knows about sports, the real ones know
what to expect. What do you say?
Find out in a matter of hours, but in the meantime, we know Netflix has been on a tear coming off that quarter where it smashed expectations for new subscribers and revenue growth. And of course, the big reason for that, cracking down on password sharing. Shares are up 26% so far this year. But the question for this quarter, is that momentum going to continue, or was this just a sort of brief spike in growth from password sharing cracking down? Street's expecting for this quarter a little over 4.5 million new subscribers. That would be more than double from the year-ago quarter. Revenue would be up 13% in the same period. What we don't know as much about, though, is advertising and gaming. It's unclear, for example, if the cost of licensing and making mobile games keeps Netflix subscribers stuck to their subscription. For advertising, though, the company has said it has more than 23 million users on its plan with ads, but it's unclear how much revenue those ads are bringing in. And on the content side, we're seeing a lot more experimentation, such as live events, including a major one coming up, that boxing match between Jake Paul and Mike Tyson this summer. My money's on Mike. Still, no traditional live professional sports beyond documentaries, guys.
Steve, stick around. Let's bring in Barton Crockett, Senior Internet Media Analyst at Rosenblatt Securities. He's sticking with a neutral rating on the stock ahead of its results. Barton, it's always great to see you. You're a bit more cautious going into this report, but you're not alone. I read the reports from Deutsche Bank, Goldman, among others. Your price target, $554, which is below where the stock is trading. Tell us why. Tell us the number one reason you're a little bit more cautious.
Well, I think Netflix's stock has a strong history of really moving in tandem with subscriber growth. And they've had a tremendous lift in 2023 from the paid sharing crackdown. They added nearly 30 million subscribers in 2023. And that was on, 100 million people globally, 30 million in the US being impacted by paid sharing. Many of them, I think, have already signed up if they were going to. And so I think the impact of that fades. And I think you're probably looking at a 2024 where there's much less subscriber growth than there was last year. And history would tell us that that's a tough setup for Netflix's stock. And so that's number one. And, I think we'll start to get a sense of that here with the March quarter earnings. But really, the story will be told in the June, September, December quarter when the paid sharing comps really kick in.
Is it competition and also just trying to figure out their ad tier strategy, or could we put some of the challenges at the macro level, whether it's higher interest rates, consumers now being a bit more selective about where they're putting money to work and what they want to buy?
Look, I'd say it more charitably. I think that they've just had so much success that it's going to be hard to sustain that. And I think the stock's run, with the performance that you see here, tells you that the market's expecting this to be sustained. And I'd like to see that be digested. I think there's a ton to be, to admire at Netflix. I think they're really killing it in terms of dominating subscription video on demand. Their ad rollout, I think, is a slow burn, but one that ultimately, is having success. Trees don't grow to the sun here, to use the cliche. 30 million subs, retreating from that, I think, is something you want to let the market digest before you plow into the shares right here.
Steve, size up the competition. Is it really a threat?
Well, we're seeing some interesting stuff with the competitors. We know the problems that Paramount is going through right now, so let's just kind of put that aside. Look at what Warner Brothers Discovery is doing. Look at what our parent company, Peacock, is doing. Look what Disney's doing. First of all, Disney's copying the password cracking, cracking down on password sharing, just like Netflix did after all that success. Second of all, we're seeing those companies, Warner Brothers Discovery, NBC Universal, start licensing more content back to Netflix. Netflix is if you go on Netflix now, you'll see a lot of content from HBO, for example. That used to be unheard of not too long ago. So Netflix has kind of turned back into this hub of where everyone knows that's where all the eyeballs are. And so instead of doing original content, we're also seeing them spend on these more reruns and so forth from traditional media companies as well. So the competition is starting to rely on Netflix because, look, Peacock losing money, Disney Plus still losing money. All these are money losers, and they need to make up that revenue somehow.
They're the best name so far in terms of how the company's been able to gain market share. But Barton, you also say that Netflix could be a sleepy beneficiary of AI. Explain what you mean by that.
Sure. If you're looking for a new story in Netflix, beyond paid sharing, I wonder about this one, which is, we're hearing a lot of talk about tools like Sora, OpenAI. Tyler Perry was kind of building an $800 million soundstage that he pulled back on because with this type of generative tool, he's not sure you need to have studios anymore. That sounds like that could be a big cost saver. And it sounds like if anyone's really kind of benefit from that, it could be Netflix. So, what I'm interested in hearing them talk about
so
on the call is
good,
that.
but they ain't got a deal yet.
Over time, a real kind of cost
NBA
reset
exclusive TV
that
rights
they could lean into
negotiating
perhaps more than
window
anyone from
with
using
ESPN.
generative AI to do a lot of the production work for
Oh my
content.
God, it's so loud.
I think that's really
now at 207.96, down about 1.75% below under $185 earlier for PRI.
PRI. So yeah. Both Disney and Warner Discovery are actively in talks with the NBA, and those discussions will continue. Amazon, NBC Universal, Netflix, YouTube, and Apple have all expressed preliminary interest in talks with the NBA about potentially buying a package of games as a new partner, CNBC reported last year. So, fact is they're not doing too well. We'll see what the numbers on the Final Four are this year, because there's always more people. But beginning of next week, the NBA will be able to work on agreements for a new partnership. So they're not re-signing it. Well, no agreement is expected to be announced by the deadline. There you go. Disney and Warner Brothers Discovery both continue to work on terms with the league, and NBA spokesperson confirmed the NBA would like to bring in at least one new partner to serve as a flag streamer, CNBC reported last year. The league wants a robust streaming partner. The league wants a robust streaming partner that will use marketing and reach to make the games a priority on their platform. Man, there ain't nothing you can do, bro. The only thing you can do is like, I don't know what would make the NBA get back to what it once was. I really don't. I think all the dumb shit that they did this year really did more harm than good. Like just everything that. Why did he have to do anything with like the courts and like little playoff stuff? Like it might be good, but if it's too much for people to pay attention to, like, just play your games, and if you make it, you make it. Maybe make it tighter. Maybe have less of them be able to make the playoffs. I don't know, but it's just I don't know. I don't know. That's why I'm not the commissioner. You have a lot more people that are playing video games now that aren't even watching sports. Like, it's not surprising. This stuff isn't surprising. Like, they'll be picked up, but it's just, I don't know.
There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
World-changing question. Are you keeping as much of your investment gains as possible? High taxes can erode returns quickly, so you need a tax-optimized portfolio. At Creative Planning, our money managers and specialists work together to make sure your portfolio and wealth are managed in a tax-efficient manner. It's what you keep that really matters. Why not give your wealth a second look?
I think we're going to sell off again here, guys. I really do. I think I'm going to grab some puts real quick. What are these at? What are these at? No, man, I don't need fucking 34 of these mother truckers.
Welcome back to Power Lunch, everybody. The money continuing to flow from the government to the semiconductor companies as part of the CHIPS Act. Micron Technology set to be the latest recipient. Megan Casella has the Washington angle. Christina Partsinevelos looking at the corporate side. Megan.
Meta has a nice gap up here. That's a nice gap up top. Up at the top of the range. Wow, that was a tough short, guys. That was a really tough short.
Senate Majority Leader Chuck Schumer was touting the impact of the investment in his home state, saying that Micron will invest more than $100 billion over the next 20 years, create more than 50,000 jobs in New York alone, and those will be in manufacturing.
Welcome back to Power Lunch, everybody. The money continuing to flow from the government to the semiconductor companies as part of the CHIPS Act. Micron Technology set to be the latest recipient. Megan Casella has the Washington angle. Christina Partsinevelos looking at the corporate side. Megan, let's begin with you. Megan?
Hey, Tyler, that's right. So Commerce Secretary Raimondo just confirmed at CNBC's Changemakers Summit that Micron will receive the next CHIPS award. Companies expected to get $6.1 billion in direct grants from the Commerce Department.
I wonder what made her decide for Micron. No, I like Micron. I'm a big proponent of Micron. I've been screaming Micron.
Senate Majority Leader Chuck Schumer was touting the impact of the investment in his home state,
a lot of people
saying
are
that
big
Micron
on
will
NVIDIA.
invest more than $100 billion over the next 20 years, create more than 50,000 jobs in New York alone, and those will be in manufacturing, construction, and all along the supply chain. A senior Biden administration official also added that this award highlights how the CHIPS Act is making America more competitive, creating jobs, and driving economic growth in Syracuse and all across the country. Now, the Commerce Department has just about $10 billion left to dole out from that $39 billion CHIPS fund. Raimondo told us in an interview on this show earlier this week that all of that money will be allocated by the end of this year. Raimondo told me the next rounds of investments are likely to focus on memory chips, as well as funding for suppliers, wafers, chemicals, all of those input products that we need to support chip manufacturing in the U.S. Tyler?
So 10 billion, what did you say was left? 10 billion was left here?
Yep, exactly.
That's a lot of money, but it's not all that much, really, when you look at what is it, 8.5 billion, 6.6 billion that have already been given out to Intel, TSMC, and others. Who else is in line with their hands out for this?
We know that some of those bigger companies are likely looking. AMD, NVIDIA is likely to get a little bit of money. But we also, because it really isn't that much money left, like you said, we really need to see some of that money go to suppliers. That's the commentary that we hear most often is it's great that these big companies get these awards, they create these big investments that the administration likes to talk about, but are we going to be able to support all of that manufacturing here if we don't also support the upstream suppliers? So maybe we'll start to see some smaller names get some smaller awards as well.
Megan, thank you. Let's turn to another chip story, the Micron side of things, with Christina Partsinevelos, who's been digging into that stock. Christina.
Well, Micron, as we talked about, the award was largely expected after competitor Samsung received funding just last week. So a lot of analysts were expecting this. Micron already warned it needed CHIPS Act funding to support its investment plan. So this news is seen as a positive, especially since the firm already started construction in Boise, Idaho, with production supposedly slated for next year. The question is if that plant or the New York plant one gets delayed. We've already seen delays with TSMC and Intel. The stock, though, look at it, down. We're showing you TSMC right now, but Micron is down, and it's down with the entire sector. That's because TSMC's results are spooking investors right now. This is the largest chip manufacturer in the world, and they said, yes, AI demand would grow to over 20% of 2028 revenues from its current low teens level, but they listed a few concerns in their report. First, a lowered 2024 outlook, which doesn't include memory chips, to 10% growth year over year from an over 10% growth. So just that over amount was the change. Management expects Q2 margins to be impacted because of the earthquake in Taiwan, higher electricity costs, and production of inefficiencies that we're starting to see with the 3-nanometer production technology that's the most mass produced at the moment. The capital expenditure guide was reiterated. Analysts see that not necessarily as surprising, especially after ASML yesterday maintained its top line growth, but you have other concerns too that revolve around non-AI demand. TSMC sees auto sales down this year when they previously thought they would be up, which is negative for onsemi, NXP, STM. That's why they're all in the red right now. The company said smartphone sales were recovering. Great. but slowly. TSMC counts Apple as its biggest customer, so you can read into that how you want. And then lastly, TSMC warned around foundry weakness, which is perceived as a negative for global foundries and United Microelectronics. And that's why so many of these names are lower today, Tyler.
All right, TSMC, Christina, also had some interesting comments on a topic we hear a lot about, which is how much power these chips use. What did they say?
Yeah, they said that soaring electricity costs are really just eating into their margins and their profits. The company forecasts a 25% increase in electricity costs starting this April, this month, that would reduce gross margins and contribute to higher costs for customers, competitors. This all according to the CEO on the early morning earnings call today. TSMC's power costs, though, are emblematic of a greater problem facing firms all across the country. How are they going to power these AI machines, large language models we keep talking about, when so much of the infrastructure here in the U.S. is outdated? McKinsey says that data center electricity use will double over this decade. And just look at this graph, it's surging. The latest International Energy Agency report stated that ChatGPT consumes roughly 2.9 watts per hour of electricity per request. If you don't know what that means, it's like running a 60-watt light bulb for 3 minutes. That's 10 times as much electricity as just one Google search. And many are raising concerns because of this. The Arizona Public Service warning that they'll be out of capacity before the end of the decade if they don't get upgrades. Oregon's Portland General Electric doubled its forecast for new electricity demand in the next 5 years. You got tech execs weighing in. Elon Musk warning we may see a power shortage for chips as soon as next year. Amazon CEO Andy Jassy telling Fortune that there's not enough power for large language models. You got OpenAI CEO Sam Altman saying we need an energy breakthrough for any future AI technologies. And that's why you have so many of these big tech firms rushing to get their own power by building massive data centers and even nuclear power plants.
Christina, thank you. And Tyler, I've been following the industrial side of this, some of the companies that are working on the AI infrastructure, and their biggest complaint is also there's a scarcity of power demand, power capacity, because without that, they can't continue to build all the parts that they need. So companies like Eaton, Vertiv, they've all had a really strong year. Coming up here on Power Lunch, homes, rails, and casinos. We'll get the trade on D.R. Horton, CSX, and Las Vegas Sands in 3-stock lunch. We are back in 2.
specifics, but we'll certainly keep you informed. Thanks. Yes, sir.
Thank you, General. So on Tuesday, the House of Representatives passed a resolution that deeming the slogan "From the river to the sea, Palestine will be free" is anti-Semitic and its use should be condemned. Does the Pentagon have a statement on this passing or that slogan and whether it's problematic or not?
I don't. Thanks. Sir.
Different topic, U.S. and China. So why was the discussion between the Secretary Austin and the Chinese Defense Minister Dong Jun held by video teleconference instead of just calling? So which side made the offer to like a video style?
Sure. On your latter question, we've been working at the staff level for months, ever since the President Biden held his meeting with Xi Jinping to arrange a call. And so oftentimes, in terms of whether that's a phone call, whether it's a video teleconference, that's coordinated between the two staffs. The key point here, though, is that they had the opportunity to communicate. And so, again, we'll continue to look for opportunities to continue communicating in the future. Thank you very much. Yes, sir.
Thank you so much, General. Regarding to Rafah, when do you expect to have any updates from the Israeli sides about their plan? If they want to do military operations in Rafah?
Well, again, when it comes to timelines, that's really a question for the Israelis to address. As I mentioned earlier, our discussions continue to be ongoing with the Israelis in terms of what their thoughts are as it relates to Rafah. Again, and it affords us an opportunity to highlight our concerns and our key points, which are that we want to see humanitarian assistance and civilian safety taken into account in going after Hamas.
Can I ask another question about another topic regarding to the Niger? Does there any change to the U.S. military footprint in Niger? And have you seen the reports that the Russian sent some troops to the region there? So would you give me an update about that? Thank you.
So our footprint in Niger has not changed at this time. And as it relates to media reports of Russian forces going into Niger, certainly aware of those reports, but I don't have any comment to provide. You go here and then I'll come back.
Thanks so much. The U.S. 7th Fleet announced the aircraft transit through the Taiwan Strait one day after the Secretary's phone call with the Chinese Defense Minister. And China criticized this transit through the Taiwan Strait as provocative. So do you have any response to China? And what was the U.S. message by conducting the transits just after the Secretary's phone call with his Chinese counterpart?
Well, look, the transit was long scheduled. And as we've made clear on multiple occasions, the United States is going to sail, fly, and operate wherever international law allows, and we're going to do that safely and responsibly. Thank you. Yes, sir.
Thank you, General. According to some reports, U.S. forces have deployed a sophisticated air defense system in Syria and Kurdistan region of Iraq. And the defense system intercepted tons of Iranian missiles and drones in the last attack. What do you have on this?
Just let me make sure I understand. You're asking if we've deployed
defense system
capability
in
extra
both
capabilities.
Syria and Iraq.
So what I would tell you is I don't have any specifics to provide. Broadly speaking, throughout the Middle East region, we have deployed air defense capabilities and as part of our efforts to ensure force protection, as well as to defend our interests and our allies and partners throughout the region. As I'm sure you can appreciate, I'm not going to get into any specifics for operation security reasons in terms of particular locations, other than to say that that is a capability that we maintain in the Middle East.
One more question, if you don't mind. Did the Iraqis, in their meeting with Secretary Austin last Monday, discuss withdrawing U.S. forces in Iraq?
They were able to have a discussion about the transition from the coalition, the international coalition mission to defeat ISIS, to the enduring bilateral security relationship between the United States, Iraq, and other coalition partners. So I don't have anything to announce today in that regard, but that was part of the discussion. Thank you. Yes, sir.
Thank you. Can you tell us whether Israel has actually decided to respond to Iran?
Big question.
At the end of the day, that's really a question for Israel.
He knows.
Answer, right? So, you know, you've seen publicly that they've said they're going to do something. I don't know what that could be or what it could look like.
Yes, you do.
Certainly, we are maintaining close communication with our Israeli partners. You know, and as I mentioned earlier this week, we do not want to see escalation in the Middle East region.
Yeah, you do.
But we won't hesitate to defend Israel or our forces if they're threatened.
What kind of conversations are you having with Israeli officials about this? And do you have a sense that they're listening?
And you
to
wonder
your
why
advice?
they scream.
Well, you've
death
seen the
to
readouts
America.
that we put out from
Oh, you'll
Secretary
help them,
Austin
but
as
you
it
won't
relates
help
to
us?
his discussions with Minister Gallant. Importantly, I would highlight that he's also spoken
We're
to many
warning
other
us.
leaders throughout the Middle East to get their sense of the situation. And, you know, if you, again, take a step back,
One
ever
who is
since
about peace
October
works
7th,
with
we've
both
been
sides
working
and
very
protects
diligently
both
to
sides.
prevent a wider
One who
regional
is about
conflict, and that
peace,
continues to
not
be a
about
priority
peace.
for this department and for the U.S. government. We don't seek conflict with Iran. We're going to continue to work with partners to de-escalate the situation, but at the same time, just to be clear, if Israel is attacked, we will defend Israel, and we will defend our forces if they're threatened. So leave it there. All right. Thanks very much, everybody. Appreciate it.
Look to see what happens when we get into this gap fill right here. You know what I'm saying? Kind of like your boy. Filling gaps. Got some gaps to fill. Fill the gap. Fill the gap. Damn, we're going right to the 100th day. I don't care. I'm just trying to fill the gap. All right, get ready. See if you get this a sign that we're really going to get some type of buyers in here. I do not believe we are. You could. You'll get risk on. There'll be algorithms sitting down here at this gap and the 100th day right here at this dotted line. You touch it, guarantee, and see if you don't rip and it start to trigger. Start to throw off some buy triggers. Let's see if we can't fill that gap. Fill it. Oh, you're just gonna bounce now? Bro, this thing, I don't know why this thing does that. I just click. There you go. That's all I wanted you to do. That's it. Alright, so I wouldn't be surprised if it bounces back now and comes back down there tomorrow. That's probably what it's going to do. They keep talking about if at all. If at all they're going to cut rates. Bro, they're going to cut rates or you're going to have the credits. You're going to have all the credit issuers start to go out and degrade the United States credit and all this other shit. Like, I don't even know why we're still talking about it. Maybe we'll be lucky to have some problems. But if they keep holding it, we will. Okay, so the SPY is starting to bounce now. Is that... Yeah, the SPY never got into the gap. I think the Dow did all... I think the Dow did. Let's see here. Come on. I wouldn't be surprised if the Dow looks like it could start to sell off. Again, like, don't get it twisted. I think you're seeing something right now. You're seeing worry with this Middle East conflict, and I feel like it's more they're more worried about this Middle East conflict than when Russia invaded Ukraine. All right. At the same time you invaded Ukraine, you had economic numbers that were coming out like just way below, way above, so the market didn't know what to price in. I don't like you didn't have this like sense of just flush it out, like just get rid of it, and I don't even want to buy it. I don't even want to buy it back. You're getting that. You may. Let's see. Dude, I don't know why this isn't saving any of the freaking things that I do. This is crazy. I'm sorry for the inconvenience, guys. Look. Save. Keep price time zoomed in. Bang. Right there. Keep it right there. I don't want you to fucking move it at all. Just leave it. Yo, are we really... Alright, so we're past that area. We're at that gap fill.
This run up in the stock, and we have this pressure on Netflix to hit this, not even a whisper number, a number that's been spoken out loud by analysts, and if it misses that, it could be quiet part out loud on this stock because the stock's done so well, so now there's even more to live up to.
This market is so slow today, man. I guess DJT is going higher today, or was. You get a nice bounce off the 200-day. You're going in the 100-day right now. You got a little more room. Maybe you could get a test of the 50-day. That's possible. Let's see. Let's go look at NVIDIA and stuff. Semiconductors are really... Okay, so there we go. We're starting to get a bounce here. I'm going to go pour a cup of coffee real quick. It should be done. And I'll be right back. Okay, so...
Subscriber money, but the ad money really is going to matter for them. That's why
Tonight we have Netflix earnings, by the way. I forgot. That's probably why the market isn't moving much. I forgot about that. And this lied because it said here TSM is tonight when in fact it's not. Netflix is tonight. So... Ocean First.
ended up selling it. It was such a disappointment. Jason Snipe, oh how far this stock and company seem to have come. By the way, viewing trends have been going straight up since November. We had an analyst on the network earlier today who said Netflix now accounts for 8%, an 8% share of total TV consumption. 100%, Scott. And I think Joe just made a great point too on just the financials. You know, their free cash flow has grown quite substantially. They have about $7 billion free cash flow.
Strike to claim it. A strike to claim it. And he got it!
Another 5. Are you kidding me? That's right.
Who do you think you are? I am. Oh,
We are releasing the new version of Meta AI, our assistant that you can ask any question across our apps and glasses. And our goal is to build the world's leading AI and make it available to everyone.
Why do they talk like that?
Now, today we are upgrading Meta AI with Llama 3, our new state-of-the-art AI model that we're open sourcing. And I'm going to go deeper on Llama 3 in just a minute, but the bottom line is that we believe that Meta AI is now the most intelligent AI assistant that you can freely use. To make Meta AI even smarter, we've also integrated real-time knowledge from Google and Bing right into the answers. We're also making Meta AI much easier to use across our apps. We built it into the search box that's right at the top of WhatsApp, Instagram, Facebook, and Messenger. So anytime you have a question, you can just ask it right there. And we built a new website, meta.ai, for using it from the web. We're also releasing a bunch of unique creation features. Meta AI now creates animations, and it now creates high-quality images so fast that it actually generates and updates the images for you in real time as you're typing. It's pretty wild, and you can go check it out now on WhatsApp or the website. We are investing massively to build a leading AI, and open sourcing our models responsibly is an important part of our approach. The tech industry has shown over and over that open source leads to better, safer, and more secure products, faster innovation, and a healthier market. And beyond improving meta products, these models have the potential to help unlock progress in fields like science, healthcare, and more. So today, we're open coming soon.
That was a funny comment. The streets recognize Zuck as one of their own.
Linear television.
Oh my God.
So far.
That's funny.
And now look, what are you going to do with the money? You're going to take it and you're going to buy sports rights and again press that advantage. So we're seeing these little things. Okay, Tyson against Jake Paul, but we're going to go bigger, no doubt about it. Maybe we're going to look at NBA. We have MLB on Apple Television and the MLS on Apple Television. So Netflix will have to make a big move here, and I think they're just trying to figure out, just like you would in a fight, right? Figure out where they throw that punch.
Yeah, Joe, I saw you nodding. I think in agreement with where Alex was taking those comments as to sports in the future for Netflix.
I think it's going to be a critical component of what Netflix is going to be offering to its instilled customer base. The customer base wants it. The balance sheet is in the right position to do it. And that's where the real growth opportunity comes domestically. I wouldn't bet against them succeeding there.
Let's talk about the market broadly. I mean, we can zero in on tech. Not that, we don't consider, Jason, Netflix to be one of the Mag 7 stocks. Its market cap doesn't measure up to some of these other names, but nonetheless, it is the first growthy stock of interest to report, and the space seems to be teetering of late. So the importance of this report leading into a week next week that's going to be especially critical.
100%, Scott. I mean, next week is going to be very important, but guess what? I mean, if we look back to the Q1, tech was the 7th best performer out of 11 sectors. So the price action has been difficult, and we've obviously, you talked about at the top of the show, the NAS is down 3% this week. It's down 6 out of the last 7 weeks. So next week is going to be very important. We're going to hear about AI. We're going to hear about use cases. We're going to hear about application. That's going to be very important. We're going to have to hear about continued momentum in the cloud business, from various stories. So I think, as the shift and discussion that we've been had as of late on inflation and interest rates, tech reporting next week has an opportunity to shift the narrative, and that's going to be very important.
Alex, dare I say you have your eye on Apple more than any of the other mega cap names here. The stock, by the way, earlier today hit a low for this year. It was 166 and change. It's teetering right around 167. Looked like it had a nice bounce back last week, and here we are once again talking about what's going on.
Yeah, the pressure is on. We've already gotten a few negative reports about where Apple's going to sell in terms of the iPhone this year. They've also fallen behind Samsung in certain areas. And, of course, China remains a very big concern. So we're talking about a stock that's been down 4 out of the last 5 quarters. Do you really want, in terms of revenue growth, do you really want to make that 5 out of 6? I don't think so. And we have the economy right now where we see the companies that have really leaned forward on AI, the Microsofts, even the Alphabets, Meta, they're rising. Companies that haven't fully gotten that story together, Apple, Tesla, they're sinking. So this is an opportunity for Apple to really shift the story and get itself some momentum heading into WWDC in June, where we're expecting some big announcements.
Joe, how do you view this stock here?
Momentum would be nice for Apple because it certainly doesn't have it. If we explore back over the last 6 months, we know what the market has done. What has Apple done? Apple is actually close to its 6-month low, which is 165.67. So I think embedded in the price action over the last week is the concern surrounding China and the fact that maybe China is not going to deliver the rebound that many have expected for this stock. I think it's surprising because 1 week ago we sat here and we were excited about the fundamental news surrounding AI inclusion in a Mac refresh. We thought maybe that could portend something in June for the iPhone 16 itself, and clearly that's been washed away. It's a concern, but let's keep in mind what's going on also with Apple is a lot of algorithmic selling, and the lower that it goes, more algorithmic selling is going to enter. At some point, it exhausts itself.
Hey, how about this nice move in Meta today, up 1.75%? This new AI model that they're talking about, image generation, want to keep up with ChatGPT. Significant is it? The market obviously likes it. Alphabet's up and Meta's up on this news.
Yeah, it's big. I was on the phone with them yesterday. So this new model has 10 times more data and 100 times more compute. It just goes to show you that the incumbents have this advantage in terms of resources, right? And why is the market excited about Meta today? It's not necessarily that it built this model that could be on par with GPT-4 from OpenAI or Claude from Anthropic. It's the fact that it was able to take that model and build it directly into the products, right? It's live today in the My AI bot that they have within Messenger and WhatsApp. And they're able to do that on day one. And so there's been all this talk, who's better, GPT-4 or Claude or whatever Gemini model that you want to have. The key to growth here, the key to making money here is how you productize these models. And Meta's shown that it can not only build the model, it can put it into products, and I think that's why the market is excited.
So we're looking at Meta. We could throw up Alphabet too, shares of Google, because I feel like, Jason, the market wrote this stock and this company off way too early. You look at the 12-month performance between Alphabet and Microsoft, most people probably would think that Microsoft has the better position over the last 12 months. No. Google's up 50%. Yeah. Microsoft's up 40%.
Yeah, no, the price action has been very impressive with Google, and obviously, I mean, the arms race for AI continues. It's nice to see that some of the partnership deals that Google has obviously put in place. They've done a deal with Apple. Now they're looking to do a deal with Meta. So I think this is exciting for their business, obviously the YouTube business, the search business. And then obviously the other big part for me is they've been improving their operational margin significantly. And then you're starting to see Google Cloud has recently become profitable. That's obviously not a story that we talk a lot about, but I think there's upside there as well.
All right, Joe, you get the last word.
Well, the S&P is in retreat right now, and it's going back to that February NVIDIA gap. 49.83 is the bottom of that NVIDIA gap. You got down to 5,001 today. I'm going to put on the hat of someone who is short the market right now. What else are you waiting for to do a little covering? You're going to wait till it gets exactly to 49.84. Profit margin expansions here. Adam Parker talks about that all the time. Earnings have been strong. The prevailing bull trend is still in place for the market. I don't know. I think we're getting pretty close to a point where the market might find a bottom.
Oh, okay. That's a good last word. Joe, thank you. Alex, thanks to you as well. Jason Snipar, thanks. We'll see what happens with Netflix in overtime. In the meantime, let's send it over to Christina Partsenevelos now for a look at the stock she's watching into the close. Christina.
I'm back. Digital marketing firm Ibotta surging over 30% on its debut on the New York Stock Exchange. In a year of IPO rebounds, the Walmart-backed company opens now with a valuation of $3.55 billion. CEO Brian Leach telling CNBC this morning the firm hopes to further invest in what? AI-enabled technology. Go figure. You can see shares up now 19% right now. Now to a Morgan Stanley pair trade on e-commerce. eBay shares jumping after Morgan Stanley double upgraded the stock to overweight from underweight, noting that the firm's well-positioned to further its generative AI positioning. You can see eBay's up over 1.5%. And then you've got Etsy shares moving the opposite direction on a downgrade to underweight as Morgan Stanley remains worried about the firm's growth trajectory.
We will see you soon. Christina, thank you. We're just getting started here. Up next, BlackRock's Rick Reeder is back. We get his take on where yields are going from here. Plus, we'll get his rate cut forecast and what all of it means to your money. He has an interesting take on the equity market as well, and we're going to get it next. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
And my uncle, they called him Ambrose Brosey, they called him Bosey. My uncle Bosey was a hell of an athlete, they tell me, when he was a kid. And he became an Army Air Corps before the Air Force came along. He flew those single-engine planes as reconnaissance over war zones. And he got shot down in New Guinea. And they never found the body because there were a lot of cannibals for real in that part of
Welcome
New
back.
Guinea.
S&P 500 trying to snap a four-day losing streak today as investors grapple with first-quarter earnings, rising bond yields, and pushed-out rate cut expectations. Joining me now is Rick Reeder. He is BlackRock's CIO of Global Fixed Income and head of the Global Allocation Team. It's good to see you. Welcome back, Rick.
Thanks, Scott. Thanks for having me on.
Yeah, I'd like to start by just getting your view with rates having backed up and now these rate cut expectations having been pushed out.
I leave it out for a reason.
Yeah, so firstly, it's a pretty, when you think about what 2024 has been, we came into this year, I think the markets were a bit overzealous, to say the least, about the Fed. You know, the discussion was, can they go in March, or are they going to go in March? I heard people say definitively they're going in March. You know, you had 6 or 7 rate cuts priced in. Now we're down to less than 2 cuts priced in. I think the markets tend to overshoot like they did at the beginning of the year. I think you could still overshoot a bit until you get inflation data that is, gives you some sense for we're going to see core PCE, which is a Fed's metric, closer to a more stable 2.5% rate. So you could still overshoot a bit. I think managing your interest rate exposure makes some sense, but I think you're getting close to the level pricing in. You know, I still think the Fed would like to get 1 or 2 cuts done this year, but we need the data to help us. So I think in the interim, You got to let the market do what it's going to do. You got to be a bit conservative with your rate exposure. We could still back up a little bit more, but I think you're finding levels, particularly in the front to the belly of the yield curve, that are making some sense.
Do you think there's real risk that they don't cut at all this year? Fed speaker after Fed speaker certainly sounds like patience is the word of the game. John Williams of the New York Fed again today, quote, "I definitely don't feel urgency to cut interest rates." Do you think there's a chance they don't cut at all this year?
I absolutely think there's a chance they don't. I mean, listen, the inflation data has been surprisingly durable, and particularly, it's not goods inflation. Goods inflation is running 3-month, 6-month moving average, negative 1.3%. Goods inflation, which by the way is the one that's influenced by interest rate much more profoundly. Service inflation is still well too high. By the way, it's very hard for the Fed to bring that down. You think about insurance, you think about healthcare, you think about educational costs. So will the Fed sit there for a bit longer, let it come down? I think that's definitely a possibility. Our gut, more than our gut, our analytics and our data would suggest that you're going to start to get numbers, 0.2 type of month-on-month inflation readings that'll give the Fed the window to do it. Hey, listen, I'll say something pretty provocative around this, that I'm not sure it's clear to me today in a new modern economy that's a service-oriented economy that the interest rate tool does really do much today. I mean, we've moved 500 basis points on the upside. You still have an unemployment rate that's under 4. And quite frankly, there are parts of the economy that operate really well that have higher level of income because of where rates are. I think the Fed should get the rate down about 100 basis points. I think they'd like to get it there. But listen, can they wait before they do it, given the data? Yeah, they can certainly be patient. And I think that's what you'll hear next week.
Are you making the argument that, whereas we once thought we, quote unquote, needed rate cuts, that we don't necessarily need them in the way that the economy is responding now?
Prime example.
So I think the Fed should cut rates. And the reason why I think they should cut rates is because what happens is much of the U.S. economy today is not interest rate sensitive. You think about who spends on our...
That the U.S.'s credit wasn't just downgraded last year. Like, come on, bro.
Cash flow. You have many people have already locked in their rates. Companies have already termed out their debt. It's not that interest rate sensitive. What is interest rate sensitive? Low income, small banks, small business, real estate. And so what's happening is you create a pernicious impact on parts of the economy, and it's not really influencing the other. And then arguably, for higher income, for a lot of the economy, when you keep rate this high, you're providing a lot of income. Deposits at our extraordinarily high levels. What's happening is you're getting a lot of income flow through the system that recycles into parts of the service economy. So listen, I think if you got the rate down to still what is a restrictive level, then you have what is a more normalized economy or more normalized discount rate for this economy. Listen, I don't think they're going to do it, though, until you start to get those 0.2s. But I think unequivocally they should get there.
The longer they wait, do you fear that it increases the risk that they make a mistake and stay too high for too long, and by the time they react to something that gets broken, it's too late?
So it's a tough question. I'll say it in 2 parts. One, I think the U.S. economy is the most resilient, adaptive, innovative economy in the world. I think U.S. economy is much more durable. You think about, I don't know, it was on your show a year ago, people were saying, hard landing or soft landing, what kind of landing? The U.S. economy, we have a service economy that's this adaptive, by the way, has an energy dynamic that's very different than 20, 30 years ago in terms of energy independence. Very, very reflexive, adaptive economy that I'm not that worried about the broad economy. The mistake that I think is the reason why I think you could move the rate down, the mistake is the areas that are sensitive, the banks, particularly small regional banks, that clearly have an issue in terms of net interest margin, commercial real estate exposure, small business, and lower income. You're seeing this in all the earnings numbers, and you see this in credit card charge-offs, loan delinquencies, auto loan delinquencies. It's creating a pernicious effect on part of the economy that in aggregate, the economy can still move along okay, but it's creating too much pressure on part of it. And that's the mistake that I think is out there, including you got to be careful about residential real estate, which is obviously a huge part of the wealth in this country. So part of why I think at the margin, bring that rate down. You can keep it higher than it historically has been, but I think today it's for a lot of the economy, or for interest-sensitive parts of the economy, the rate is too tight.
You called the recent inflation prints a quote-unquote setback. It sounds to me like your view was a bit shaken by those most recent reports, that you were surprised, and I'm wondering if in the same light you're surprised to the degree that rates have backed up now.
So I would say two parts of that. One, we're running our interest rate exposure. We have been running our interest rate exposure lighter because, quite frankly, you can generate income and fixed income in so many different ways. You don't have to take long end interest rate exposure. I was looking at the aggregate index. Today, the aggregate index is down. After today, it'll be down 3.5%. The long end of the curve will be down about 8%. The front end, because of the carry in the front end, is still actually, the front end is actually moderately positive on the year, total return basis, because you're carrying so well. So anyway, our view has always been, certainly this year, keep your yield, keep your income in the front end, just carry really well. You can actually still throw off return in that. That being said, your question about, listen, when you got this last CPI report and you looked at the areas, the pervasiveness of the service level inflation, insurance, healthcare, education, transportation services, that is just so sticky high, and hard to bring down auto insurance using the interest rate tool, and those are sticky, and they're just hard to bring down. And so, listen, I think anybody who's looking at it would say, yes, that's a setback, because we want to get, and the Fed would like to get rate down, but it's these numbers, can you be a bit more patient? It seems like it.
Yeah, I mean, some are suggesting that the 10-year could go to 5% by Memorial Day. That's been a couple of calls from firms this week. When you read that, what's your reaction?
Given the depth of some of these markets, it feels like that could happen. You don't need to wait that long. Listen, it's going to have a lot to do. We're in a market today, and I think when we think about positioning, and you think about we're in a market today, you got geopolitical risk, and think about that can happen two different ways. It can shock oil, which is adverse to interest rates. And the other side of it, you got to have a big flight to quality, depending on how pervasive or how the risk is perceived around the Mideast. Listen, I think the markets tend to overshoot. And could the bias be towards you hit a higher rate from where it's not that far from where we are today? Mm-hmm. It's certainly a possibility. Like I say, I think the way you generate, the way you sit in fixed income today, stay shorter on the yield curve, and you keep your interest rate exposure and low, but keep your income high. By the way, I want to say one last thing about it. I'm always amazed, the equity market, like there's always a level on the 10-year note that determines a good market or not a good market. When you look at the S&P 500, it's not nearly as interest rate sensitive as it used to be. The interest rate is obviously the great discounting rate for the markets, but it's a very different. You look at the S&P 500 versus 20, 30 years ago, where those companies borrowed, hard asset borrowed to finance. The interest rate was a really big deal. Today, we look at the top 7, the Mag 7, or any of these companies, they're not doing a lot of financing. So I'd argue it's much less acute for the equity market than it's been historically. Although people follow it very closely, it's just not nearly as interest rate sensitive, the equity market, as it used to be.
I hear you then suggesting that your bullish view on the equity market, which you've shared with me on the last couple of times that we've visited here on television, is not shaken at all by this backup in rates. Do I hear that right?
You definitely hear that right. Listen, I think, we, like others, you've got to manage, when you've got this big, unpredictable dynamic out there, i.e. geopolitical, I think you've got to manage your risk alongside of it, including going into this. Volatility was incredibly low. Where the VIX was, we trade a lot of equity options. Volatility is really low. You could manage your risk using volatility really effectively, and so that allows you to de-risk. So we are running less risk, considerably less risk, largely because of volatility and because of some positioning around that. Listen, the equity market's going higher. We said, do we wait a little bit in terms of getting through this cloud over the market? The S&P 500, I use this stat a lot. The return on equity, the average return on equity of the S&P 500 is 18.5%. And actually, if you're tilted more to tech, it's closer to 20. Even if you believe the multiple is a turn or two too high, when you accrete, you compound book value of that sort of level. And even if the economy moderates a bit and you bring it down a little bit, that is incredibly powerful. At the same time, there's over $1 trillion of equity buyback, and the IPO calendar is small. So your demand, your buy versus sell, is clearly skewed. And then just normal salary and wealth creation drifts into the equity market. And you've got $8 to $9 trillion of cash sitting out there. So yes, I think I'm pretty confident equities are going higher. This is not to say we see, we don't see a headline or what have you that presses us down a bit first, and I think you got to manage your risk around that. Mm-hmm. But yes, I'm confident the equity market is going higher.
Do you want to continue to lean into mega cap tech big stocks? Do you believe in the broadening? I know you like energy. You want to lean into sort of that comeback, if you will. So how does that play out? Your actual allocation, right? I mean, you are head of the global allocation team. So tell me where to lean in now.
Yeah.
So first of all, I still think technology is going to take us to a different level, and I think the amount of investment in R&D, the amount of investment in digital is extraordinary. Where do you lean in? I still think, you know, without going through individual names,
Rick's a hell of a reader. I
still think that the Mag 7, there are parts of it that are incredibly return generative and will continue to throw off those type of returns as the world becomes more digital. I think the companies that have data and can exploit the data, and there are other companies around that are not in the Mag 7, are the ones that are going to win. My biggest overweight today is what we call the quality part of the market. There is, you mentioned energy. The companies that are throwing off stable, consistent free cash flow, generally aligned with digital, are the places where we like to be. Energy is, you know, while we could debate what the price of oil is going to be, when you throw off 10% free cash flow, and including some of the refiners, there is those levels are pretty attractive. So we're tilted to tech, healthcare, parts of healthcare, but there are also some great free cash flow generators. Some of the and you know, there's some opportunities in this market, like, you know, pressed down some of the valuations in some really good companies in the last couple of weeks. I think some of the European autos are interesting. It's interesting to say today, watching some of the casinos come under pressure. I think there's a couple of names there that we're looking at that are pretty attractive today. And one thing that's wild about the equity market today, the dispersion is incredible, and so it's presenting some pretty neat opportunity across it.
Always enjoy our conversations, Rick. Really valuable insight
Scott.
From you. Thanks for spending time with us. I appreciate it. We'll see you soon.
Thanks, Scott.
All right, that's BlackRock's Rick Reeder there joining us today. Coming up, the haves and the have-nots of earnings season. Alger's Anka Crawford is back to break down the big names that she is betting on this quarter. She's with me at Post 9 next.
All right, Netflix needs to get down to $5.50 to make any money to the upside or downside. $50 way. Okay, that's 50 way. 5, you know, that you count on one hand. 0 if you do not have a hand. Okay, Netflix. Oh, the way, Mexican. That's from Mexico. $50. $50. It's pricing in a $50 move. So in order for you to make any amount of money, if you're going to try and play options on Netflix way, you're going to need at least $50 move plus whatever you paid for the option. So let's do an experiment. 1 right now, 610. We're shooting back up to the upside. All right, we're shooting back to the upside.
All right, welcome back. NASDAQ.
Turn this poop off. It's 337. So we're at 610. So you need to get to 560 or 660 in order to make any money, excluding whatever the premium is. So it's pricing in $50. So let's go look at the 550s. You're at 610. You could say 560. I'm sorry, 560. 560. They want $600. They even want $100 just for you to try and double what they're pricing in. So you need a black swan event type deal. All right. Let's go look at the upside. We're at 610 still. 660. They're charging you $800, and these expire tomorrow. These expire tomorrow. I would most certainly, if you guys want to make some real money, I would sell both ways. $60, $70 out the money. I would. Because it's going one or the other. Right? It's either one or the other. And one of them's going to pay the other one off. So I would honestly sit there and sell both ways, guys. Because you can't finish at 660 and 560 at the same time tomorrow. I think that's the play. I got to be honest. So if there's anybody out there that really, really, really wants to make some money, go ahead and sell the if you so choose to. Sell the 660s or 670s, and or sell the 560, 570 puts. If you want to get even safer, back it up by buying a contract, out of the money on top of it, or below it to the downside. Like if I was to play this, and you're getting, let's say, so you're getting, they're pricing in $49, $50. So 610. So I got to be at 5, or I got to be at 660 is what they're pricing in. 660. All right, so that's $840. 700. So a 795 spread with the 830 ask. What I would do is I would go to like the 670s, 665s. Maybe you don't want to cut it that close. I'd go to the 670s. I'd sell those. And then I would buy you got to buy close because it expires tomorrow. And you'll kill the theta. So, maybe you're like, you know what? I don't think it's going to go to either or. So you go ahead, and what I would do is, that's really messing you up. So you're going to collect both ways around. I would, honestly, guys, I would do the, I would just sell both ways out of the money, and I would just cover it with an option. Like, I would buy the option, like I would sell the 670s, and then I would buy, like, the 695s or something. Right? 695, 700s. And then that would be your difference. So, worst case, what you could do, instead of doing the 600s and buying that, you could buy this, so that would be a 300. Let's see, 690. Sell the 690s, and then shit. I would just sell them both ways. I'm gonna just be honest with you. I would sell them both ways. I would, unless you think there's a black swan event. I'm just saying. That's what I would do. The problem is that, the stock can keep going up forever. Okay? It can only go down to 0, but it can go up wherever it wants. It's not saying that it's going to, but that's just the reality of the situation, is that you can only go to 0 on the way down, but on the way up you can just stairway to heaven and go to wherever you want. The numbers don't end. Ask Biden.
As resilient as when the Fed has normalized a 2-decade-long hiatus on ridiculous rates, and our economy is still resilient, and the consumer is still showing this resilience. I think it's quite bullish for our economy, because now we have a lever. When we do need it, the Fed can react. I personally thought that if they did cut, the market would go down anytime this spring. So I'm actually quite pleased that they're not going to cut.
All right, we'll make that the last word. Enjoy our conversation as always. Ankur Crawford, thanks so much. All right, up next, we're tracking the biggest movers into the close. Christina Partsinevelos is back with that. Christina.
Well, the largest chip manufacturer in the world that you just talked about says AI demand is growing, but warns about all those other non-AI business segments that may not be doing as well, and that's impacting the entire sector. I'll explain next.
50% off.
We're 15 from the bell. Christina Partsinevelos watching the key stocks for us today. Christina.
I want to bring back Taiwan Semi because those shares are down roughly 5%, even though Q1 earnings were a beat. Investors are instead focused on lower growth outlook, the capital expenditure remaining unchanged, weaker Q2 projected profits due to you have the earthquake, as well as inefficiencies when it comes to the 3 nanometers, and then also the slower than expected recovery in smartphones and a drop in auto sales when originally TSMC thought it would be up on the year. So that change is weighing on the sector. AI definitely not the saving grace today. And that cautious tone from TSMC weighing on the chip sector as a whole, including memory maker Micron, even though it's going to get $6.1 billion in CHIPS Act funding to continue building a hub in Idaho and New York fabs in New York, or I should say twice New York, which the company said will eventually require more than $100 billion in investments over the next little while. That leaves, at this point, out of all the CHIPS Act funding, just over $10 billion left to be dispersed for firms in the United States. Scott.
All right, Christina, thanks so much. Christina Partsinevelos still ahead. Shares of Tesla slipping yet again in today's session. That is a new 52-week low, and it follows a bearish call from one key Wall Street firm. Why analysts are seeing some risk in that name now. We'll talk about it. Closing bell. I'll be right back.
deck.
All right, coming up next, Netflix is the big name to watch in overtime tonight. We have your full setup, a breakdown of what is at stake for the streaming giant when we take you inside the market zone. We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day, plus Phil LeBeau on why Tesla hitting its lowest level in some 15 months. Steve Kovac looking ahead to Netflix results. They are out, as you know, in overtime as we continue to take you right up to that. All right, Mike. So we're pressing it here on the S&P. We're getting close to where, 5,001 I think we got down to today.
Yeah, each day has been a little bit of just this low energy decline off the highs. 5,000 is sort of sitting there. I've been focused on, 20 points or so below that, which is that gap from the NVIDIA earnings day on February 21st. I think there's also a certain type of logic, people talking about checking back to the previous all-time highs from early 2022, which was 4,800 and change. I don't think you have to get there, but the market's starting to get short-term oversold. You're starting to see people, do a little more hedging. Some things are lining up here to where you'd say take a shot and you get some relief to the upside, some kind of relief rally. Maybe not a fat pitch.
No relief rally.
In just a second, I want to talk to you more about what Rick Reeder told me. But first, we do
You've
have some
been
news
oversold since last week, bro.
Just
because you're oversold doesn't mean the market's going to go up.
Again.
I appreciate every single one of y'all.
Yeah,
I'm about
Scott,
to be out of here.
shares
Y'all
are
have a
surging
great
right
night.
now
I'm
on
going to see
reports
y'all
from the Wall Street
possibly
Journal that
tomorrow.
Nordstrom and
Maybe.
the that owns Nordstrom is considering taking that company private. This is according to the Wall Street Journal, citing
but I do need to
sources
record
familiar
my
with the
trading,
deal.
so
Members
I
of
may
that
be here
family,
tomorrow,
Eric
and
Nordstrom
hopefully we
Pete
get a
Nordstrom,
nice
this is the
big
company's
fat
CEO
fucking winner because I
and
need
president,
it.
respectively, told
I
the
need
board,
it. I'm addicted to
according
winning.
this
I don't know
report, that they
about
are
you.
interested in exploring that deal for the company. It comes as Nordstrom and rival Macy's
Winners
are
win.
under some pressure, as we've talked about on air here. Nordstrom did,
Winners
according to this report,
win.
form a special committee of independent directors to evaluate the potential proposal. It says here that they are working with bankers from Morgan Stanley and Centerview Partners. No guarantees that this is going to result in a transaction. Of course, shares of Nordstrom down about 50% over the past 5 years. Company's got a valuation at this point of about $3 billion, but shares popping on that report. Scott, back over to you.
All right, Kate Rooney, I appreciate that. We'll watch that. Phil LeBeau, we're certainly watching Tesla because it's a new low today, a new 52-week low, and the lowest, what, in 15 months?
Lowest in 15 months, and another day where an analyst says, what's the case here? What are you buying into? Are you buying into full autonomy? Because that's what the indication is from Tesla. That's why the stock sliding down to the 150 range here. Yes, it's a 52-week low, and as we mentioned, probably the lowest in, I think, 15 months. Deutsche out with a note today where they cut the price target. They also moved it down to a hold, essentially saying, okay, there's considerable risk pursuing autonomy because nobody's quite sure, A, when it's going to happen, and B, if it's going to happen within a time frame that you can say, yeah, I buy into that payoff. And as a result, investors are saying, let me see what you've got, Elon, and we'll find out next week after the company reports its Q1 results. That's really the first time that we'll hear from Elon Musk in more detail about where this company is headed.
Yeah, it's going to be a big day for sure, Phil. We know you'll be all over that, obviously. Phil LeBeau. Now to Steve Kovac on Netflix as the countdown continues because we're not that far away from this key earnings report.
Yeah, just about 2 minutes away. Look, what we're going to be watching for here, Scott, is momentum from the password sharing crackdown. That helped them smash those expectations last quarter in subscribers. This quarter, Street's looking for 4.59 million new subscribers. That would be more than double a year ago quarter. Also looking for revenue to be up 13%. And some other stuff we're looking for, just some stuff on their advertising business, any commentary there, how revenue is going, and gaming, whether or not that is keeping people stuck to their Netflix subscription stock. Scott.
Appreciate it. We'll see you in just a little bit. Steve Kovac, thank you. Back to Mike Santoli. As we are under 2 minutes now, so Rick Reeder saying, quote, equities are going higher. Yeah. He said the market is not what it used to be. It can handle these higher rates. The Fed's going to